because of the dispute about how Trump's tariffs are going to affect the UK economy. Looking to the guidance, this is interesting. We were wondering whether they were going to drop the language about the rate path ahead being gradual and careful, but indeed they've stuck to it. Bailey saying that they need to keep that approach. If they had dropped gradual, maybe it would have been a signal that there could be a June cut on the table, and that would have been the first back-to-back cut since COVID, and before that the financial crisis. That is not a signal that the governor is trying to send today. They're also looking at inflation at 1.9% in the second quarter of 2027, 1.9% in the second quarter of 2028. So they've updated these forecasts, 1% growth in 2025, 1.25% in 2026. But they've said that the growth risks are to the downside. For CPI, the risks are two-sided. So this is kind of echoing the ECB there in the sense of how the tariff war is going to affect the UK economy.
You know, Lizzie, it's just amazing to see the dissenting members and just how split they were. The two ones who wanted to see a bigger rate cut, saying that they saw a risk of sustained fall below the inflation target, and the ones who wanted to just keep things on hold, including Catherine Mann, saw inflation persistence in resilient jobs market and inflation expectations ticking up. I'm just curious how surprising it is to you to see this type of breakdown with diametrically opposed takes on just what the ramifications of these tariffs would be.
Well, look, Catherine Mann is always one to surprise us. She is an activist, remember, on the Monetary Policy Committee, but remember, she surprised us by voting for a jumbo cut back at the February meeting and then for a hold in March. So maybe less of a surprise that she's going for it at this meeting. But yeah, a real surprise to economists that you would get a three-way split here. We knew that Swati Dhingra was the archdove on the committee. Repeatedly, she has emphasised the risks to growth. But we'd heard from Megan Green on Bloomberg TV talking about how the tariff impact would be disinflationary. It was surprising to hear that from a hawk. So we already knew that there was this disagreement on the MPC.
Lizzie Burden with the latest from London. Lizzie, thank you. The latest from London. Governor Bailey is trying to convey confidence and stability, the need to stick to a gradual and careful approach. The vote mix is just chaotic. 5 voting for a quarter-point cut, 2 for a half, 2 for no change.
On one level,
clear as mud.
You have to give a sense to Fed Chair Jay Powell that he reflects that with wait and see, wait and see, wait and see, wait, because ultimately it gives you the sense of just how chaotic and split things are when you have a real-time measure of just how differently some pretty serious economists really think of things.
Let's turn to the Federal Reserve. Gagi Chaudhry of BlackRock writing the following: we do not expect the Fed to cut rates in June. July will hinge entirely on how the current disparity between the hard and soft data starts to resolve. Gagi joins us now for more. Gagi, good morning.
Hi, good morning.
Stuart Kaiser of Citi was in your seat about an hour ago, and he said this soft data can change really quickly. How quickly can it change if the president comes out this morning, 3 hours away, and says, deal with the UK, and others will follow?
Right, so the price action this morning on the deal with the UK, obviously exciting to see. Markets are treating this as a good piece of news, but I don't necessarily know how much that will change in terms of dynamics around consumer confidence or CEO confidence. This is a country with which we've already had a trade surplus, so to the extent that this is just a signal in terms of the art of the deal, but I don't know how much this will drive inflation or growth expectations. So really, Jonathan, to your question then, as we think about the hard data, soft data dichotomy, what it'll really be about is to what extent the labor market remains as strong as it has been. And I think that's a point that Chair Powell was trying to not make yesterday. And I think he did a pretty good job of waiting and seeing 22 times. And I think that that is what we're looking for when we talk about the hard data and soft data coming together. Does the labor market begin to show some signs of faltering, or do we stay right here and the inflation data actually ticks up, but the market believes it to be just temporary?
We've got to define what a deal is and what an agreement is. We're hearing from a UK official that the UK-US deal will set out general terms of an agreement. Will it lack substance? Will it lack detail?
My guess is probably, considering the fact that the detail is where the devil lives. So are we going to answer the questions that you put out there? Are we going to have certain sector-specific tariffs lifted? Are we going to have any address of steel? Or is this going to be some sort of discussion of, we love each other, it's going to be great? Make America and England great again.
Maybe that's enough for the equity market, I don't know. But to your point about the hard data, let's say the hard data starts to break the wrong way. Let's say claims continue to inch higher. Maybe they gap higher, I don't know. But let's just run with that for a moment. Will this market put weight on that, or will it put weight on trade talks and the prospect of that data getting better again?
So I think it'll depend on the trade talk. So for example, today, I think what I'll be looking for is exactly what you were saying, Lisa. To what extent is it just headlines, and that's great, but to what extent is it actually details? We also heard this week that UK and India reached a trade deal, which again is good news, but it took 3 years. So some of these trade deals you don't get some of the details. And again, coming back to your question, Jonathan, I think that if the hard data starts to soften meaningfully, I think where it softens is really important. So if it's labor market and we're actually seeing a meaningful slowdown, I think that will impact the equity market. And actually, we saw a hint of that earlier last week when we saw that backward-looking first quarter GDP. When that number came out, again, it was expected to be weak, and of course, it was distorted by import data. But when it came out to be weak, the equity market did respond to that. So the first hard data weakening that we saw a whiff of, the markets did respond to that. And of course, then we had a slew of other good things that it also responded to. We're telling investors, based on all of these things, we're telling our clients, definitely stay invested in the markets, because obviously we've seen what a rebound can look like, but play a little bit more defensive here with minimum volatility strategies.
Yeah, you pointed out that you have an index that tracks soft and hard data, and what it indicates is it's going just as bonkers and volatile as the rest of us, as we try to understand exactly what the details of anything really are. What does it mean to be diversified in this type of environment where it's unclear about the relationship between bonds and stocks?
Exactly. So I do want to point out that in April, and I think Kelsey, who was here earlier, was talking about this, bonds have done well after that initial wobble in the very long end in the early April. The ag, as well as the global ag, did give you some diversification, not the very long end perhaps, but if you were in the very front end or the belly of the curve, you did do well last month. And I think that's important. But what clients have more and more been asking of us is, given the volatility in the long end that you did not expect to see, given the volatility in the dollar that also you didn't expect to see last month, what are the other sources of diversification? And we think that focusing on the front end and the belly of the fixed income markets is really important, but add other things. And here, this is where we think inflation-linked bonds, gold, liquid alternative strategies like global equity market neutral strategies, which again, don't take a lot of beta risk. We think having those as a part of your portfolio is really important.
How much does it sort of undermine this huge shift to broad indexes tracking the major indices, given the fact that a lot of this has to do with something very different?
Look, we've always been telling investors that even though the last 10 years, for example, if you just owned 7 stocks, you did pretty well. We've always told investors to have a diversified portfolio. I don't think the discussion is about whether you hold it in an index product or whether you hold it actively managed. Obviously, this is a time where active management and being nimble around rotating your factors can matter a lot. So I don't think it's about that, but I think it's about recognizing the risks in your portfolio and recognizing maybe just having only 7 large cap stocks versus having a little bit of international exposure, having some diversification in terms of front-end fixed income, or even having a little bit of gold can make a difference.
Gaki Chowdhury at BlackRock is going to be sticking with us. More headlines for you, this time from Russia and China. Putin and Xi signing a statement on further cooperation. The positioning here going into the weekend talks is really quite interesting. The US is about to hold a news conference in the Oval Office in 3 hours' time to talk about an agreement with the UK. Look at us, a trade agreement. The Chinese are playing nice with the Russians, saying, look at us, just signed a statement on further cooperation just ahead of talks in Switzerland between the two nations.
So this is what Xi Jinping has done. China has signed a pact with Vladimir Putin about having some sort of global stability and further cooperation. They have cut rates and actually tried to fortify their economy. And they have said that they will only negotiate if you drop tariffs down. President Trump has said we will not drop tariffs down ahead of negotiations. We have a trade deal with the UK that we're going to announce. And suddenly, the idea of big tech is on the table as a negotiating tool. These are the ways that they are trying to line things up heading into this weekend.
It's interesting framing, isn't it? Closing out the trading week, another day of it. Equity futures at session highs on the S&P 500. We're higher here by 1 full percentage point. With an update on stories elsewhere this morning, with your Bloomberg brief, is Yahara. Hey, Yahara.
Hi, John. Pakistan says it reserves the right to retaliate after India launched targeted strikes. Meanwhile, India said it conducted a precise and restrained response that was designed to be non-escalatory in nature. Pakistan's army said 31 civilians were killed in the strikes and called the move an act of war. Meanwhile, more than 70 people were arrested after masked protesters occupied Columbia University's library yesterday. Law enforcement officials say protesters took over part of the building and draped Palestinian flags on the walls. Secretary of State Marco Rubio said on X protesters' visa status are under review and pro-Hamas thugs aren't welcome in our great nation. And Danish shipping giant Maersk cut its forecast for the global transport market due to macroeconomic and geopolitical uncertainty. Maersk, which controls about 14% of the world's container fleet, sees two scenarios for the rest of the year: a growing risk of demand contraction, or of course the possibility that trade rebounds if tariffs are rolled back. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate the update. More from Yahara later this hour. Up next on the program, getting to the negotiating table.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
A very simple no. We'll get into that no in just a moment with Anne-Marie down in Washington, D.C. Live from New York City this morning. Good morning.
The Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Equity futures doing nicely here on the S&P 500, higher by 1 percentage point after snapping a two-day losing streak in yesterday's session in Shanghai and adding some weight to the rally this morning on the Nasdaq 100, higher by 1.3%. Under surveillance this morning, getting to the negotiating table.
China said the U.S. initiated the trade talks this week and that its position hasn't changed. Are you still confident you can reach a deal with China?
They said we initiated? Well, I think they ought to go back and study their files.
China says in order to have substantive negotiations, you have to bring down your 145% tariffs. Are you open to pulling back your tariffs in order to get China to the negotiating table?
No.
So here's the latest this morning. Beijing reiterating its call for the US to cancel unilateral tariffs ahead of this weekend's trade talks. The president showing very little interest in doing just that. Anne-Marie joins us now from Washington for more. AMH, let's get into this one. How things are framed going into these negotiations this weekend.
Well, Jonathan, I think you framed it very well yesterday. There are talks about talks. This is really just the first contact point to discuss trade between the world's two biggest economies when you have these tariff rates that the president, the Treasury Secretary, China has called unsustainable. 145% on China, 125% on the United States. So clearly what you're seeing in sort of reading the tea leaves is that potentially one deliverable leading these meetings, if the talks go well, is that there would be a drop when it comes to tariff rates. The president was asked about this yesterday. This is something that China said they wanted to see drop before they even decided to sit down at the table. And he said no. But I would go back to what the Treasury Secretary said over the past few days when he was talking to Fox News about the fact that him and the president know what they want to get out of this relationship and the parameters and the red lines. The issue is they want to keep this uncertainty, this game theory of strategic uncertainty. So potentially we could see the rates drop, but the president's not going to say that out in the open before he sends his USTR ambassador and his Treasury Secretary to sit down with Beijing.
Which raises a question, Anne-Marie, about what we can expect at 10 a.m. Eastern time when we get the announcement between the UK and the US. How much certainty is going to be embedded in that if uncertainty is sort of necessary for this administration heading into talks this weekend?
Well, I think this is an entirely different relationship. This is a special relationship. You've seen the Prime Minister, Keir Starmer, also really work the phones. He came here for a visit, gave this unprecedented invitation for a second state visit from King Charles to President Trump. There has been a lot of discussions. We shouldn't even just say the past few months. Years. Since 2016, the United Kingdom has wanted to get some sort of deal with the United States over the finish line. So I would look at these two different economies very differently when it comes to potentially the trade outlines we are going to see. China is going to be very difficult and is going to take a very long time. The United Kingdom, this framework they come out with today, then they're going to work out the details the next few months, but this framework, this blueprint will likely stick. And the two main issues you need to look out for at 10 a.m. is the 25% rate on aluminum, steel, and cars of UK imports coming to the United States. The Prime Minister out of the UK, Keir Starmer, wants to see that cut. That is critical to the UK industry. And for the United States, they want to see the ability for U.S. auto manufacturers to have easier access in the United Kingdom. And of course, the digital services tax, something this administration wants to see the United Kingdom and frankly other countries lower.
Trade deals are hard, they're complex, they take time, and sometimes they're reduced to one good, one product, one thing. And the issue with the US and UK often comes down to chlorinated chickens. Anne-Marie, it sounds ridiculous, but these are the things that are hard to come to agreement on. Do you think agricultural food products are going to be part of this template, this framework for a deal?
Well, I'm not sure if they're going to be part of the template and the blueprint for this deal, but potentially they will talk about this is something they are going to investigate and maybe try to get a little bit more of a fair footing. We should note there have been reports for the past few weeks that this was a red line for the United Kingdom. They do not want UK chlorinated chicken, beef that has hormones in it coming from the United States into the UK. It will make it very challenging for the United Kingdom to then get an agreement with the European Union, which blocks these products outright. But this is something that is really important to the president. If you look at the figures from the agricultural department, you have seen, mostly because of China, there has really been a steep drop in U.S. exports of soybeans, of pork. You had Rep. Bacon over the weekend from Nebraska talking about the fact that the Midwest is on the cusp of potential recession, and they're hoping to get some relief from this administration. Remember, Trump 1.0, there was a bailout for the farmers, and potentially we could see that this time around as well.
Anne-Marie, appreciate the update. AMH down in Washington, D.C. More from Anne-Marie on that story in about an hour from now. It often comes down to silly things, Lisa. And sometimes it is things just like chicken. You just can't come to an agreement on something like that.
This might all come down to how the US and UK treat their chickens differently, because ultimately the chlorinated wash is to remove bacteria. It is supposedly safe, but the UK and other places say it masks unsafe and unsanitary practices, like having chickens too close together, which might be the reason why the US and the UK might remain far apart.
This has come up a million times. as we've attempted to have these trade agreements in the past. We'll see what happens here. Gagi Chaudhry of BlackRock still with us. We're not going to talk about chickens, don't worry. Are there certain nations, certain geographies that you think could become a haven for trade and a better relationship with the US that might present an opportunity to invest in at the moment?
Yeah, so we talk about this in our spring outlook that we just published towards the end of April. And the one area that we talk about is actually, number one, just recognizing that most advisors don't have much international allocation. And especially in a world where perhaps the dollar remains a little bit more range-bound, having that allocation is exceedingly important. And then focusing on some regions that we think might even benefit in the medium term from some of these trade reroutings and the geopolitical fragmentation. And we think Latin America certainly is one of those regions that, especially when we think about Mexico as being one of the regions that haven't had as much of a tariff increase as given some of the negotiations that have already taken place, Mexico and Brazil could, we think, potentially benefit. So Latin America, again, one region that we think in the medium term could benefit. And broadly, I think international is an area of the market where most advisors, we look at portfolios, have not had an allocation to, or they've had a massive underweight to, and where they've had an overweight is to small caps. So what we're telling investors is perhaps rethink your small cap overweight and rediversify into the international markets, focusing on regions that you might not have had access to in the past.
Does that include China?
I think for now, as we're still going through negotiations, we're going to learn a lot about China. I certainly think you cannot have an international portfolio without China. We're telling investors, go into EM. We're telling investors, EM with a minimum volatility tilt, which does have China within there. So again, have that in your portfolio, but do that in a minimum volatility fashion.
What is that? Can you describe that? What is a minimum volatility strategy?
So absolutely. Thank you for asking that question. So both in the US as well as in EM, what we're suggesting is minimum volatility. And what does that mean? What that means is you have the participation in the market. So you're still invested. If the market goes up, you are experiencing those up days. But on the down days, you are just getting a little bit of protection. So your downside is better protected because your beta to the rise in the equity markets is lower than 1. So being a little bit more defensive and winning perhaps by losing less. And what we find is often in these periods of volatility, like we've seen over the last 2 months, a lot of investors flock to cash. And then, of course, you have the issue where you lose out on these immense turnaround days. So by having a more smoothened path with some of these strategies, we think makes a lot of sense.
Have you got an ETF for that?
We do have an ETF.
Of course you do. I knew you had an ETF for that.
It's called USMP.
There we go. Gagi Chaudhry of BlackRock. That was the pitch. Gagi, good to see you. As always, thank you. Up next on the programme, Nuria Rabini of NYU Stern saying no pain, no gain for the US economy. That conversation up next.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case very quickly becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
The S&P 500 near session highs, up by 1 full percentage point. On the Nasdaq, we had some more weight to the rally, up by 1.3%. The why from the President of the United States later this morning, 10 a.m. Eastern Time, an agreement with the UK, a full and comprehensive one that will cement the relationship between the US and the UK for many years to come. Many other deals which are in serious stages of negotiation to follow. That is your top story this morning. With some morning movers, let's get a few of them. 2 hours away from the opening bell. It's Danny Berger for more. Hey, Danny.
Hey, John. We had some earnings to get through this morning, starting with Warner Bros. Discovery, down about 1 1/3%. They missed on their revenue. Just under $9 billion where the figure came in. The expectation was it would be above $9.6 billion. Now, for its part, Warner Brothers blamed the difficult comps that around the first quarter of last year, you had movies like Dune 2 and Kong versus Godzilla, which I haven't seen, but I'm sure it's lovely, but saying that those tough comparables meant that things looked a little bit worse this time around. We also heard from Coors, Molson Coors, another disappointing outlook. They cut their guidance to the single-digit growth for both sales and earnings. Those shares falling some 6%, blaming, like we've heard from so many other companies, a weaker macro environment, weaker consumer demand, also announcing that their CEO would be stepping down at the end of the year. Wrapping things up with a bright spot in the earnings we've gotten before the bell this morning, Carlyle shares are higher by 1.5%, surprising to the upside with their earnings. Confidence, perhaps, that finally Carlyle is returning to growth for this private capital giant, but in a sign of the times, things other than private equity have been picking up in terms of profit share, so things like their credit arm, as well as their capital markets, as the deal-making environment remains very challenging, John.
Hey, Danny, thank you. Appreciate the update. More from Danny in about an hour from now. On our radar this morning, President Trump preparing to make his first trade announcement this morning. The president posting on Truth Social, the agreement with the United Kingdom is a full and comprehensive one. More details expected at a White House press conference at 10 a.m. Eastern Time.
And it will be interesting to see what the contours of this deal are, particularly, as you've been saying, John, how it deals with cars and steel and some of the other levies that have been imposed on top of that 10% bench line across the board tariff. A key question here, does this all come down to cars? You keep talking about this, and I was looking at the movies because a lot of movies are made in the UK, so it's sort of another sort of sectorial tariff. But I'm just curious, is it really just about cars and the fact that the USs are not being sold in Europe?
I think Jaguar Land Rover would like it to be all about cars later on this morning. They've got huge exposure to this story. I wonder how bespoke this deal actually is. Whether it is unique to the UK, whether it's a template for other countries. We talked repeatedly already this morning about the special nature of the relationship with the UK. Not just the history, but also the trade balance is balanced, unlike many other nations. And agriculture's in the mix too. I've got to promote our interview a little bit later this morning. In about 60 minutes' time, we're sitting down with the 33rd US Secretary of Agriculture, Anne-Marie, catching up with Secretary Brooke Rowlands. And this has got to be a feature. She's heading to the UK on Monday.
Yeah, and right now, as some of the trade is halted, as people try to figure out what the contours, what the rules of the game really are, there is the concern of some sort of recession in the Midwestern states that are heavily tied to agriculture. Does this all come down to chicken and eggs, which we can discuss at length about how different they look in the UK versus in the United States?
Chicken, eggs and chips, different kind of chips. The White House planning to reverse some Biden-era AI chip curbs to appease major tech companies. It's been a long week. And some foreign governments. Trump won't enforce the so-called AI diffusion rule when it takes effect on May 15th.
I find this fascinating. There is a question about whether this is softening some of the restrictions ahead of the Chinese negotiations, or whether it's just simply taking another tool, another lever in the negotiation that is to come, maybe in the talks about what kind of restrictions there are with chips. This, though, is not necessarily about chips being sold to China. This is about chips being sold to other allies that could potentially make their way to China. So it really is more about maybe the Middle East trip next week than it is about the Chinese talks.
Precisely. The president is going where? The president's going to the Middle East. And the Middle East is hoping this is directed at them.
And then they can buy more chips, and this has really restricted their ability to necessarily expand into the AI stream. I also wonder how much this is underpinning some of the rally that we're seeing this morning in the market, because we saw NVIDIA rally 3% yesterday, and they've been arguing for some sort of ratcheting back of this diffusion.
Without a doubt, into the close yesterday.
Yeah.
Forget Chairman Powell.
Exactly.
It's this story right here. NVIDIA up again by 1.6% in the pre-market. So that's trade. Let's talk about taxes and the deficit, debt, the kind of thing that Lisa likes to talk about. The Treasury Secretary, Scott Bessent, in the hot seat on Capitol Hill.
What about the long-term debt? Will it go up or down if this big, beautiful bill passes?
Again, sir, it's while the absolute...
I think the reason you're having a hard time answering...
I'm not having a hard time answering, because what is important...
I've given you plenty of time.
...isn't the absolute level of debt. It is, as Secretary Yellen said, the debt to GDP.
Everyone is talking about the $37 billion. Is it going to go up or down?
Sir?
Yes. Is it going to go up or down?
It will likely go up, but if the GDP goes up faster, we don't care.
Secretary Bessent articulating the argument, I think, quite well there. I'm not sure what the lawmaker didn't understand. It's not about the overall level of the debt. It's about the debt relative to GDP.
Oh, come on. You know what he was trying to do.
Not exactly what the official in Washington was trying to achieve, but ultimately it's just ridiculous and doesn't serve the public well at all.
There is this question of just how they message this going forward when they have to focus on the growth aspect of things. I'm trying to be diplomatic here. I agree with you. In talking about the taxes side of things and the deregulation side of things to offset some of the increases in the deficit.
If you take on 10K of debt and I give you a $100,000 pay increase, you know, it's debt relative to income, what matters more? The fact you took on 10K of debt?
Totally. I actually would have been much more interested if that lawmaker had said, how are you going to finance this? Is it going to be in 30-year notes? Is it going to be in 10-year notes? Or is it going to be in 2-year notes? Because that actually will make a big difference. And you got into the negotiation of just how the auctions could go. There is a 30-year auction today. I would have been very interested in that discussion.
Keep dreaming, Bremo. Thanks. Let's turn to the economic policy. Fed Chair Jay Powell emphasizing the central bank is in wait-and-see mode. Pending trade negotiations. Nouriel Roubini of NYU Stern is saying no pain, no gain. American democracy will survive the shock. And after an initial period of pain, the U.S. economy will thrive. Nouriel joins us now for more. Nouriel, good to see you. You're often painted as doom and gloom, the big bear, but I've spent many a time with you, and we've had conversations where you're constructive, and it feels like this is that moment. What are the factors that lead to that constructive view for you?
Well, I've recently said that tech trumps tariffs, and what I mean is that U.S. is really number one in many of the technologies of the future. AI, machine learning, robotic, automation, semi, fusion, quantum, defense tech, green tech, ag tech, fintech, you name it. And I expect that actually U.S. potential growth because of that could increase from the current 2% towards 4% by the end of the decade. So that's a 200 basis points increase in potential growth. Even tariffs, and there'll be some de-escalation, restriction, migration, best estimates that they could reduce potential growth by 50 basis points. You have 200 on the plus, 50 on the minus. So there's a ratio between 4 to 1. So I think that that's why that over the medium term, the fact that the U.S. is very innovative implies that whatever Trump does doesn't matter. So tech trumps tariff, tech trumps Trump too. And the traders, of course, Trump, and they forced him to back down through market discipline. The most powerful people in the world are the bond vigilantes. So I think he's boxed in. There'll be de-escalation. We'll still have an inflation rate. You know, I expect that the trade deal will imply that for most of the world, you have tariffs between 10 to 15%, on China 60. But even with 10 and 60, that is what actually Trump was announcing in the campaign trail, you get inflation, core PCE, towards 4% by the end of the year. That's aid to disposable income. You have weakening of consumer and business sentiment. You get a short and shallow recession by Q4. It's going to be short and shallow because then the Fed is going to cut rates since inflation expectations are the anchor. But we'll have a short and shallow recession by year-end. That's probably highly likely.
Can I jump on that point? What gives you the confidence the Fed can respond to that? Because there are some people who are worried about the inflation that might pick up and the fact that might constrain the Fed's dovish bias.
No, you're right. That's why people are already saying they should have cut in May or in June or July. I don't think it's going to happen before September because, as Powell said yesterday, inflation will be higher, unemployment is going to be higher. Last time around, they made a mistake. They thought that the increase in inflation was temporary and was not, and then they had to catch up on it and so on. So this time around, you can make the arguments that since inflation expectations are anchored, since the Fed is not wimping out and being forced by the White House to cut rates right now, when inflation rises, it's going to be a level effect rather than a rate of inflation. If inflation expectation remains anchored, if you don't have second round effects, then once unemployment rate goes higher, that weakens the labor market, then the Fed's going to feel comfortable to cut rates. But right now they have to stay on hold exactly because they need to cut once then the economy weakens significantly.
People have been talking about stagflationary-like scenarios. That growth is slowing, and as you acknowledge, that would probably happen to some degree in the near term, and that inflation was going to remain higher as some of the trade arrangements get readjusted. Why is that not a significant concern for you at a time where even the Fed seems to not have clarity on whether that's going to be the predominant theme?
It's stagflationary. Growth is going to be lower. In a recession, inflation is going to be higher. I think the difference between now and, say, the 1970s, when you had the oil shock of 73 or 79, was the inflation was already high and rising, and the Fed was behind the curve, and then you had the anchoring of inflation expectation. This time around, I think they've shown some credibility in anchoring inflation expectation. You're right, however, that you never know. Second round effects may occur. You have not only the impact of the tariff, now the dollar is weakening, that's another impact on import prices. That's why the Fed has to wait until the hard data show that there is the beginning of a recession. If they start cutting rate earlier, then you have the anchoring of inflation expectation, and that's going to be a problem.
How much are the Fed's hands tied? Because the long end of the yield curve is not necessarily anchored to Fed policy in the same way, especially given some of the deficit concerns. And I know that that Congress member wanted to talk about what was going to happen with the total pool of debt, not the debt to GDP, but I'm actually curious about how they issue that debt and just what that does to some of the yield premium going forward.
Well, the long end depends on the Fed in terms of inflation expectation and depends, as you point out, risk premia or term premia on fiscal policy. I think the administration is sensitive to the idea that if you have a very large deficit, eventually bond yields can go higher, they can further crowd out the economic recovery. And we'll see the results of this fiscal plan. Some of the stuff they're doing are going to increase the deficit. Some of it, like tariffs or reduction in IRA subsidies, Medicaid, DOGE cuts, will reduce the deficit. I think they'll be quite sensitive not to have a headline number for deficit next year. It's higher this year because then bond yield could go much higher, and that's going to hurt further the economy. But because you're going to have a fiscal drag, I think, most likely next year, then the Fed has room for easing a little bit more. Now, they want to start also manipulating the long end of the bond yield curve. You know, I wrote this paper with Steve Miran criticizing what Yellen was doing by reducing the supply of long debt and issuing more of the short one. But this time around, it's not just the ratio between the two. They're talking about buybacks, literally buying more of the long term to get it out of the market to issue more of the short term. That is doubling down on this ATI policy, just doing more of it, actually, rather less of it.
Nouria, there's only one person I know with more air miles than you, and it's our friend Mohammed El-Arian. You travel the world a ton. Have attitudes towards US assets changed? Have the conversations shifted in the past few months?
They've shifted, but I would say there's going to be a difference between fixed income investors. Many of them can be sovereign, either central banks or sovereign wealth funds. These folks are worried about the deficit, are worried about us having damaged the credibility of the United States. That's why you had higher bond yields and a weakening dollar. So that trend may be continuing because they're going to have to get out. And the rivals of the US, like China, they have to get out of dollar assets. Probably going to go into the gold and things of that sort. But my view is that since there will be an investment boom driven by this increasing productivity, CapEx in the US is going to be much higher. The current account deficit is going to become larger even with the tariffs, just because investment is going to be higher as a share of GDP, savings are going to remain low because private and public savings will be low. So our current account deficit is going to be wider, but the inflow of this financing is going to be both FDI and portfolio investment into equity market. So you have actually more even overweight in U.S. equity assets over time because of the increase in secular.
Can we just sit on that? This is really important. Yeah. So we've been debating now for a number of months about whether this was a cycle level shock or a system level shock. Yeah. The policy announcement of the last month. And we wondered whether that structural long into the US dollar, which is a system level story, would be disrupted. Are you saying that will stay the same, that you'll just see this flood of money keep coming in to the United States, into US assets?
As I said, in fixed income, maybe people are going to try to get out, especially if the deficits are larger, unless bond yields are much higher. But I see an investment boom in the United States, an increasing productivity, secular boom, and therefore being overweight in U.S. equity is going to become the story over the next few years, and that's going to compensate any exit out of fixed income assets. So the dollar is going to weaken, but it's going to weaken gradually, and the reserve currency role of the dollar is going to be dented but not damaged to any significant extent. So we can live in a world in which actually the U.S. current account deficit is going to be much larger, but driven more by booming investment rather than weak public savings. The dollar remains strong, and we're going to live with that because there'll be strong economic growth.
You mentioned some of the diversifying that you could see away from the dollar to things like gold. Any other thoughts on where that money might go beyond just gold?
Well, you know, if you're a rival of the U.S., say China, if you dump your treasury, first you have a mark-to-market loss on the value of those things. If you sell treasury and buy RMB, you appreciate the RMB, something you don't want to do. If you sell dollar instead of buying RMB, you buy yen and euro, you appreciate the yen and euro, and you upset the Japanese, the Europeans. You want to have good relations. So what do you do? The best thing you can do is to sell treasuries and buy gold, and that's why gold has been going higher. Because gold is the only reserve asset that cannot be seized. Because we've seen in the Russia-Ukraine that even yen, euro, Swiss franc, pounds can be seized. So I would see gold being the biggest winner. Now, over time, of course, the Chinese want to have a new rail of payment systems that is bypassing the US dollar and SWIFT. And there are now technology that gradually, over time, are going to allow them to do so. But I think it's going to be a very gradual process. So the dollar is going to remain meaningful global reserve currency.
Nouriel, super thoughtful as always. It's good to see you, sir. Thanks for dropping by. Nouriel Roubini there of NYU Stern. If you are just joining us, equities at the moment up by 0.9% with an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahara. Hey, Yahara.
Hi, John. Boeing is promising to deliver a new version of Air Force One by 2027. The project has been delayed due to workforce limitations, supplier problems, and design issues. President Trump has demanded a new plane before the end of his second term and expressed frustration with the delays, even considering alternative options. Meanwhile, Apple is considering revamping the Safari web browser to focus on AI-powered search engines, potentially ending its longtime partnership with Google. Apple has already had discussions with Perplexity AI and is looking at other AI providers, including OpenAI, DeepSeek, and Grok from Elon Musk's xAI. And Nintendo forecasts weaker than expected initial sales of its Switch 2 due to uncertainty around U.S. tariffs. The announcement comes despite market expectations that it would be the fastest-selling console in history. Nintendo lifted prices on some accessories and warned price hikes on other products might be coming as well. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, the Fed's pain threshold.
What the Fed has to do is probability and scenario analysis. That's all we can do. Our recession scenario is 60% probability.
Up next, the former Kansas City Fed President, Esther George.
the President of the United States does say he wants to keep a more mutually beneficial trade balance with these countries. What does a country like Egypt and Kenya and some of these others have to provide that won't completely dent their own GDP?
No, it's tough. I mean, there is the commodity side. There is the. I think it's less about bringing it to the table and more trying to take advantage of the hit elsewhere. So China exports 30% of all the textile exports to America come from China. In 2023, it's something like $40 billion. And whatever the tariff rate ends up being on China is going to be a lot higher than it is on Africa. So there might be scope for African countries to say, well, let's move those textile factories.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Equity futures near session highs were up by 0.9%, just fading a touch on the Nasdaq 100, positive by 1.2 percentage points. That's the equity market story. Under surveillance this morning, the Fed's pain threshold.
What the Fed has to do is probability and scenario analysis. That's all we can do. Our recession scenario is 60% probability. It gets down to how much pain are you willing to endure before you feel you need to cut? What is the pain threshold and the trade-off for the Fed? And how late are they willing to be?
Here's the latest this morning. The Fed Chair Jay Powell emphasizing a wait-and-see approach as a growing chorus on Wall Street lifts recession odds, citing tariff-related stagflation concerns. Joining us now to discuss is the former Kansas City Fed President, Esther George. Esther, welcome back to the program. It is the central banker's dilemma, the prospect of higher inflation, higher unemployment, and decelerating economic growth. It's a challenge. What did you make of the chairman's ability to rise to that challenge in yesterday's news conference?
Well, I thought based on what I heard in the market reaction, he stuck to the story that he's been telling, which is we're holding these rates until we can get more clarity about the policy mix. And I also heard in his comments something interesting. He certainly highlighted tariffs. That's been the topic of the day. But he also mentioned we have to think about the impact of immigration policy changes, fiscal policy changes, and this emerging prospect of how regulation might change around this. So that is a pretty big dynamic to try to play out when you're judging the appropriate stance of monetary policy.
Esther, do you have a better sense of what the reaction function is when it comes to looking at different indicators, whether it's soft data or hard data, and understanding how the Fed would prioritize certain readings, how they would respond to, say, an increase in unemployment, if also it came in tandem with increasing inflation?
Yeah, so I think, Lisa, the soft data is really important right now, and you do see the Fed looking at that. You see that come through in the Reserve Bank's Beige Book data. You know they are out there really just combing the landscape to hear from different parts of the economy what they expect. And I think what they're hearing right now is we're not sure. We are pausing, we're waiting. The Fed knows that even pausing has a negative impact on the economy. But I think for the U.S., we've come into this at a time of strength in that economy and judging how much will come off of growth, how much will hit the employment numbers, and certainly watching inflation expectations at a time like this are a dynamic that just takes time, I think, to figure out.
Yesterday on Bloomberg TV, Bob Michael of JP Morgan Asset Management noted that the word transitory was used as recently as the March 19th meeting, the last time the Federal Reserve met. Do you think that it was a mistake for them to say that? It was notably absent from yesterday in reference to any kind of inflationary impact from the tariffs that have been put on.
Well, I think it probably was intentional to drop that word. It has taken on some very negative connotations, maybe rightly so. But the truth is, we know that these kinds of shocks can be a one-time price level shock. I think what we can't know right now is the fact that we already have elevated inflation relative to the Fed's target. We know that certain measures of inflation expectations are moving in ways that flash caution. And so I think you can't know how this dynamic unfolds with inflation without a little more sense of when these policies get better able to be quantified and put into the models that the Fed's looking at to know. Not if. I think this is a Fed that is clear. We are on a cutting path. We've taken a pause. It's really a question of when.
How do you know, Esther, the difference between the two? Because clearly the committee struggled with what was transitory and what wasn't coming out of the pandemic. So how would they know the difference this time around? The difference between inflation being short-lived and more persistent? Do you just have to wait a long, long time? How do you know the difference?
Well, you absolutely cannot know the difference. And that is really the crux of uncertainty for a policymaker, is to read into this whether you will continue a disinflationary path, that underlying sense of inflation where we were, and really watching inflation expectations. So for me, I think keeping an eye on those inflation expectations will tell the committee a lot about what they're dealing with relative to a one-time versus a more permanent impact to inflation.
And Esther, just to double down on that, do you put more weight on survey-based expectations or market-based expectations?
Well, I think you have to look at both. And normally you might say that some of these household survey measures and other things are not so definitive around where inflation is going. I think what's gotten my attention this time is how dramatically they are moving. And so that in and of itself tells you that the volatility you're dealing with has to give you some pause. And I think it's right for the Fed to pay attention here to how these dynamics are unfolding.
And that's certainly what they're doing. Esther, appreciate your take as always. The former Kansas City Fed President, Esther George, on the challenge this Federal Reserve faces.
Yeah, basically saying you can't totally throw out the University of Michigan inflation survey. You can say maybe it's not the correct magnitude, but it's moving pretty quickly, so take notice.
Take notice and wait and see. Up next on the program, Daryl Cronk of Wells Fargo, the U.S. Agriculture Secretary, Brooke Rowlands, Nita Richardson of ADP, and Mike Collins of PGIM. From New York, this is Bloomberg.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Listen carefully. Can you hear the rhythm in the markets? just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
What mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Today, the Federal Open Market Committee decided to leave our policy interest rate unchanged. The risks of higher unemployment and higher inflation appear to have risen.
The Fed is not really sure where tariffs are going to land, and when they land, they're not really sure what the consequences are going to be.
Uncertainty has clearly risen. The pain threshold for the Fed is going to be elevated.
We're getting slowing growth in the second half of the year. The question is, what will they do about it?
We're under known unknowns and unknown unknowns. The probability on both bad outcomes has gone up.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning. The third hour of Bloomberg Surveillance starts right now, 90 minutes away from the opening bell, with equities up nicely for a second session, up by 0.9% on the S&P, on the NASDAQ up by 1.2%, as the President of the United States teases the unveiling of an agreement, a framework for a deal perhaps, between the UK and the US. More deals to follow potentially after 10 a.m. Eastern Time.
And that's the reason why people are all watching this very closely to understand just what's on the table. A key question is how much are the sectoral tariffs, whether it's movies or whether it's cars, as well as chickens, that potentially could set the rules of the road, not just for when it comes to trade, but also when it comes to these negotiations.
Setting the tone going into the weekend. A sit-down in Switzerland between the United States and China. Going into that, equities elevated up by 0.9%. Coming up this hour, we'll catch up with Darryl Cronk of Wells Fargo as trade talks fuel investor optimism. Gil Luria of D.A. Davidson on Trump's move to bring down AI chip curbs. And the U.S. Agriculture Secretary, Brooke Rowlands, ahead of, quote, a major trade announcement. Got some breaking news just moments ago for the EU, potentially, on tariffs. Joining us now for more is Anne-Marie. Hey, Anne-Marie.
Hey, Jonathan, tale of really two trade deals this morning. The president in the United Kingdom looking to ink an agreement for a trade negotiation, while the European Union, Brussels, is looking at potentially how they might fight back when these talks kickstart in earnest. Remember, the talks have been very scant between Brussels and Washington. They are going to start to take place, and the European Union is coming out with a list on what they could go after if the talks go south. Things like industrial goods, like Boeing jets, U.S.-made cars, bourbon, which was originally, we should note, removed from a previous list, now seems to be back on as a potential target. We should note about 95% of the world's bourbon is produced in Kentucky, so maybe going after a state that is firmly in the Trump camp and is red. All of this needs to be watched as these negotiations take place. There's one key item here from this reporting from our colleagues out of Brussels, which is the fact that they do want to make a deal. This is just in case the talks do not work out, and they have to consult all their members, a part of the European Union, by June 10th. So that is a new calendar date that we need to watch when it comes to how these talks will progress between Brussels and Washington.
Anne-Marie, there's a hierarchy of priorities. There is a list. I just wonder, let's go through the line. Apparently at the front of the line is the UK, and we're going to see that play out in 2 hours' time. I've heard lots about Japan. I've heard about India. I've heard about Korea. Where does the EU fit in?
Well, they're closer to the bottom than I would say closer to the top, potentially because those talks are going to be kicking off in earnest this week. They will move up on the priority list. But at the moment, they haven't been the priority for this administration. And we have seen this administration have a ton of grievances when it comes to the European Union writ large, especially when it comes to things like autos, comes to things like agriculture, which I'll be speaking to Brooke Rollins, the agricultural secretary, in about 30 minutes' time. We could talk about all of these issues when it comes to Midwest agricultural producers getting their products to the European Union, to the United Kingdom. So really, when it comes to the European Union, they might be one of the last countries, states, blocs to ink an agreement with the United States because they haven't been a priority. The United Kingdom is a priority. We know Treasury Secretary Scott Bessent's going to Switzerland, not just for those talks with the Chinese. He will also be meeting with the Swiss president. India, Israel, South Korea, Japan, they're all ahead of Brussels.
Anne-Marie, with the latest reporting down in Washington, D.C., and more from Anne-Marie in just a moment, about 25 minutes' time. The EU is not at the top of the list, and that's not good for those countries.
Part of the problem, and we saw this when we were in Washington, D.C. for the IMF meetings, is that Europe says that it's negotiating as a bloc from Brussels. It's clear that that's not exactly the case. So for people putting their faith in the euro as being the reserve currency and Europe being the generator of growth as a result of stimulus, this is the ultimate challenge. They are different countries with competing interests that are not really coming to the table in the same kind of way to understand what the priorities are on the other side.
Spain.
I knew you were going there.
Spain.
Yeah.
Where did the Prime Minister go? China.
Right.
What did they say? They said to us directly, they considered China an ally. They used the word ally to describe the relationship with China.
How do you get an entire trading bloc to get to some sort of agreement about how much they will restrict goods, say, to China or from China, at a time when each country cannot come up with some sort of cohesive set of rules? This is the challenge for a region that otherwise has traditionally been very much an ally of the United States.
The first huge benefit, I would say, for the UK, depending on what this looks like, and of course it's got to go through Parliament and all of that, but the first big benefit of being outside of the EU for the UK, just being able to negotiate directly in the way that they have done, and they've played it pretty well so far, and I don't know what this deal looks like, or the framework for an agreement further down the road, but so far, played it quite well.
The mood music has been very positive, and Keir Starmer has definitely remained off the firing block, or the chopping block, when it comes to some of the discussion points. Again, it goes back to how much of a template is this really?
Equities right now positive by 0.9%. We snapped a two-day decline in yesterday's session. We add to the rally this morning. Darryl Cronk of Wells Fargo is writing this. We do see potential for broader risk opportunities and higher U.S. equity prices by year-end 2025. Darryl joins us now for more. Darryl, good morning.
Good morning, John.
Talk to me about that confidence. What underpins it for you?
Well, I think certainly if we can get some tariff relief, let's admit it's an if, right? But what you're seeing now, so we got a 9-day rally on the S&P off of just a willingness by the administration to start to negotiate and roll back some tariffs. If we can shift that willingness to an actual ability, right, to deliver on some of these agreements, i.e. UK, maybe India, maybe Japan, maybe South Korea, I think that can move the level of confidence higher and, by extension, equity markets higher. I would just note two things, right? One is, obviously and most of our watchers or viewers know that earnings are coming in, far better than expected, right? Revenue is on pace right now for a 5% increase. Earnings are tracking to 12 to 13% increase with a 85% in. And it's also noteworthy when you look at the equity markets. So on Liberation Day, you know where the VIX closed? 21.5. You know where the VIX is today? 22.5, right? We're right back where we were, almost like we've unwound that whole thing. So even though the survey sentiment confidence has taken a dip, and you need to pay attention to that, The reality is positioning has not changed. If you look at the CFTC data and stuff, institutional positioning has not run for the exits on the equity markets or any of that stuff. So I think you can base off of here, again, if you can get some relative good news.
You've been consistent. You think US assets can perform. You've remained committed to that story at a time when a lot of people have said, look over at Europe, take a look at China, look at the rest of the world. Maybe that exceptional story is over. Why have you remained committed to it?
Well, a couple things. One is we do think the growth, the technology, the superior markets are here, right, and have been for some time. Two, I mean, let's just be honest, we've been wrong in the first quarter. If you want to mark it off in the first 3 to 4 months of the year, obviously Europe has outperformed and developed equities as well as EM has outperformed. But we think that's a relatively short window. I went back and looked. If you look at the last 7 times that international has outperformed US, it's done it for a period of about 180 to 250 days, and then consistently it just rolls off, right? So there's kind of this euphoria, right, that comes up, and everybody gets a little excited about either cheap valuations or some news like, you know, Germany's going to spend more on defense and everything. And then we just have the conversation like you guys just had at the table where, you know, it's a non-configured group that can't get their act together. Is Brussels going to negotiate for the whole? Is the UK going to do their own thing? So I still think the balance of power and trade remains here. I'm not moving away from kind of the U.S. exceptionalism argument like many were quick to do. It may moderate a little bit on a relative basis, but I don't think it's dead by any means.
There has been a shift, though, in the conversation that U.S. exceptionalism is expressed in the equity market, not in the bond market, not by this de facto sort of investment in treasuries. And that's what we heard from Nouriel Roubini, that there will be still this steady flow into the U.S. equity market and the idea of tech dominance, not necessarily into the bond market. That's what we're hearing from investment managers who are looking elsewhere, whether it's Stephen Major of HSBC or Bob Michael, where they're looking internationally for duration. Do you think that this is only applicable to the equity market and that the bond market kind of takes on a life of its own?
I do think that's probably true, right? The bond market takes life on it. The way I would maybe describe it is if you think about the confluence of things that matter, the bond market and the dollar matter far more today, as we sit here today, than the equity market and the economy, right? I would clearly say that because at the moment you get disruption in either the bond market, right, rates start to get disorderly, or certainly the currency starts to devalue too much, people pay attention, right? Secretary of Treasury pays attention, the administration pays attention, call it the Trump put, call it whatever you want to call it. The reality is those elements of the bond market and the currency matter more today than what the stock market and the economy does in the short term, right? We need to see stability there. We need to see consistency there. We need to see kind of clarity of where we're going in those markets. So I think they are on a little bit of a different trajectory, Lisa.
Well, I guess that it sort of begs the question, how much is this idea that U.S. risk assets can continue to rally predicated on the idea that there is this Besant put on volatility in the bond market, the idea that he will remain the front man, as we have seen so far?
Yeah, I think they will. I mean, so the reality is this, you know, we were talking offset that if you look at even the Fed meeting yesterday and what's happening, there was a head nod and acknowledgement that the balance of risks are more even today between growth and inflation. But the reality is we have to admit the materiality of risks have gone up pretty substantially since, you know, several months ago. And so if the Fed is wrong on this, or if the bond market does start to have, you know, disorderly behavior or, you know, liquidity type moments, I think you'll get the administration to pay attention, and I think that's what is the attention grabber at the moment in time.
What do you think disorderly is? What did we see in April? What was that?
April was a little bit disorderly. It was probably more disorderly in places like the municipal bond market, right, where spreads really gapped out, but that tends to be more of a retail market, all else equal, than it does an institutional market. The Treasury market, I think you end up with just quick backups in rates, right? So we saw in early April where, you know, the 10-year went from basically, call it sub 4, very quickly back to almost 4.5%, right? It's not necessarily always the rate movement in basis points, it's how fast it moves.
And it was the dollar move that accompanied that that spooked people.
That's right.
Do you think we've addressed all of that? You talked about where we were on April 2nd and what's changed. A lot of things have remained the same, with the exception of maybe, I think you said gold earlier this week, gold being one. and the dollar being the other.
Yeah.
What's going on there with FX specifically, and why hasn't that corrected in quite the same way?
Well, I think it is a little telling that you're not getting any kind of a dollar bounce here, of any materiality. The dollar, if you looked at, to your point, the two things that are probably most oversold and overbought are overbought being gold, oversold or the dollar, in our opinion, right? I would expect the dollar to probably bounce here a little bit, just in a reversion kind of to the mean, but we'll see. I think it is telling when you think about, go back again to Chair Powell's conference yesterday, which matters more, growth or inflation, the markets are clearly telling you growth matters more, right? I mean, look at the 2-year Treasury, at 3.82 this morning versus a Fed funds of 4.33. It's screaming at the Fed to cut rates, right? Look at small caps continue to lag large caps. Look at oil prices, right? Oil prices are symbiotic of growth.
Yeah.
Look at copper prices. Like the markets are telling you growth is more of their concern right now than inflation. Now that could shift. Markets can be, can be fickle on you, but today there's no question that they're pounding the table, and the dollar is in that mix too, right? A weak dollar is telling you that growth is a concern right now.
We're in two different worlds. It just feels like at the moment, not just the soft data versus the hard data, but look at consumer expectations on things like inflation, screaming things are terrible. Things have been bad for a while for consumers, particularly at the low end, low-income consumers. What you're seeing in the bond market, Lisa, is just saying something completely different. It's just saying, you know what, inflation-based expectations in the bond market at least, not really a problem.
We can see that with the break-evens as well, which is the reason why a lot of people have been dismissing some of the survey data, in particular the University of Michigan survey data. That said, we haven't yet seen the real economy response, and we are hearing about companies raising prices. This is the difficulty in a slow-moving economy and fast-moving truths and tweets and other types of social media output that causes our feelings to change from moment to moment.
We've had a few this morning already, haven't we? Including on Chairman Powell. Lisa's decided the president's being nice to the chairman now. Is this playing nice?
Okay.
He said, I mean, he basically said he's a nice guy. Yeah, he's a fool, but...
It's the stuff before that.
Yeah, but other than that, other than that, Mrs. Lincoln.
Certainly the Fed has to, or is independent of politics, but they're not independent of political policy, right? Trade, fiscal, regulatory, like all that stuff matters. So there's a tight connection there that you don't have to be, the Fed's independent of the politics, but it has to adjust to policy.
Darryl, it's good to see you.
You too, John.
Always is. Thank you,
Thanks,
sir. Darryl Cronk there of Wells Fargo. Equities at the moment on the S&P up by 0.9%. The opening bell 1 hour and 15 minutes away. And then after that, 30 minutes later, all eyes on the Oval Office when we get that announcement from the UK and the US. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Yahira. Hey, Yahira.
Hi, John. The EU is planning to hit $108 billion of U.S. exports with additional tariffs if no progress is made in trade talks. The levies would target industrial goods, including Boeing planes and U.S.-made cars and bourbon. European Commission President Ursula von der Leyen saying the EU remains fully committed to finding negotiated outcomes with the U.S. And sticking on trade, President Trump is preparing to make his first trade announcement this morning. The president posting on Truth Social the agreement with the United Kingdom is a full and comprehensive one. More details are expected at a White House press conference at 10 a.m. And a check on Warner Brothers Discovery shares. They are down 1.5% in the pre-market after the media giant reported first quarter earnings. Revenue came in below the average analyst estimate, but in a bright spot, the company said it had 122 million streaming customers in the first quarter, an increase of over 5 million from last year. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira later on this hour. Up next on the program, the Morning Calls Plus, Gil Luria of D.A. Davidson as Apple considers moving to AI search. A conversation up next.
politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
David Weston, join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Equities on the S&P 500 positive by 0.9%. Much of this has nothing to do with the Federal Reserve. An assist from the President of the United States. An assist on a report that maybe they'll lift some chip curbs. That's helping out NVIDIA. Plus, an agreement set to be struck between the UK and the US to be announced in about 1 hour and 40 minutes time, which could set the tone for deal making going forward from here with other countries. On the Nasdaq, we're higher by 1.26%. That's the price action. Let's get you some morning calls. First up, Wedbush downgrading Uber to neutral, seeing limited upside due to a lack of near-term catalysts. The stock is up by 0.5%. Barclays raising its price target on Disney to 120, saying the company's guidance for this year should provide comfort to investors. And finally, Bank of America cutting its price target on ARM to 135, expecting sales growth to slow more than consensus. That stock is down this morning by close to 8%. Elsewhere this morning, Apple considering revamping the Safari web browser on its devices to focus on AI-powered search, potentially ending its long-term partnership with Google. Joining us now, Gil Luria of D.A. Davidson. Gil, welcome to the program, sir. When you heard that statement yesterday, I just want your initial reaction. What did you think?
That it's the beginning of the end for Google search. We've known for a while that something like this could happen. Let's not forget the Department of Justice has brought up specifically the exclusivity of Google search on Safari browsers as a reason for concern and as part of their attempt to break up Google's monopoly. So the fact that now it looks like Apple is going to move forward in eliminating that exclusivity means that Google is going to lose its biggest platform on the iPhones. And at some point, that may happen on other platforms as well. Let's not forget the Department of Justice isn't done. They want Google to spin off Chrome. They want Google to spin off Android. So Google needs to start thinking of its search business differently. And that hit, even though investors were aware of that, it hit them pretty hard yesterday.
Yeah, we saw the second largest non-earnings drop in Alphabet shares yesterday, going back to 2020. Gil, are you saying that there's a lot more to come just simply because this is, as you said, the beginning of the end for their main business model, which is advertising tied to search?
Yes, because in terms of the financial results, we haven't seen anything yet on the search, because this hasn't happened yet. Only after Apple opens up search on Safari, only as people use chat more instead of search, right? People are now saying, I chat GPT this, not I Googled this. As those things happen more, all of a sudden there'll be alternatives to Google search. Right now, if you're a digital advertiser, part of your budget is going to Google search, and you don't really think about it very much. There is a day in the future where there's so much activity on, say, ChatGPT, and ChatGPT is open to ads, where all of a sudden that Google search budget is going to get cut 2 ways. At that point, when that happens, and that's still somewhat down the line, when that happens, there's going to be a significant impact on Google's results. Until then, we won't see it, which is what's been confusing for investors. But when that happens, that's a cliff.
It's also confusing to investors that we're getting a lot of noise around trade deals or potential restrictions to sales overseas. And we're seeing NVIDIA shares pop significantly yesterday and on today again. Google shares today up a bit, and I wonder how much it's tied to this idea that the diffusion law that was put into place, the diffusion restrictions under former President Biden, which reduced sales to other allies, not just China, in order to restrict some of the exports of complicated chips, is being taken away. How do you understand that in the mix of all of this?
Yeah, so by the way, this is separate from tariffs. It may be a little getting a little muddied, but really this is a separate topic. What happened is NVIDIA chips were sold into China, degraded chips front door. The most cutting edge chips were sold into China by NVIDIA resellers. And so China was able to stay competitive in AI in spite of the fact that they're a competitor and an adversary. The Biden administration decided that's not okay and suggested the diffusion rules, which were going to come into effect next week. Those were restrictive on a large series of countries beyond China, including close allies like India, UAE, and Israel. And we now know, or we have reason to believe, those are not going to move forward, which is interesting, but doesn't solve the main problem, which is what is going to be the situation with China. Two separate questions. What chips, if any, will be allowed to be sold into China? And then what chips, if any, are going to be allowed to sold into Chinese companies, ByteDance, Tencent, Alibaba? We don't know the answers to those, but we do know that NVIDIA just took a really big write-down on those degraded chips. So we know there's something that's going to be announced as early as today, maybe over the next few days, about what chips can be sold into China, and that is by far the more important question. Sales into China are an order of magnitude higher than sales really into any other country combined outside the US. So that's really the important question. India buys tens of thousands of GPUs, UAE, Israel, probably in that order of magnitude. There have been millions of NVIDIA GPUs sold into China. So that is the question that we still don't know the answer to, but we will find out soon.
Hey, Gil, appreciate your take. We'll build on it soon with you. Gil Lurie there of D.A. Davidson. I've got a third question, an extra one. How much does China need these chips, and how much has that changed in the last 12 months?
Given the fact that Jensen Huang said that they are very close in terms of competition and technological development to the United States, have they basically gotten what they need and then some?
Things seem to have changed a lot. Coming up in just a moment, we'll get you some breaking jobless claims and we'll get reaction from the team. We'll catch up with Nita Richardson in just a moment and Mike Collins of PGIM. Going into that, equity futures on the S&P 500 positive by 0.9%, a lift in this equity market. Going into that data just moments away.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Economic data in just a moment. The focus is jobless claims after jobless claims pumped higher last week, which is not what you want to see. Will that trend continue? Will that be the start of a trend through the summer? We all hope not. Equity futures on the S&P 500 going into that positive by 0.9%, 1 hour and 30 minutes away from hearing from the President of the United States in the Oval Office, unveiling an agreement on trade between the UK and the United States. The claims number for last week was 241. The estimate this morning is 230. The hope is that continues to decrease, not increase, because that would be a big red flag for a lot of you. The number this morning, 228. It's the right kind of downside surprise. The previous read, 241. Lisa, the estimate, 230. We wanted something in line. This one, just about below that number.
Yeah, and actually you did see continuing claims come in slightly below expectations, came down a bit from the prior week to 1.88 million rounded up. But this really raises the question, are we seeing the deterioration yet? No. Then if we're not, how can anybody respond to it, which goes into the wait and see, wait and see, wait that we heard yesterday about 25 times from Chair Jay Powell.
Yields are higher off the back of it, particularly at the front end. We unlock high yields again. We did that on Friday after a better-than-expected payrolls report. Doing again this Thursday morning off the back of better-than-expected jobless claims, 382.83 on a 2-year. So at the front end of the curve, yields higher by 5 basis points. Had some commentary just going into this number from Andrew Honhorst of Citi. Waiting. What is the price of waiting? The chairman says there's a low cost. This is what Andrew has to say about it. Chairman Powell provided no new guidance at the FOMC meeting, repeating that the right strategy in the face of uncertainty is to wait and see. He described waiting as a low cost, but keeping rates at restrictive levels makes the economy soften, costing jobs that otherwise would have been created. Waiting now implies more aggressive rate cuts later.
To me, I could hear Neil Dutta scream at the screen and throw something when I heard Fed Chair Jay Powell say that the cost of waiting is very low and that they have the luxury of doing so. There is a feeling that there is an underlying strain of weakness that was already in the economy heading into this year, and that you're seeing signs of it, albeit at a slow pace. Look, this is the big debate. And as Daryl Cronk said, all of the potential outcomes are more extreme. And so the cost of waiting and seeing might be really great, but the cost of doing anything might be really great, given the fact that the range of outcomes has become that much more dramatic.
Unit labour costs pretty punchy for the first quarter as well. Preliminary read on that, 5.7%. The survey was looking for 5.1%, so we'll take that. 1 week, better unit labour costs?
I mean, that's essentially the argument right now, is that basically, yes, people are going to get wage increases, but they'll be more productive, and that will end up creating a better society where we can all go out and buy as many toys as we want to.
We'll talk about that productivity in just a moment. Neela Richardson of ADP joins us now for more. Neela, welcome to the programme. Resilience is something we've talked about with you a tremendous amount of times. I think you saw it on Friday in the payrolls report. Do you see some of that resilience again in the economic data, in the labour market data specifically?
There is. Hi, good morning. Yes, there is some resilience and quite a bit of resilience in the U.S. labor market. And you see that with this latest data on jobless claims going back down closer to that historical low. And so this is an economy that still pumps out jobs. We saw that last Friday in the jobs report. While the Fed is on hold, the economy certainly isn't, and businesses around the country continue to operate, produce jobs, consumers continue to spend, but the question is what's going to happen in the future. And so this feeds into this wait and see attitude that's, hurtful for markets perhaps, but part of what Main Street is doing to keep going.
Everybody wants the forward look, the crystal ball. There are subtle signs now and again, here, there, and everywhere. Neela, I go to the payrolls report on Friday, and you mentioned this. Typically, if companies were pulling back, they'd reduce the work week. Neela, did we see that on Friday?
No, we didn't see it. Hours are holding steady. They're holding strong, and we're not seeing in the ADP payroll data either. We pay 1 in 6 workers in the United States. We have a strong concentration in manufacturing. We're not seeing a pullback in hours. And so those first clues of a labor market that's fraying are not present. In fact, we're actually seeing for people who are switching jobs in the last year, in the last 3 months, that pay is going up, and they are more sensitive to real-time economic conditions. So there's not anything in the labor market yet that suggests a slowdown is coming. What we're seeing in the macro economy are risks, and that's where the costs come in. It's worth talking about what the Fed would like to do at the party, because a lot of people talk about the punch bowl and the Fed and their growth spurt role in the economy. But what the Fed prefers to be is a wallflower. They prefer to let the economy do its thing without having to provide that kind of stimulus. And right now, that's what you're seeing in the labor market.
So we also saw continuing claims come in a little bit, Neela. Does that rebut the idea that people are having a harder time finding a new job, even with the prospect of just a sort of wait and see, or as we heard from Jim Zelter, macro paralysis?
There's some of that. I've been concerned over the last couple of years about the lack of dynamism. That we've seen it in the data that there's been less turnover by companies, by workers. Now, part of that is the Great Resignation. There was a lot of turnover then, and maybe people have been settled into their current jobs. They've been there a couple, 2-3 years. They're not ready to make that switch. But this is a labor market that thrives on dynamism. And if people are, in some sense, in a wait and see mode, that dynamism won't spur the kind of productivity growth that ultimately keeps inflation down. So as we're looking at a pretty solid jobs market, we have to turn the page and look at productivity and make sure that that's starting to increase as well, because in general, the trend is that productivity growth is lower now than it was the pre-2000s. And so why is that? Well, right now, it looks like it's because some companies are stuck on pause, waiting for more clarity.
At the same time, Neela, we keep getting headlines like yesterday from CrowdStrike, the idea of layoffs pretty much across the board. This morning, Match Group cutting 13% of staff. There have been a number of pockets like this where we have seen some job cuts, particularly in the tech space, but some others as well. How do you put those indicators, these sort of anecdotes, into some sort of broader theme that you can get your head around?
Well, first of all, we have to be like grown-ups about the labor market, I think. There are companies that will make decisions to change their way of operations, change their investments, and some of them will lead to layoffs. And so that's the reality of the labor market. What we'd like to see, though, is that this continues to stay in pockets. It's not spreading into other parts of the real economy. And right now it is in pockets, and tech is particularly sensitive to this because it's an industry that thrives again on productivity, on growth, on taking those big bets, on making those big investments. Sometimes they don't work. What I will say, though, is that the overall macro economy doesn't help. And so that uncertainty makes it harder to stay the course on a big investment. And that might be what we are seeing. And so I guess the broader narrative would be, yes, tech has kind of always been its own special move fast, break things, innovate, innovate and pivot. And so we should continue to expect that. But what is the greater, larger economy doing in response to the uncertainty? Right now, it looks like it's chugging along. Let's hope it continues.
Nita, we've got to leave it there. As always, good to get your input. Nita Richardson there of ADP. If you're just joining us, so the number we were looking for was jobless claims. That came in at 228. Previous number was 241. Estimate was 230, so that's better news. This equity market was trading on the prospect of a big deal between the UK and the United States. We'll get the details of that deal in about 1 hour and 22 minutes time from the Oval Office with the President. I can tell you equities have just pulled off session highs. A report here from CNN, no confirmation here at Bloomberg or directly from the administration. And as always, you should always wait for that. Wait to see what the President actually has to say about what's happening. But from CNN this morning, the US-UK trade pact will leave the 10% US tariff in place. And this, Lisa, is going to be the thing people try and get their heads around. Is this a template for what's going to happen elsewhere? And if that stays in place, is that the new normal? Are they the rules of the road?
That's exactly where I was going to go. If this does remain in place, can people just start to price in across the board at least 10% tariff as being the rules of the game going forward? Right now, I'm not seeing a huge pullback, as you mentioned, just a little bit off session highs, which is surprising to me, which highlights to me either people don't believe it, they haven't seen it, or maybe that's already been baked into some degree, that people sort of expect that 10% to be the floor across the board.
There are several buckets here, and we've talked about them all morning. You've got the tariffs on steel and aluminum. You've got the tariffs as well on autos too. So if there is an agreement, it'd be interesting to see what they are willing to pull back on, if anything at all, or whether this is just a template for something bigger further down the road. Stay tuned. All eyes on the Oval. 1 hour and 20 minutes away. Joining us now to discuss is Mike Collins of PGIM Fixed Income. Mike, we've got to talk about the data, the Federal Reserve, its reaction function, and the prospect of deal-making down in Washington, D.C. So let's start in the White House. Mike, what are you expecting to see from the President at 10 a.m. Eastern Time?
You know, I'm worried, Jonathan, that it's going to be a disappointing announcement, right? Obviously, the markets are kind of rallying this morning in anticipation of this big announcement and this big successful negotiation. But like the report you just indicated, I think it's going to be a real bumpy road on this whole tariff process, probably for most of the year. And this may be, you know, kind of the first salvo, and you know, it could be disappointing. So just be cautious on that front.
This is what the reporter from CNN has to say on this, that the trade announcement with the UK will be limited in scope, heavy on future commitments, and leave the existing 10% universal tariffs in place, according to a US and UK official. Now, Mike, if we do hear just that, almost verbatim, how would you expect the market to respond?
Yeah, negatively, right? I mean, it's just more of a continuation of this, like I said, really choppy process we've been going through. And I think ultimately it's bad for the economy. It's bad for the level of certainty that companies have, that consumers have in terms of investing and spending on big ticket items in the economy. So, you know, I think we're still kind of moving toward this stall speed in the economy, and this level of uncertainty I don't think is going to go away anytime soon.
Mike, if it's bad for the economy, is it good for bonds?
It really should be, right? I mean, we're really in a conundrum right now, and the Fed did a really good job yesterday explaining the conundrum, right? I mean, you look at what's priced in right now, Jonathan, right? There are about 100 basis points of rate cuts priced in over the next year. Another way to think about that, though, is maybe there's a 50% chance of no cuts, which is where the Fed is right now. I mean, they are stuck. They are on ice. They really can't do anything potentially for most of the year. And then maybe there's a 50% chance of 200 basis points of rate cuts, right? And it feels like that's the dilemma in the markets, right? It's, as Tom Porcelli told you yesterday, it's really a coin flip on whether or not we have a mild moderation in growth or a deeper growth dilemma. You are seeing a lot of, as you just mentioned, anecdotal layoffs, and they seem to be accelerating over the last weeks. And, you know, the jobs numbers and those unemployment claims we just got are kind of lagging indicators, right? I mean, they really, once they start moving in the wrong direction quickly, you're already in the throes of a recession.
Mike, the last time we spoke after Liberation Day, you talked about how there was a shift in your view about the reaction function, if you will, of bonds, and whether that was going to be the haven play in some sort of downturn, and that you have seen some sort of shift away from international buying of the U.S. Dollar, but also of treasuries in general. Do you feel like if there are trade deals, that could change back to just simply weighing the economic risks and seeing bonds as a good investment in the face of weakness?
Yeah, for sure. I mean, Lisa, Robert Tipp, my colleague, taught me 35 years ago when I was starting in the business that the 30-year Treasury is an insurance policy, right? You buy it, you get paid to own it, and if things go south, you can make a lot of money, right? And I really believe that the markets are set up for that, right? I mean, Powell even indicated he has a lot of capacity to support the economy, meaning those 200 basis points of rate cuts that maybe there's a 50% chance of that price in the market, that could come to fruition pretty easily. And yeah, I know that the talk right now, the narrative is the yield curve will just steepen a lot. The front end would do well and the back end wouldn't. But if the Fed is cutting 200, 250, 300 basis points, the whole curve comes crashing down, right? Yeah, it steepens, but it has already steepened a lot. I mean, there's a 100 basis point spread right now between twos and bonds, and the 10-year is right in the middle of that. And yeah, so it steepens. We're in that, ready for that type of move, but there's a lot of cuts priced in the near term. That probably won't come to fruition. But yeah, I think bonds will be the ballast in your portfolio.
Mike, got some more reporting, so I want to get to that. So stay tuned. Stay tuned for 10 a.m. in the Oval Office when you hear directly from the President of the United States. But we've got various reports going into that. Everyone is working very hard to try and get ahead of this. So this came from CNN initially, reporting that the US-UK trade pact will leave the 10% US tariff in place. As we've discussed on this program all morning, there are other tariffs in place on steel, aluminum, and autos. The Financial Times reporting here, Lisa, that UK officials see the US deal initially focused on autos, on steel. Now, this is from the Financial Times. We don't know what it's going to look like at 10 a.m. Eastern Time. And as I often repeat, you have to hear it from the president directly. But Lisa, that's the latest.
And there aren't necessarily the complications of the reciprocal tariffs on the United Kingdom. So if this is a true test of what the sectoral tariffs could look like on a country-by-country basis, that maybe is a template to follow, that there is going to be an all-in type of tariff rate rather than maybe specific tariff rates on different sectors. If you're confused, well, wait till tomorrow, because I'm sure it'll just be a lot clearer then.
I hope Mike Collins hasn't got anywhere, because I want to come back to Mike and ask him about this. Equities at the moment still positive by 0.6%. Mike, I want to talk about credit with you on a sector basis. How many of these sectors are investable right now, based on the fact that the president can just flick a switch on and off and make them uninvestable or investable at any given time?
Yeah, so the job of a credit analyst is really difficult right now. But that being said, we do know generally the sectors that are at risk, right? Some of those big kind of industrial sectors, the manufacturing sectors like autos, where they do import a significant percentage of their supplies and vehicles. And we've done a great job. I listen to our credit calls every morning, Jonathan, and they typically go like this. Well, we're really worried about this sector. They're struggling. Their margins are coming down, but we're underweight. We're avoiding it. We've seen the writing on the wall. So I think there's actually a real advantage to having a lot of boots on the ground in this type of environment. And it's difficult to predict the final outcome, but there are definitely clues which sectors are more at risk versus others.
Mike Collins, appreciate the update. Mike Collins there of PGIM Fixed Income, as we all work through these headlines to try and get a better picture, Lisa, of what we might see in 1 hour and 40 minutes' time.
Which gives you a sense of just how much people are hinging on just a select group of deal makers to come together and give some guidance. It is interesting that markets aren't trading more on this, because I guess people don't know either what to make of it, or is this basically the market saying that they could live with 10% of a baseline tariffs as long as there is an evening out and a dropping of some of the other potential levies?
This would be fantastic news for Jaguar Land Rover and some of the auto companies in the UK, that's for sure. We said this a few times on this program already this morning. And as I've said on repeat, Wait for the president. The president speaks in 1 hour and 15 minutes' time. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. Recapping the latest economic data, U.S. jobless claims fell last week to 228,000, roughly in line with estimates. The drop comes after a short-term spike at the end of April, coinciding with spring recesses and the Easter holiday. Continuing claims also fell. Meanwhile, the wait for the next pope will continue after black smoke poured out from the Sistine Chapel chimney once again. Cardinals failed to reach an agreement earlier this morning after 2 new rounds of voting. 2 more rounds will happen later today. And the FAA will announce a plan to overhaul the U.S. air traffic control system later today. Transportation Secretary Sean Duffy is expected to outline a series of upgrades to staffing, facilities, and equipment, and convene a panel of airlines to discuss reducing delays at Newark Airport, which was hit by a 90-second technology failure last week, leading to days of disruptions. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Up next on the program, we'll set you up for the day ahead, and it could be a very busy one. At 10 a.m. Eastern Time, the President of the United States in the Oval Office unveiling what could be a big announcement regarding trade between the UK and the United States. A sneak peek, perhaps, of some of the details up next.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO? It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Earnings season is here.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The opening bounce 38 minutes away, and equities are positive by 0.8% on the S&P 500. On the Nasdaq, up by 1.2. With your movers going into the cash open, here's Danny Berger. Hey, Danny.
Hey, John, some more earnings from you. We heard from Match Group. The thing the markets are concentrating, though, is on their ability and their effort to turn things around. They have a new CEO. They're under pressure from Elliott Management. They announced that they would let go 13% of staff and about 1 in 5 employees and managers there. So we are seeing shares a little change this morning. They are coming down from a higher result. We also got earnings this morning from Peloton, trading to the downside. It also has a new CEO, also trying to engineer a turnaround to look more like COVID levels, but reported 3 straight quarters of losses. Those shares down 8%. Also noted that it would face a tariff of 25% on the aluminum in its parts. Finally, here's something you don't hear often from consumer discretionary companies: a beat and a raise to the outlook for Tapestry. Really strong results for their Coach brand, up 13%. The company saying, look, we don't have much exposure at all to tariffs. Citi also noting that of the things it imports, only about 3% come from China. So those shares up 9% in the pre-market, John.
Danny, thank you. Thanks for this morning. 3 names to watch into the opening bell. Plenty to watch into the weekend and into next week. At 10 a.m. Eastern time, you will hear from the President of the United States making a trade announcement in the Oval Office. Into the weekend, US and China trade talks kicking off in Switzerland. Into next week, CPI data on Tuesday, plus the President heading to Riyadh for the first stop of his Middle East trip. On Thursday, PPI retail sales and another round of claims, plus earnings from Walmart. Big earnings report from them coming right up. As we look ahead to 10 a.m. Eastern time, joining us now from the White House is Anne-Marie. Anne-Marie, what can we expect? What are we looking for in 1 hour's time?
Well, what we look for when it comes to this U.S.-UK trade agreement is the start of a more fuller negotiation for a trade pact. 2 key items. One, when it comes to UK imports coming into the United States, the UK has been pushing for that 25% tariff level on steel, aluminum, and cars, that to be reduced. Likely we're going to see that. And then when it comes to U.S. products going into the UK, like agricultural sector, maybe cars as well, a key focus for this administration, potentially you would see the UK also drop those tariff rates, as well as something that has been a thorn of the side of big tech companies for years, the digital services tax. We should note this is the first of an agreement that the president has been talking about. It's a big one for him. We should, though, say when it comes to the UK and the US, Jonathan been saying all morning, trade is relatively balanced between these two countries. Actually, the UK has more imports into the United States. So I would say that this is one of the more easier negotiations the president has been able to have. When it comes to things like the European Union or China, it's going to be a lot harder.
Anne-Marie, you run away. You try and get in the Oval Office and ask some questions. Anne-Marie, thank you.
I'll be there.
Down in Washington, D.C., appreciate it. Big conversation coming up in about an hour's time.
Yeah, at a time when a lot of people are trying to focus on front-running this and getting a sense of exactly what the contours of this will be. What we're hearing from CNN is that 10% baseline tariff is going to be remaining in place. And the Financial Times saying that will have to do with steel and auto exports from the UK and what kind of tariffs could be on those. I wonder how open this suggests the administration would be, if this is true, to potentially lowering them on a more across-the-board basis, or whether this is going to be one of the chips used to possibly get a deal on the other side for other people too on a case-by-case basis.
It's been a busy morning, hasn't it? The United States on a trade agreement, whatever that looks like, between the United States and the UK. Coming up tomorrow to react, Max Kentner of HSBC, Alex Altman of Barclays, Alicia Levine of BNY Wealth, and Tiffany Wildig of PIMCO. From New York, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
Welcome back to a special Italian Open update for Bloomberg TV and radio from 10.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything.
You have had a number of games overseas in recent years, and in fact, you opened the season going to the opening game in Brazil. So do you expect to do more overseas games, and is that a part of your strategy?
It is. We had 5 last year. We expect to have 8 this year, which will be the highest we've ever had. Our hope would be at some stage to get to 16 games in the next few years. We think we can do that. I think it's an indication of the popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
All right, let's cut right to it. This is Bloomberg's new show, Primer. Technology is a $1 trillion game. Won, lost, won again, just by backing the right science at precisely the right moment.
My life has been focused on how can you elicit intelligence from brain cells in a dish.
This is the fundamental building block of our fusion technology.
We're doing things that have never been done by anybody, ever.
Everyone is selling the future. If you want to understand what's coming, you'll want to watch Primer, because details matter.
Lasers on?
So do lasers.
There we go.
Oh, and it's on all these lovely channels. Hope you're jotting this down.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Cape Town, South Africa, and this is Bloomberg.
Coming up, President Trump says the U.S. has struck a comprehensive trade agreement with the U.K., marking the first of his promised deals. And it's a win for chip makers as well, as Trump plans to rescind Biden-era AI chip curbs. But pharma stocks take a hit on a report that the president will revive an effort to dramatically slash drug costs. Plus, a Jeff Bezos-backed startup plans to shake up the EV market. Chris Barman, the CEO of Slate Auto, joins Open Interest.
And we're watching some stocks over here, Matt. We're watching the chip makers, of course. They are climbing as the Trump administration plans to rescind Biden's semiconductor curbs. It's a welcome relief for NVIDIA, Intel, and Broadcom.
All right, and on the earnings front, we're still not done with earnings season. A number of consumer stocks dropping after lowering outlooks as U.S. shoppers get conservative. You can see Molson Coors down 6% in the pre-market, Shopify down almost 7%. And Krispy Kreme, unquestionably the maker of the best donuts in the world, losing a quarter of its value, Shonali.
And the big story of the morning, the U.S. and U.K. have reached a trade agreement, but President Trump is offering little detail. He's calling it comprehensive. We'll hear from him a little later, but he has been teasing a deal all week.
We're going to put very fair numbers down, and we're going to say, here's what this country, what we want, and congratulations, we have a deal. And they'll either say, great, and they'll start shopping, or they'll say, not good.
Here with more from the White House, Bloomberg's Tyler Kendall. On one hand, you have the announcement from the White House that we are anticipating with the UK. On the other hand, you have the EU threatening more retaliatory tariffs. Net, how convincing are the negotiations that you're seeing cut through Europe?
Yeah, hey, Sonali. Well, if you'll recall that when Keir Starmer actually visited the White House back in February, President Trump openly said that he prefers to negotiate with London over Brussels, and perhaps that personal relationship is what helped spur this announcement we're expecting today. But also keep in mind that the UK and the United States have a broadly balanced trade relationship. That's why the United Kingdom was hit with that 10% levy on so-called Liberation Day, really considered to be the floor, the bottom of those rates. But at the same time, the United Kingdom, of course, also has a VAT as well as a digital services tax that this White House really doesn't like. But our reporting indicates that potentially there could be some changes to the DST on the table here today, as well as also potentially the United Kingdom pledging to boost U.S. agricultural products. We'll have to see how this really does shake out, because that point in particular has long been a sticking point between these two countries. At the end of the day, though, it's not likely that we are going to see a change in that baseline 10% levy, but officials tell Bloomberg News that in the United Kingdom, they've really been trying to focus on bringing down the sector-specific tariff rates. Of course, that would be the 25% on steel and aluminum, 25% on autos, and then pending tariffs on pharmaceuticals. That's something that's going to hit the United Kingdom, but also the European Union, of course, particularly hard in the weeks to come, as President Trump teases that that could happen any day now.
He did say in his post that many other countries are in serious stages of negotiations. This obviously was very serious. Looks like they've been negotiating for 5 years, Tyler. Can this deal be used as a blueprint for others?
No doubt, Matt, that other countries are going to be watching exactly how this plays out today. What sort of concessions are on the table? How quickly did they actually get this done in order to move progress along? Those other countries that this White House continues to point to us that they are prioritizing are, of course, those Asian economies that are geographically close to China, Japan, South Korea, India. These are the countries that officials continuously say that they are making progress on. In fact, you had the Treasury Secretary Scott Bessent yesterday tell lawmakers India in particular is one of those countries that he's been particularly impressed with as we look ahead to this weekend. Of course, another series of talks jump-starting when the U.S. meets with China in Switzerland.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there from the White House. We're going to bring you, by the way, President Trump's trade announcements as they happen in the next hour. So stick with Bloomberg for that coverage. The White House plans to rescind, as Sonali was saying earlier, Biden-era AI chip curbs that were set to take effect on May 15th. Chip stocks surging, obviously, on that news, which will let countries negotiate their own chip access. Bloomberg Tech co-host Caroline Hyde joins us now on set. So, Caroline, what do we know about this? And, you know, were those curbs in place for a reason? Is this a national security problem now?
Well, we have to see how much this becomes a headache for trade negotiators, because individual countries are now going to wrap this into their ongoing tariff negotiations. All of this, though, goes back to the AI diffusion rule that was put in place in the last days of the Biden administration that really shocked many, in particular, a lot of allies of the United States. Take India, take Switzerland, take some of these countries like Israel that suddenly were put into this tier 2. There were 3 tiers, China being the toughest, an adversary, basically making it incredibly hard to get sophisticated chips from the US. But then it made it really quite limited for some of these so-called allies to get as many chips from NVIDIA, from some of the chip makers in the US as they would like. That was a real issue for these countries and these companies. So finally, NVIDIA gets its way. They support the new AI views coming from the administration, and they want to be able to negotiate country on country. Now remember, Thailand, Malaysia, countries where we think perhaps were able to act as intermediaries to allow China to get access to more sophisticated chips from an NVIDIA, for example, they're going to have more tough rules likely coming their way. But for now, AI diffusion not coming in May 15th, big sigh of relief for certainly the chip makers. And Oracle, for example, that wanted to build a big data center over in Malaysia.
I also would love you, speaking of AI, to follow on the company specifics here, because the AI Google or Apple Google relationship has certainly been the talk of the town. And if you overlay that with the threat, frankly, that OpenAI and Perplexity and others are creating, their relationship becomes increasingly interesting, doesn't it? How are they reacting now?
So This all goes back to basically an interesting tactic that perhaps is being deployed by Eddie Q at the DOJ trial. Remember, the DOJ thinks that Google has a monopoly position when it comes to search. So Google's trying to refute that at the moment. They're trying to look at what remedies would be that. Now, the key issue is whether Apple, of course, continues to get that $20 billion from Google to promote Google as the default search option. Eddie Q goes in there and says, by the way, we don't think search is going to be relevant in the way it is currently now. We're going to be moving to generative AI models. We might be interweaving that within our Safari browser, basically downplaying how important Google being the #1 search offering really is in the future. That might be my cynical take, but more broadly, we are looking at a new way in which Google and Apple are going to have to relate. Are we going to see more offerings? Yes, you can get other web browsers if you don't want Google, but what is the future of search going to look like? Is it going to be more Perplexity? Is it going to be more ChatGPT? Already ChatGPT is interweaved within Siri, remember. I don't think this should be such a surprise to investors, but it certainly was yesterday. What a massive move. 150 billion wiped off of Alphabet's share price.
It's interesting. I will say over at Milken, a lot of the executives using Perplexity now instead of Google. That was a really interesting way to watch them do that in real time. Caroline, thank you so very much. We're looking forward to your coverage on Bloomberg Technology in the 11 o'clock hour. Now in earnings, Crocs has withdrawn its full year outlook due to macroeconomic uncertainty, and earnings in the first quarter did beat estimates. We're going to discuss this with Bloomberg Intelligence U.S. retail analyst Abigail Gilmartin. You know, Crocs is interesting to me because it's one of those standalone companies at a time where a lot of these shoemakers are really looped into broader conglomerates.
Yeah. It's a stretch to call them shoes. Isn't it a stretch?
Well, if you're on the beach, it's nice to have those kinds of shoes, I guess.
Yeah, you'd be surprised how many people wear them as shoes all the time. But yeah, no, I think that their namesake brand, Crocs, has continued to do really strongly. And I think we keep wondering if it's a fad, is it going to go away? But it's really here to stay. It continues to outpace its Hey Dude brand and do really well, particularly internationally. So.
Hey Dude is the Sydney Sweeney thing, right?
Yes, Hey Dude.
Okay, so. Yeah. It seems crazy that we go from Trump trade war to, AI chip curbs to Crocs.
Yeah.
But it isn't, because we're really getting a look at the consumer, right? This is pretty much a discretionary product. So how is the U.S. consumer doing?
So Crocs sales did fall in 1Q with North America being weak. So the U.S. consumer is pulling back a little, right? And I think that was expected. But they're going to continue to buy maybe their Jibbits or other certain things at maybe a lower cost. I mean, Crocs...
Jibbits are the little things that you stick into the Crocs holes.
Yeah, the personalization engine. And those come at a higher margin, and they offer a lower price point for people who maybe don't want to spend all the money on the full new shoes, but they want to update their shoes a little. So I think that it poses an opportunity, and it's a higher margin business, which could aid.
You know, we had a lot of insight from a lot of other companies here. Nike, for example, Bill Ackman talking about Nike really being the only company really in his portfolio
that he invested in,
that he invested in. So what are you seeing among others as well?
I mean, I think that everyone right now, there's just a ton of uncertainty with tariffs, how the consumers will react to that, and when it will really start hitting. I think we're starting to see price increases hit everywhere, and as it does that, consumers are going to pull back on their discretionary purchases. So
there's the direct tariff impact, and then there's that indirect consumer pullback.
You got to wonder if they're going to bring production back to the U.S., right? Because they make them in Asia, right? Vietnam, China, Indonesia, also in Eastern Europe, I think. Any talk of a Crocs factory popping up in, like, New Jersey?
No talks of it yet. I mean, I guess I wouldn't be too surprised because it's more of a simple product compared to maybe the Nike shoes. That would be a lot harder to move production in a more timely manner just due to the technology needed. So, I mean, it's always a possibility, but at this time, they're really only sourcing about 13% from China. So they're going to be able to mitigate some of the tariffs in the near term, but it will add additional costs.
Cool. All right. Great to get some time with you. Abigail Gilmartin there of Bloomberg Intelligence. Let's get a check on futures this morning. Obviously, we're looking at some positive sentiment. If Trump manages to clinch a full and comprehensive trade deal with the UK, something that Scott Besant tells us takes years to negotiate, and maybe the U.S. has been talking to the UK about this for 4 or 5 years, that would be positive for these markets. And the S&P futures are currently up about 0.2%. NASDAQ futures up more than 1%. That's on the chip news as they're so heavily weighted. Russell 2000 futures, even the small caps, gaining well today.
But there is a down arrow story that it's drug makers. They are taking a hit on a report that Trump may be targeting drug costs. We're going to give you the details on that next. This is Bloomberg Open Interest.
Is this a negotiation or the new rules of the game?
It could be either.
It is up to the president how he wants to negotiate.
The higher the tariff, the faster they come.
A 90-day pause is not an eradication.
The trade negotiations are moving quickly.
There will be deals cut.
Trust Bloomberg for all the context and clarity you need as the tariff and global economy story evolves.
This year's bear case, very quickly, becoming the base case.
Nobody covers tariffs like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
New episodes this spring, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Let's get to high interest now. Look at what's making headlines around the world. The Bank of England is cutting rates by a quarter point to 4.25% as the global trade war weighs on its growth outlook. The split decision surprised markets by showing a more cautious than expected approach towards easing monetary policy. The BOE forecasts inflation to peak at 3.5% in the third quarter this year and expects growth to be 1 full percent. The Gates Foundation is celebrating its 25th anniversary today by announcing plans to close shop by 2045. The philanthropic juggernaut reshaped the landscape of global public health, putting over $100 billion into humanitarian causes since its founding in the year 2000. Bill Gates is committing to 20 more years of aid, over $200 billion in total. The news comes at a time that many deem perilous given the Trump administration's recent assault on foreign aid. And another thing tariffs are impacting is banker bonuses. Investment bankers, hedge fund employees, and asset management professionals are all poised to see lower year-end incentive pay in 2025. This according to a report from compensation firm Johnson Associates. The forecast follows a chaotic period sparked by President Trump's tariffs, which has slowed deal demand. Bankers who help companies raise equity will likely see the steepest drop in payouts of as much as 20%, Shanali.
And meanwhile, Matt, shares of drug makers are down after a report that President Trump is reviving a plan to try to slash drug costs. According to Politico, he's planning on signing an executive order tying the amount the government pays for some medicines to lower prices abroad. Joining us now, Bloomberg health reporter Damien Garde. Now, this executive order, as Politico reports, is expected for next week. But how in flux is this, and what is the ultimate impact expected to be?
Right. So as with so many things with this administration, it could happen or it could not happen. It's kind of the information we have. But as far as the impact, as you mentioned, this would be the revitalization of a plan that Trump tried to push forward in his first term that would have seismic effects on basically the revenues of drug companies around the world who count on the United States as the largest market for prescription drugs. And it was vociferously opposed by the industry that last time and ended up kind of falling apart legally toward the end of the second Trump administration, basically for process reasons. If this were to take shape, and we don't know the details of it or exactly which medicines it would affect, it would be massively worse for global drug makers than the policy that they all complained about that the Biden administration enacted that allowed Medicare to negotiate the prices of certain drugs, an escalating number going up over time.
Damien, all of these drug makers charge people in foreign countries so much less for their products than we pay in the U.S. And when you ask the CEOs, they blame the middleman. They say, hey, it's not us, it's these PBMs. What's the truth? How come I can get, Ozempic for $150 in most European countries or thereabouts, and I'm paying over $1,000 per month to get it here?
I mean, it basically boils down to how those countries pay for their drugs versus the United States. Most European nations have a socialized medicine system where the prices are negotiated on a countrywide basis, and that results in a lower list price, we can say. Now, what the companies would point out is not only the middlemen, the PBMs, that take a cut of basically the spread price between what they list it for versus what it actually costs a patient out of pocket, but drug companies say, and they say they agree with the president in this case, that the rest of the world is functionally freeloading off of the United States, that European nations should pay more and Americans should at least pay less out of pocket, although drug companies wouldn't necessarily volunteer to slash their list prices. Where this has been problematic for them is that while the president is very fixated on that differential that you mentioned, their solutions to it don't seem to be getting a lot of purchase in the White House. It would appear that the White House is moving forward with a plan that would reduce the cost of medicines, but at great cost to the pharmaceutical industry.
Damien, the pharmaceutical industry is in a flurry. They're fighting really hard to make sure some of these pricing plans don't take effect. How do you see the fallout shaping up, given that we have some information now about how the administration plans to approach Medicare?
I think the drug industry might be looking at this as a little bit of a gambit in an ongoing negotiation that they've been having with the White House. So we know that Trump is fixated on, one, the cost of medicines, as you mentioned, and then more broadly on manufacturing and how American companies should do more of it in America. We have seen a flurry of announcements from global drug makers for basically every dollar that they intend to spend in the United States over the next 4 years gets a press release. This is pretty transparently them saying, don't tariff us, continue, reinstate or extend the Trump tax cuts that incentivize us to invest in the United States. And if we do so, perhaps we can negotiate on these other things. Now, the most favored nations policy that you mentioned, the drug pricing policy, would be an escalation of that on the White House's perspective. And I think drug companies are hoping that perhaps the White House can still be swayed away from that if they commit to more of Trump's agenda.
Damien, great having you on. Thanks so much for talking to us about this. Bloomberg's Damien Garde talking about the drug pricing and the subsequent moves that we've seen in pharmacy shares this morning. In the next hour, by the way, we're going to speak with the CEO of GoodRx, Wendy Barnes. She joins us at 10:30 a.m. New York time, assuming that Donald Trump isn't still talking at that point.
Yeah, we don't know how long this announcement is going to be. We're going to look at some more movers on our radar because Matt was saying it is still earnings season, the season that never ends. Peloton posts its third straight quarter of sales decline. Stock really taking a hit this morning, down more than 7%. Fun fact, this was a big David Einhorn pitch late last year, wondering how he feels about it now and how quickly he's trying to get that turnaround. Krispy Kreme also taking a massive hit, down 25%, halting dividends pausing expansion inside of some McDonald's. Carvana, though, doubled profits in the first quarter. They see stronger sales throughout the year, up more than 6%. How do you feel about those used cars, Matt Miller?
You know what? I'm very closely watching used car prices because they're going for much higher at auction than many expect. But Krispy Kreme has my attention today. The stock has fallen more than 50% year to date, and it's got such a great ticker, DNUT, D-N-U-T.
Maybe it'll be acquired one day. Who knows?
Yeah, well, I would buy it.
What happens when asset prices fall?
Coming up, Franklin Templeton's Katrina Dudley anticipates stagnation in equity markets as earnings trend lower. We're only expecting, I think, now 8% earnings growth this year. At the end of last year, we were expecting 14%. We'll talk to Katrina about that next. This is Bloomberg Open Interest.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Now, the IMF expects the trade war to have a much bigger impact, a negative impact on the U.S. economy than on other countries. Apollo's Torsten Slok put together this chart that shows U.S. GDP growth revisions more severe than that of the biggest trading partners, including China. Joining us now, Katrina Dudley, Senior Investment Strategist at Franklin Templeton Public Markets. Now, so much of this is about who has the power in these trade negotiations. And if you are in a situation where the U.S. is exporting more than it is bringing in, say the EU, are you watching that more than the deals that are getting done right now?
I don't think you want to be talking about power as it relates to tariff negotiations, because the key word is it's a negotiation, and you need to have partnership, you need to have collaboration, you need to have both parties agree to a deal. So you can't have one person come in and say, these are my terms, take it or leave it, because, you know, the BATNA, which is, you know, your best alternative for someone else, may just be, you know what, they're not willing to even negotiate the things that matter to me and are really important. It pays for me to walk. And I think that then will bring, you know, people back to the table. So I think that you just need to think about it as a negotiation, not as a power play.
I mean, the fun thing is that that's precisely what Donald Trump has said he's going to do, right? He's going to lay out his terms and say, take it or leave it. Now, that could be a negotiation tactic in itself. what kind of deals do you expect? I mean, we're going to get a UK deal, but that's probably not the most important one.
No, but it's really important, and it sets a tone for everyone else. Going back to what you said, if that agreement is not a we set the terms and they accept it, it's going to show that willingness is for that give and take. And so that's why I think it's the narrative around this deal versus the actual terms itself, and the fact, as you say, it is a small agreement. So I think that we really want to think about what happened during those negotiations and what we can see from that in terms of, do we have takeaways?
All right, we're going to keep you with us. We've got the open up next. Futures are positive. And if you look at them, you'll see that we're getting big gains in the tech stocks because the chip stocks. This is open interest.
Are you worried about your orders because of what's going on in Russia and Ukraine? Is that something you worry about in terms of the impact of Russia, Ukraine on your investment appetite for things like that?
I'm not worried about Russia invading Norway anytime soon. We are a member of NATO. We do border to Russia, but now, since Finland and Sweden joined NATO, we feel stronger than before.
So today, what would you say your biggest investment concerns are? You're running $1.7 trillion fund. For the average person to not manage that much money, what should they be worrying about, and what are you worrying about?
No, I think you've got two things. One, you have the known unknowns, right? So, and there at the top of my list would be two things. One is inflation, because I think there is an argument in a tight labor market when you potentially decline the supply or reduce the supply of labor. In the US, you put on tariffs. These things can be inflationary, and there could be a moment where, given the high level of government debt, that the investors suddenly decide, you know what, we want a much higher coupon to lend to, to governments. And so you could see a step up in interest rates, which could be negative for financial markets. Then, of course, all the AI-related stocks, the epicenter here is Taiwan, so you need to watch that. The thing that really scares us when it happens is the unexpected,
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
We are moments away from the start of trading on this Thursday. This is Bloomberg Open Interest. I'm Matt Miller. We're told by the president, a full and comprehensive trade deal with the UK. We're going to hear about that in just about 30 minutes' time. But that has led to some optimism in the S&P. We were up yesterday at the close. Futures are higher as well, 2/3 of 1%, even higher on the NASDAQ as the president looks to rescind some of the chip export curbs that we had seen put in place at the very end of the Biden administration. You have Aspen, I believe it's Aspen Insurance Holding. They're going to start trading today on the New York Stock Exchange. That's why they're ringing the bell there. So some smaller IPOs. I think it's like a $400 million deal going out at $30 a piece. And then Celiac Disease Foundation, I guess, making the world a more gluten-free place. Shanali, what do you see in terms of the stocks to watch at the open.
Let's take a look at what's happening because of the White House planning to rescind those Biden-era AI chip curbs that were set to take effect on May 15th. The chip stocks are surging on the news. NVIDIA up about 0.8%. Intel really feeling the love, 3.9% higher at the open. Broadcom up about 1.5%. This is driving the NASDAQ higher, Matt.
All right, yeah, that's absolutely behind the gain in the tech index. In earnings, a number of consumer stocks dropping big time after lowering their outlooks. U.S. shoppers may be getting more conservative when it comes to beer. Molson Coors off more than 8% in the cash trade. Shopify down almost 3%. Krispy Kreme, the big standout to me, maker of donuts from my childhood, down 27%.
Brutal.
An absolutely brutal drop. We're back with Katrina Dudley here, Senior Investment Strategist at Franklin Templeton Public Markets, and I want to get those red arrows off the screen because last time you were on with us, you were pretty, I don't know about bullish, but you were pretty positive these markets, and we were right at that sort of post-Liberation Day low. So are you still constructive? Do we have further room to run above 5,700 on the S&P?
I want to break that down into two parts. As I think as on a longer term basis, like a 1 year out, we are in the optimistic camp. We actually think from like the base where the market kind of troughed, you've got like 20, 30% upside from those levels. But we moved very fast and very quickly. And I think that the market is at that point where we probably just need to take a pause, and we've got a lot of news that we need to digest. You just mentioned the earnings. We're looking to digest some of these negative earnings that are coming in through the consumer. But one of the reasons we were so optimistic coming into this year was the breadth of earnings expectations and the breadth of the drivers of the earnings versus it just being the Mag 7. It was across all of the sectors. And I think that that narrative, despite what we're seeing today in a number of these consumer-facing stocks, still holds.
You know, it's interesting. Despite some of that negative guidance we've seen, couldn't believe it. I was sitting on a panel this week. A question comes in about whether you can see the S&P 500 actually hitting a new all-time high this year, despite all of these challenges. Citadel Securities president goes, sure. I mean, do you think that that's possible?
I definitely think it is. I think that, look.
Wow. So what was the high? 61.44?
Yeah, so you have some people as high as 7,000. I'm not necessarily sure we quite get that much of a rally. But I think if you look at it, we're in the depth. We've had Liberation Day. Would you say that's probably the worst of the news that we've had to digest and going forward? If I have a look on the tax side of things, we have the need to extend some of those tax cuts. But if I look at what we last time when we had a president needing to do something like this, you're probably expecting around August. So that's going to give the market the certainty they need. I don't think this is going to extend right until the end and right until the deadline. So if I look at it, I think that the bad news is actually kind of the worst is behind us. And that's what drives markets, which is that earnings expectation and the positive expectations of growth.
In his first 100 days, we've seen a flurry of executive orders. Yeah. And it's been the opposite of certainty, right? Mm-hmm. Do you think that we get to certainty in this administration, having looked at Trump 1.0, or is this president different than that? Like, why do you think he's going to bring us certainty?
I don't think we're ever going to get certainty in any American administration. Why? Because the economy is so dynamic. This country is so dynamic. Things change all the time. And I would actually say that certainty is complacency. So I don't think you're going to get that. But there needs to be certainty in terms of certain events that we know, the kind of known knowns. We know that the Tax Act is set to expire. We need to have that resolved. And so that's where we're looking at that certainty coming in, is in response to things such like that, which is, getting certainty. But if you ask me, do I want certainty in the White House? Maybe not, because I'd like to make sure that he's adapting and responding to what's happening on the ground in what is a dynamic economy.
You know what's incredible to me is I think when you came into this, you had a red sweep. So there were a lot of investors who believed there would be no checks and balances in the White House. But since then, you've seen a few. You've seen conservative and small business groups come out and sue around some of those Liberation Day tariffs. You've seen the bond market serve as a bit of a crutch here. Yep. You've seen Bessent. You've seen the Treasury Secretary come out and be a check and balance, and even some members in the Republican Party calling for some prudence with the fiscal plans here, aren't you? Somewhat, sort of.
I mean, What do you think, Katrina?
Is it enough? Is it enough?
Does this administration have checks and balances, the type we're used to in the United States of America?
Or at least enough to keep the market calm? That's what I'm asking.
I think that we do have checks and balances. And what's the ultimate check and balance? It's actually sitting in Washington in our Supreme Court. And I think that that's where I'm an immigrant into this country, and that's one of the things where I really do admire. So I do think the checks and balances do exist, but I do think, unfortunately, because it's through the court system, it may just take longer for them to come in place. People like Besant, I think, is more of a tempering in terms of making sure that there's the voice of rationality. So in terms of our deficits, it is one area where we are concerned about. And as we look at our forward expectation for rates, it's something that we think really does need to come into play in the United States, is the fact that we do have this significant deficit, and those Doge cuts are coming in, but they're coming in much smaller than we were anticipating, or the market was anticipating.
All right, Katrina, it's been great having you on the program, and you've been right so far. So we're going to continue to watch your calls and this progress. Franklin Templeton's Katrina Dudley. Shonali, let's get a look at some of the stocks that are moving in the market right now.
Yeah, let's bring in Bloomberg's Isabel Lee, because a lot is moving under the surface.
We're looking at Molson Coors. We have the stock falling by 8%. That's the most intraday since 2024 April. So the company lowered its full-year guidance amid a challenging consumer environment. So they previously said that the profit would rise in high single digits, and now they're estimating it would decrease in low single digits. The same goes with the decline in sales. They also expect low single digits, lowering their previous guidance. We have Barclays saying the significant miss in top and bottom line, along with a full guidance cut, will come as a real surprise to markets. Up next is Shopify. So this also is a stock that you see is seeing some pressure today. We see sales in the current quarter just meeting expectations. So again, that emphasizes how tariffs are really impacting the market going forward, because analysts were expecting a growth of 23%. Investors are really struggling to determine how the trade war will affect Shopify. This stands in contrast with Tapestry. So that's a handbag maker. We have Tapestry saying that tariffs are expected to have just an immaterial impact. In fact, they raised their annual outlook to a gain again. So they say that their analysts estimate its exposure to China to just be in the single digits. And last, we have ARM Holdings. This also is a stock that's seeing some pressure today. It's down by almost 7%. They gave a disappointing sales forecast, raising concerns about the slowdown in the chip industry. So revenue will be $1 billion to $1.5 billion. Wall Street estimated a number at the higher end of that range. So profit estimates were also lowered, and the company blamed the forecast on timing of new arrangements. We have price target lowered by HSBC, KeyBank, Raymond James, and others. Back to you guys.
Interesting, because Shopify in particular, Matt, the tagline is sell locally and globally. So you would think it would be some sort of beneficiary in the middle of all this, but the fact that it's not, I think, says a lot.
Is it a Canadian company? Shopify, I believe, is a Canadian
Yes,
company.
it is.
All right. Yeah, a lot of interesting undercurrents there for sure. Interesting to see Tapestry gain, right? The maker of, Coach, Kate Spade, all of these kind of aspirational handbag
Very
brands.
impressed that you know this.
Thank you. Thank you very much. I've studied up. Isabel Lee, pleasure to have you on the program. Coming up, the EV race is getting a new, affordable entrant. We speak to Chris Barman, the CEO of Slate Auto, next. This is Bloomberg Open Interest.
Incidence of cancer, which is to say people getting it, is higher than it was 20 or 30 or 40 years ago. Is that because detection is better than it used to be?
All right, so the dirty secret is we have no idea. We don't collect data well in the United States. What we do know is that there's not a dramatic rise in cancer in the United States, but what we are seeing is a troubling trend is younger people are getting more cancers. That's real. We have no idea why. but we are seeing younger people, more colon cancer, more breast cancer, and other cancers in younger individuals, 20, 30, 40-year-olds, that we never used to see.
What do you think could possibly be the cause? I assume pollution or the environment in some ways?
We assume it's either something in the environment, we assume it's diet, it's ultra-processed foods, it's microplastics, it's changes in the microbiome. We really don't know.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
And this is Bloomberg Open Interest. We're going to take a quick check on stocks because, of course, we are up on the day. We have the S&P 500 flying about 0.6%, NASDAQ 100 more so, almost 1% higher. Even the small caps, Russell 2000 up about 0.9%. Green on the screen ahead of that big announcement from President Trump in regard to the UK trade agreements. It's time now for the top calls. Some of the analyst action in focus this morning. First up, Uber is getting downgraded at Wedbush after reporting mixed first quarter results. The firm says the business faces a lack of clear catalysts in the short term. Uber down this morning about 0.9%. Next up, Coty getting downgraded at Deutsche Bank. The beauty company missing estimates and cut its outlook. It's the third time the company has lowered its guidance. Shares still up, though, even after the downgrade. Finally, Disney is getting raised to a buy at President Capital Management. The company raised its outlook for the full year and announced a plan to build a new Disneyland theme park in Abu Dhabi, Matt.
All right, yeah, very interesting stuff there and a story we've been following really closely. Something I have been watching very closely ever since I found out about it is a newer, low-cost entrant in the EV race. And I think most interestingly, it's being backed by billionaire Jeff Bezos. It's called Slate, and it offers a kind of Build-A-Bear style of electric vehicle. It starts as a blank slate, two-seat pickup truck for about $25,000 before incentives. And then each buyer can add accessories like side stripes, stronger bumpers, infotainment screens. I mean, you could even change the little truck into a 5-seat SUV. So obviously, I care about this. Joining us now is the CEO of Slate Auto, Chris Barman. Chris, great to have you here on the program.
Thank you so much for having me.
I think the excitement around this can't really be overstated. And I guess part of it has to do with the price point. After incentives, it can cost less than $20,000. A lot of people on the internet don't even believe it. They say it's vaporware. Are you really going to come out with a truck at that price?
We've been focused for over 3 years now on designing an affordable vehicle that, as you mentioned, is a platform upon which people can accessorize it. So we took everything out that wasn't a car and wanted to really get back to the basics and then put the power in the hands of the consumer to decide what accessories they wanted to bring back into the vehicle, not only at time of purchase, but based on their budget and based on time. So accessories don't have to be added at the time of purchase. It can be along the journey of ownership, or the second owner can take and totally modify the vehicle into what they want it to be.
You know, since affordability is such a big part of this story, I'm wondering how you are preparing for any impact of tariffs. Do you know for certain that it won't impact the cost of the cars?
So we've been very focused on American reindustrialization. So we've selected that we will produce the car in Warsaw, Indiana. We want it to be, you know, it's American design, American built. We've been selecting that the parts that go into the vehicle are also very much American made. So we're very well insulated against that, so that as tariffs may fluctuate with time, we want to be able to insulate ourselves against that.
It seems the automotive industry is incestuous. And I mean, you were at Chrysler for a couple of decades before this, but I'm talking about now, right? Jeff Bezos backed Slate. He also put a lot of money into Rivian. That didn't go very well. But do you use that to help you get lower cost access to suppliers, that relationship? Do you consider, I have so many questions. Do you consider Scout a competitor, but Volkswagen has also put money into Rivian? And how do you work through all of those complexities?
So we have a number of American innovators who are investors. Jeff is one. The Walter Group has been a big investor for us. General Catalyst, also a great supporter. But we're separate. We really see that we're going into a space that the auto industry isn't in today, and we're making our own partnerships and working within the ecosystem of the supply base so that we can get the best parts that are available and keep the costs affordable.
Who are your competitors, by the way? I mean, who is offering a $25,000 pickup truck?
Yeah, so Matt, the way that we've been thinking about it in the time that we've been working on it is roughly 55 million vehicles are transacted every year. About 15 of those are new, about 40 of those are used. Average cost of a new vehicle is about $50,000, a $900 monthly payment. Average cost of a used vehicle is about $27,000, about a $500 monthly payment. And a recent study came out that said if an individual makes $100,000 a year, they should spend about $400 towards a car. So it's even becoming a stretch at that point for somebody to afford a vehicle. And roughly 70% of households and individuals don't make $100,000 a year. So it's becoming really a stretch for people to get into a vehicle. We almost view the used car market, and that pool of 40 million vehicles is where we're going to see a lot of people come to Slate and consider our product.
Fascinating. No, I see it actually kind of differently. I'm wondering if you look at the empire of Jeff Bezos, but also the other backers, as you've been talking about, Slate and Amazon, Slate and Rivian. Do you see any potential for crossover or partnership?
At this point, we do not. We're really working independently on our product and what we can do to bring it to market. Of course, we're always open to talking to anybody on what might be a good partnership, but we are singularly focused on bringing this safe, reliable, affordable vehicle to market.
I guess the Maverick is one that costs around the same price, right? Ford's small pickup truck could be a competitor. I'm just thinking about who uses this. One of the complaints, one of these sort of online complaints has been range, and I think it's, what, 150 miles, but you can add on an extended range battery pack to get 240?
Yes, that's correct. So keeping cost in mind, the blank slate, it can be in 150 miles of range, as you mentioned, or upgrade to 240. When we looked at that and selected that size of pack for 150 miles, the average commute of a person today is about 37 miles a day. So you can get a few days out of the vehicle before you actually have to go back and recharge. So again, keeping that affordability in mind, but again, power of choice. If somebody needs more, we do offer more with the 240 mile pack.
My buddy Keith Naughton, who covers Ford for us in Detroit, asks if the truck was inspired by the pickup emoji on the iPhone.
I was thinking the same thing.
It looks so similar. How did the designers approach this?
Yeah, we had a number of inputs, and we have a fantastic design team. I mean, the creativity that they've brought into the vehicle and the fact that, you know, they stepped away from what most designers do of saying, don't change the design. They've leaned into it to say, hey, we want people to modify the vehicle. And they took inspiration from a number of areas. A lot of it went back to those trucks of the, 80s and 90s. Yeah. Back in the more basic format of what they look like, but wanted to have a little bit of fun and a little bit of personality. And so we hope that's what you see. We talked a lot about what face do you want to see, what look do you want to see. So when they put the proportions together, they wanted it to look athletic. They wanted it to look strong in stance, even if it is a compact vehicle. And then through the front of the vehicle, they lower the hood a little bit to give like a little clip to the headlamps. So it looks like it's just giving you a little bit of a stare.
I love a good sports car.
Yes.
Anyways, the other question I have for you, given that the Trump administration is so focused on manufacturing in America, and this is something that you're focused on as well, what is the roadmap? What are the lessons learned in terms of what really needs to happen to make that more possible? Because there are a lot of doubts that this could be done at scale.
Well, and Rivian has had real problems. I mean, they haven't done well.
So our approach is when we've simplified the vehicle, it will help us on that journey to manufacturing. So where many other vehicles have about 2,500 or more parts that go into the vehicle, our blank slate has about 500. So we've really simplified the manufacturing in our approach. We use composite panels. It allows us to help with that ease of wrapping, but it's also helped us save on the capital expense side where we don't have to invest in a stamping operation. We don't have a paint shop. And through doing that, it's made our footprint for our manufacturing facility about a third of what other automotive manufacturers are. And it allowed us to go in and re-industrialize in existing facilities. So the location that we've selected within Warsaw, Indiana was formerly a printing operation that made catalogs and phone books, and it shuttered in September of 2023. But the footprint was right for us, and we're going into that community. They've been very welcoming to us. We're excited to be there, and that's where we'll have our operation.
By the way, I want to point out, I'm not criticizing the Rivian truck. I love them. I think they're fantastic, but they're expensive, and they haven't managed to produce more than 50,000 a year. So just quickly, what are your expectations for volume?
By the end of 2027, we expect we'll be at 150,000 units a year.
All right, very cool. I hope we can have you back on. I hope you join me on my podcast.
Oh, I'd love to.
Bloomberg Hot Pursuit with Hannah Elliott. Chris Barman there of Slate Auto. When we come back, we're going to talk about the president and trade. This is Open Interest. It's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. U.S. tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech. From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks. 25 minutes into the trade, we're gaining on the S&P almost 0.5%. The NASDAQ, a little bit of a stronger gain, 0.7, as investors are hopeful on chip stocks. In terms of that, though, NVIDIA is down about 0.2%. That doesn't help. Intel is up, and that really doesn't help much either. Warner Brothers turning around higher, hopes it'll be broken up. Carvana crushing it up 10%. And then the consumer a worry for Molson Coors and Shopify. Sonali?
And we are moments away from President Trump's announcement of a comprehensive trade deal between the U.S. and U.K., as he calls it. Bloomberg's Tyler Kendall at the White House. What do we expect?
Yeah, hey, Sonali. So while President Trump says it will be comprehensive, we are expecting it to be limited in scope. The Treasury Secretary has called these agreements in principle before. And a couple of things to watch out for. While the U.S. and the U.K. have a broadly balanced trade relationship, they do have a VAT and they do have a digital services tax. And our reporting indicates that the latter, the DST, could potentially be changing here as part of any potential agreement. The other thing to watch, whether or not the U.K. pledges to boost agricultural imports. We had the Agriculture Secretary say in an interview this morning that this deal will be very good for farmers. But of course, this has long been a sticking point between the two countries. At the end of the day, likely that 10% baseline tariff rate isn't changing, but we're watching to see if the U.S. lowers those sector-specific tariffs, 25% on steel and aluminum, 25% on autos, and whether or not we get any glimpse into what pharmaceutical tariffs could look like for the U.K. as well.
Yeah, absolutely looking forward to getting that kind of detail. Bloomberg's Tyler Kendall there talking about the U.S., U.K., and a potential deal. We're also watching to see what the EU has to say about tariffs. All of that coming up in the next hour. We'll bring you President Trump's trade announcement from the White House. When it happens, this is Bloomberg. This is Open Interest.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
right, Tom, thanks. So, we're going to have Alex Steele's going to be joining me in just a moment for Bloomberg Intelligence. And what we're doing here today, President Trump is making an announcement, a trade announcement from the Oval Office this morning. So we will bring that to you. That's supposed to be happening in moments. And when that does, we will bring that to you, Alex Steele and myself. And then we'll have some reporting all around that and what it means for the UK, the US. And we also got some comments coming out of members from the European Union talking about trade and how they are talking some tough talk here before they enter negotiations or continue their negotiations with the United States. So this morning, the narrative is going to be trade, and we're going to be carrying President Trump's remarks from the Oval Office when he makes them. But right now, let's get a reset of this market. We'll go to John Tucker in a Bloomberg Business Flash. John.
And that, in fact, is one of the things that's pushing stocks higher right now. You have chip stocks leading gains with the Trump administration plan to rescind some Biden-era curbs on the chip makers. And then the news of the trade agreement with Britain, of course, as you say, we'll get to more details, hopefully, in just a moment. Right now, the S&P 500, 30 points higher, but is up 0.5%, 56.61 on the index. The Dow Jones Industrial Average up 203 points. That's a rise of 0.5%. And the NASDAQ 100 right now up 157 points. That is up 1.8%. It's the third straight year-over-year decline in sales for Peloton, reporting a 13% decline in revenue. Actually, not as bad as investors expected. It's exercise equipment sourced from Taiwan, so the tariffs eventually are going to have an impact. Right now, those shares, they are down 12%. Some of the economic news, labor productivity falling in the first quarter for the first time in nearly 3 years because of the decline in productivity. What businesses pay employees to produce 1 unit of output, that jumped the most in a year. You want to get somebody's attention on Wall Street? Just say bonus.
There you go.
Report today from the compensation consultant Johnson Associates says investment bankers, hedge fund employees, and asset and wealth management professionals are all poised to see lower year-end incentive pay this year, and they're blaming the economic turmoil caused by the U.S. trade war and geopolitical tensions. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, and we are being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisory impact. Go to commonwealth.com to learn about their consultative support and technology. Alex and Paul.
Hey, guys. How's it going?
Happy Pre-Friday.
Uncertainties stemming from global trade policy. Sound familiar?
There you go.
Yeah, and for context, right, remember in April, the company was also urging its employees to closely manage their expenses because they were grappling with supply chain volatility. And a reminder, it produces about half of its shoes in Vietnam, but also has third-party manufacturers in China.
Crocs are still a thing?
Okay. Here, yes, they're definitely still a thing. Do we wear socks with Crocs?
Oh, God, no.
No, right?
No.
My daughter says
Absolutely
yes.
not.
She told her
Absolutely
best friend that her mom doesn't like it. Her mom and her best friend's like, opinion schminions, whatever. You can totally wear socks with Crocs.
We don't do Crocs at all, do we, John? No.
Come on. You have like lookalikes. All right, fair
We just
enough.
go barefoot.
And all those rough feet there. All right, what else are you looking at?
Looking at AppLovin this morning, shares are up at the moment more than 16% now, so that's really picked up steam since the open, and that's because the AI-powered ad platform reported results that saw first quarter EPS and net income both beating estimates. They also gave an outlook for the second quarter and projected ad revenue beating forecasts too. I think the additional positive for investors is that the company agreed to sell its video games unit to a London-based studio because it wants to focus on its ad technology business. So good news all around for AppLovin. One of the few probably companies that seem confident in giving an outlook for the next quarter.
Anything else? What else we got?
ARM Holdings,
Oh,
Paul.
let's go.
Yeah, that is down today, more than 6% now at the moment. And we saw first quarter sales. Its forecast for that disappointing analyst, that's at $1 billion to $1.1 billion. I think it's within the range technically, but it's at the low end of that analyst forecast range. And the CEO, Rene Haas, blaming it mostly on the timing of new agreements with customers. And he's saying that the outlook is conservative, quote, to make sure that we don't overreach. So a reminder, ARM's tech is very key to chips that run most of the world's smartphones. And its guidance is very much in line with its peers in the chip industry who have had a strong start to 2025, but their forecasts are very cloudy due to the economic environment.
All right, Christine, thanks a lot. Really appreciate it. For more conversations just like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. So not only are we waiting for President Trump to discuss a potentially very big trade deal, the report has been is with the UK. Also taking a look at potential conversation with Europe. It looks like Europe is going to target U.S. cars, planes, and bourbon if President Trump won't do a deal. Joining us now is Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. How much teeth does this threat have?
Well, quite a lot, actually. This has been a carefully put together list, but it's actually not finalized. What it does now is they go out to EU member states, they discuss it, they change it. But it is really targeted at some of those kind of bespoke, marquee, US identified goods. Bourbon, as you say, being a big one. That was initially removed, but it's come back again. So they're clearly sending a message there. And some of these things are also produced very much in Republican heartland states. So it's quite targeted, really, about sending a message. And it comes against that backdrop. You're saying we're getting this US-UK announcement on trade, but the EU stuff's kind of bogged down. The negotiations aren't really going anywhere at the moment. And the messaging from the EU is they're dug in for the hard yards and they're prepared to put this stuff on the table and retaliate as needed. There's no great sense of progress between the EU and the US. So quite a message coming from this list today. Again, it may change a bit in the end, but they're digging in for a fight here.
A red headline just crossing the Bloomberg terminal. France pushes back on EU retail investor protection proposal. So we'll have further reporting on
I have no idea what that means.
No, but we'll see. We'll have further reporting on that. But it gets a red headline for the Bloomberg terminal. So, Roz, is it kind of unusual or just kind of serendipitous that on a day where we're going to have an announcement of a potential UK trade deal, we also have news coming out of the EU that maybe they're nowhere even near a deal? What does that say about the EU versus the UK here?
Well, it's a really interesting dynamic because at the same time, the UK is trying to draw closer to the EU, and Keir Starmer, the Prime Minister here in the UK, is trying to develop ties with the EU, including around trade and things like defence. So he's got a back. They're all most leaders that seem to be at the moment of juggling all these balancing acts. They want to have relationships here and there, but they don't want those things to collide. And so he's got to walk a line here where he needs to keep the conversation around the trade relationship with the EU alive, and this doesn't interfere with that. And so it's just showing the complex environment that these leaders are in. Again, he doesn't want Donald Trump to criticize him for drawing himself into the EU orbit. He's got to make sure whatever trade terms he comes to with the US don't collide again with what he's trying to do with Europe, because every trade agreement you do, and this one, by the way, between the US and UK, is more of a framework than specifics, but it can have a knock-on effect on all the other trade things you're trying to do. So you've got to keep all of that in mind. It's a very complex soup that we're operating in.
Hey, Ross, we had Professor Richard Portis from the London School of Economics in our studio earlier this morning, and the topic of Brexit came up, maybe because I raised it. But in the context of trade here, the UK versus the EU and the US, I mean, what's the feeling about Brexit
Remember when they were
days?
closer? They were closer
Yes.
before Brexit, and now they want to get closer?
I know,
Head
that's kind of what I'm thinking. So what's the call on Brexit today?
Well, it's interesting because Brexit seems irreversible. And certainly if you ran a referendum in the UK today, you may not get that much of a different answer. And part of the dynamic, again, has been the UK standing on its own, charting its own course on things like trade and defence. If they were in the EU, they would be able to do this separate arrangement with the US. But equally, Keir Starmer sees a lot of the UK's future being bound into Europe. So he's walking that line on it. I mean, it's interesting. Given Brexit, the UK can do that, but the UK also then has a trade surplus with the US, so perhaps a deal is easier to do. Equally for the US, the EU is a much bigger economic contender, and as a collective, arguably has a lot more economic clout. And so more significant in a way for the US and for Donald Trump would be to get some kind of understanding with the EU and avoiding it tipping into a really serious trade war. The UK one was possibly easy to do simply because of Brexit. So there you go, upside to Brexit.
Yeah, there you go. Real quick before we let you go, when we talk about negotiating with the EU, who are we actually talking about? And what country are we actually really talking about?
Well, it's all centralised through Brussels, in theory, and so that's the chief trade negotiator, Stefanik, and you've got also Ursula von der Leyen, who's the head of the Commission, running some of this. But as you say, it's a block of a whole lot of different countries, and they've got to agree, and getting them over the line is interesting. And so now this conversation around what's exactly on this list is going to be interesting to see if things come on or off. As a result, you've got some countries advocating a softer line with the US. You've got some pushing hard, including France and obviously Germany. Interesting to see the new chancellor due to speak with Donald Trump today. Where does that go? But as you say, corralling all those people together in the EU and keeping them on the one line is never an easy task.
All right, Roz, thanks a lot. Really appreciate it. Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa.
Well, I just asked the biggest question, which I think, where does bourbon come from? And I was unsure whether it's Kentucky or Tennessee, so I Googled it, and the AI overview says 95% of it comes from Kentucky.
I was going to say Kentucky.
Yep.
And if you're in the UK, why are you buying U.S. bourbon, a.k.a. whiskey, when you have access to Scotch whiskey?
Well, I think it's different. And they're probably buying both. We buy Scotch here. I'm a Jameson Irish whiskey guy.
I don't know anything about whiskey at all. I'm not a hard alcohol drinker, which is super sad because I'd like to be a whiskey drinker.
Yeah, you could be a fan.
I can aspire to that. I'm gonna aspire
We'll work on that, Paul.
But now I smell it and it's so scary. All right, so let's talk about what we're waiting for here, and that's President Trump announcing a major trade deal within the next hour, maybe. I don't know. We'll see. But we're waiting for it. We'll bring it to you when it happens live. So let's get a sort of preview on this with Enda Curran, Bloomberg Global Economy reporter. Regardless of what he actually announces, what's going to be the importance of how it's delivered and what is delivered, Enda?
So obviously we are waiting for the details, like you say, some skepticism around just how deep the agreement can be, despite the fact that the president is touting it as very comprehensive. But the bigger picture, to your point, is that it's going to be the first kind of trade agreement that the US has pulled together since the new President Trump launched this new trade policy. So people are going to be looking very closely at this. Does it offer a template? Are there the bones of a trade agreement with other economies here? And I think in particular, there will be a lot of focus on what happens the baseline 10% tariff. So if that changes, that could suggest, oh, look, the US is open to doing business all the way down the line here. But if that 10% stays in place, and you consider that the UK is an ally, and that the UK deficit with the US certainly isn't anywhere near the top of the list of so-called offenders anyway, then it might suggest that that 10% baseline is going to stay in place for everyone. And then you've got to consider what that might mean for prices or not. So a lot of focus, I think, on just, quite apart from the idiosyncratic UK details, what parameters this might set for the other deals that we do expect to come over the coming weeks and months ahead.
And how important is trade with the U.S. for the UK vis-a-vis, say, I don't know, the European Union? It's still got to be a huge part, right?
Well, for steel and the car sector in the UK, I think that's where they're looking for the biggest reprieve there. And there's also going to be reported by my colleagues some movement on the digital services tax both ways, so that could be seen as a boost for that side of things. But it's certainly not a negative for the UK economy. The UK, of course, have been ploughing their own course now for a few years, looking for trade deals with the rest of the world. But this probably isn't going to be the kind of free trade deal that typically would take years to negotiate. In fact, some of the reporting is suggesting it's kind of the parameters or a framework for something that they can keep working on in the years ahead, rather than the kind of dramatic bring down all barriers on both sides, classic free trade agreement that you might think.
What did we not like about trade with the UK? What was bad about it from a U.S. perspective?
I think, well, the UK, look, in terms of the list of offenders, if you want to look through the prism of President Trump's view on this, the UK was nowhere near the famous Dirty 15 group of the biggest trade deficits. The European Union is very much on that list. Your Vietnam's, for example, obviously China. So I think there were some issues with the UK, but in particular, again, it comes back to autos and steel, two of the favorite topics for the president. They were hit hard by his sectoral tariffs, and they may be set for some relief in this current agreement.
So, and how does, if there is some framework today announced with the U.S. and the UK, how does that impact the UK's discussions with members of the European Union?
Well, it probably doesn't. I mean, the interest in this agreement is more from the US side. As I was saying earlier, is this going to be a template? Where will there be signs that the US is willing to negotiate? What are the US red lines? All of that, because your Koreas and your Japans, think of your developed economies, they're all going to be watching this really closely to see what they can kind of mirror from the UK side to get around it, to get some kind of agreement near term with President Trump. I think the UK, your EU dynamic is a different story and probably won't necessarily be drawing too many parallels from this one. The bigger picture is what this says for potentially other deals with other US trading partners in the weeks and months ahead.
All right. Well, we're looking forward to it. We will bring that to you when it crosses. And thanks so much, Enda Curran. He heads up all our economy coverage for the global economy for Bloomberg. We will bring it to you live, as we mentioned. We will get the details for you, and we'll have instant reaction from our global team of reporters and analysts.
Yep, absolutely. So, I mean, I think it feels like the market's saying any news on this front, any negotiations on this front with our major trading partners on the margin is just good news relative to where we were on Liberation Day.
Right. And even if we keep the 10% tariffs, at least as a baseline, that then the market can start calculating.
Yep. And I see just a little bit of stability in the U.S. dollar after its 7.5% slide. We have the Bloomberg Dollar Index is up slightly.
All right.
We will stay on top of that for the next days as we look at the U.S. dollar relative to major trading currencies. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg News, with this Bloomberg Business Flash being brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. So it is the trade optimism for now lifting stocks. Investors are hoping for a U.S.-UK tariff pact. This would ease tensions and could also, as Enda was telling us, serve as a blueprint for negotiations with other countries at this point. S&P 500 is 26 points higher. That's up 0.5%. 56.58 on the index. The Dow Jones Industrial Average is up 180 points, and the Nasdaq 100 right now up 123 points. That's a rise of 0.6%. Francis Donald at RBC, meantime, isn't expecting clarity on the U.S. economy until later this year.
The data right now is still reasonably okay. The problem is, where is it going next? And the balance of risks is towards higher inflation and higher unemployment.
ARM Holdings delivered a disappointing sales forecast for the current quarter, and that is stoking concerns about tariff-related slowdown for the chip industry. And among the best performing stocks right now in the S&P 500, Warner Brothers Discovery, to quote one Paul Sweeney, desperate but needed. CNBC was reporting they're moving towards splitting the company. Also on the move today, Match Group ending its relationship with 13% of its workforce. They're cutting about 325 jobs. Its biggest brand is Tinder. Match is also launching new products, including a double dating feature. How that's going to work. Anyway, Match Group shares.
Oh, that's actually super cool.
What do you remind me what double dating is? When you go out with another couple, or you date two people at one time?
No, first one.
Oh, okay.
The other one's multiple dating partners.
Okay. At the same, anyway. We check the markets for you all day long. Right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Paul and Alex.
All right. Thanks so much, JT. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks, and we tap our amazing resources outside of Bloomberg as well. We are waiting for President Trump to deliver a major trade announcement. We'll bring that to you live as it happens. In the meantime, Brian Jacobson is chief economist at Annex Wealth Management. He joins us now. Brian, major trade announcement. On an economic level, like, what do you need to see to start rejiggering models for yourself?
Yeah, I think that I would actually need to see a trade deal with a different country besides the United Kingdom. If you think about the U.S. has a trade surplus with the United Kingdom, so based on the math that was unveiled in the Rose Garden, it would actually make the argument that the U.K. should be tariffing U.S. goods instead. And if you also think about what are the main imports from the United Kingdom, you have luxury cars, pharmaceuticals. Those are likely to be subject to separate sectoral tariffs. So maybe if there's something on that front with autos, steel, pharmaceuticals, that's really what I'd be looking for, because otherwise I'm not really viewing a trade deal with the UK as being a type of blueprint for other trade deals that might come.
How about a trade deal with the from the EU, the European Union, because they're out with some pretty tough rhetoric today. That likely to be a little bit more difficult?
Probably more difficult, but also more important. It's larger as far as a trading bloc as itself, plus the trade deficit that we have with them. So it seems like that might be more of a blueprint that you could look at as far as what we could have with Japan, with China, other trading partners, those basically that we run a deficit with, which seems to be what President Trump's real focus is. And maybe that's actually why the UK is first, is if we have a trade surplus with them, it's pretty much, okay, things are fine, or we just re-ratify what we had, what was the status quo pre-Liberation Day, maybe with a few tweaks here and there. And so that was almost like the low-hanging fruit.
Mm-hmm. Well, but the 10% blanket tariff, it feels like that will also be interesting to see if a deal goes lower than that. But if it doesn't, and that's the base case, and we're going to keep it there, does that truly affect U.S. growth or global growth in a meaningful way?
Yes, I think it does. That if we see that 10% is the line in the sand, that he's not going to move on that, even with countries where we have a surplus with them, it does suggest that he's going to try to make good on what he campaigned on, which is 10% tariffs, 60% on China. And then I think actually the market might be relatively okay with that. It wouldn't be great, but at least if that is what things are going to look like when things are all said and done, I think that the market is going to be able to at least adjust to that without having to revisit the April 8th, April 9th lows that we saw.
Do you have a recession in your forecast, Brian?
You know, it's right now, really the conventional wisdom is it's a coin flip, but is it a balanced coin or what are the odds of it? And I would actually say probably unlikely to have a recession, because I do think that we will ultimately get to a worst case scenario of like 10% universal tariff, 60% perhaps on China, in which case, based on the math that I've looked at, different models that I run, would suggest we're not going to get that, you know, traditional 2 quarters in a row of a decline in real GDP. But that's not to say it's going to be without pain. I mean, just think about the last 2 years. We had the manufacturing sector in a recession, but the service sector was not. We could really revert back to that type of scenario, so where you might have more industry-specific or sector-specific recessions, but not necessarily a broad-based recession.
Some breaking news for you. The Telegraph is reporting that the U.S. will cut tariffs on UK-made cars to 10%. So as many were pointing out, that the U.S. has the trade surplus with the UK, which makes this a very different kind of scenario. So the U.S. cutting tariffs on UK-made cars to 10%. That's according to the Telegraph. Okay, so continuing on with the economic points, is that the Fed yesterday seemed to say at the end of the day that everything was fine, that they're worried, and there are a lot of headwinds potentially, but that currently we're all fine. Do you agree with that?
Well, true. Yeah, currently we're fine in terms of the economic data. I don't think people are feeling fine, right? It's kind of one of those things where if you're feeling a little ill, there's early signs of it, and you wonder what's the trajectory here. So things might be fine now, but what's the vector? What's the direction that we're headed? And that's not fine. And that was reflected in the policy statement where they said the risks have increased to their trying to achieve the dual goals of maximum employment and stable prices. But what I thought was really interesting is that they said that while the risks have risen, they still are balanced, where it's almost as though they're not really at the point where they feel like they need to prioritize talking about one part of their mandate over another. And I think that's really the key takeaway that I had was risks have gone up. So we're fine now, not likely going to be fine if we maintain this current trajectory. But as today is going to prove, that can change on a dime.
Brian, it looks like most Americans have a job if they want one. They're kind of spending money if they want to. Is the consumer as solid as the data suggests?
I don't think so. Really, when we're listening to the earnings calls, reading the wonderful research that you do there at Bloomberg Intelligence, that's a tremendous resource, is it really does seem like, you know, this McRecession idea. So McDonald's reporting that it's not just lower income individuals that are feeling some pressure, but even middle income individuals. So it still remains a very topsy-turvy, almost a top-heavy consumer environment, which could be a topsy-turvy kind of environment going forward, because if you have it where it's primarily the top 20% of households by income are driving most of the consumer spending, that is not a healthy environment, right? It's just like in the markets. You don't want a top-heavy market where just a few names are driving things. You want it to be much more broad-based, and I think the same thing applies to the economy, consumer spending. There are plenty of signs that if you're not in that top 20%, that there are stresses. People are experiencing anxiety over whether or not their jobs are secure. And this isn't going to resolve itself overnight or even over the course of a few weeks. There's this bullwhip effect, right? Which is the idea that if you have a small change along a supply chain, it can have an amplified effect over a longer period of time than what you anticipate. So you stop shipping from China to the United States. That's going to it's not a light switch where you can just flip it on and off and everything is fine.
So here's an interesting headline, guys. President Trump officials apparently are mulling fast-tracking deals with Gulf wealth funds. Couple things about that. The first trip that Trump is taking overseas, irrespective of the Pope's funeral, is to the Saudis. And Saudi Arabia is pumping more oil into the market, which incidentally is lowering oil prices.
Okay.
I'm not saying it's a one-for-one, but you have to think of these different headlines as they come. And this is like and some of the rhetoric when OPEC decided to keep pumping more oil despite lower prices and question marks about demand was in part because there were lots of other agreements that the Saudis could make with the U.S. That they needed to make in order to do that. So helping President Trump get lower oil prices might have been part of that. Unconfirmed speculation, but that's kind of in the zeitgeist around that. So Trump officials mulling fast-tracking deals with Gulf wealth funds. Okay, before we let you go, Brian, what's going to be the most important thing now that you're looking at as we sort of roll out potential trade deals, as we got through the Fed? What's next for you?
Sure. I think that the big thing is what happens in Switzerland between the United States and China with that discussion. But outside of the tariffs, it's really just looking at how is it that businesses are continuing to adapt in this environment. We're seeing it within sectors as far as any given sector, the way in which different companies have their business models and what their supply chains look like. A famous example, right? Pepsi versus Coke, where Pepsi has a lot of their formulation coming out of Ireland, whereas Coke doesn't. So they have very different exposure to this tariff situation. And so I think that really what I'm looking at going forward isn't necessarily about picking the right sector. It's what are the securities within any given sector to respect the diversity of business models within the sectors for making investment decisions.
Brian, we got initial jobless claims today. Kind of came right in with expectations. 228,000 is kind of a number we've become kind of used to here. So we're not seeing any real cracks yet in the labor market, are we?
No, not so far. But, you know, these cracks, they can sometimes break open pretty quickly. And I think that's really what I would worry about when we look at the jobs number from March. 177,000 non-farm payrolls was great, but a lot of that healthcare, of course, but then transportation and warehousing. To what extent are we going to see a big drop off in that part when we get the April numbers or when we get the numbers in June here? And so I'm thinking that really these cracks, they're not necessarily going to just suddenly start kind of forming. It might actually be more of an event where we suddenly see 177,000 1 month for non-farm payrolls, but then suddenly sub 100,000. Not necessarily negative, but I think you could see a big swing there. So those initial jobless claims, yeah, so far it's looking great, but those can get pretty ugly pretty quickly.
All right, Brian, really appreciate it. Brian Jacobson joining us from Annex Wealth Management's chief economist there. Update you on those headlines. Telegraph reporting the U.S. is going to slash tariffs on cars like Range Rovers and other UK-made cars to 10% as part of this potential deal. The reduction will form part of a 12-month, quote, temporary agreement. In return, according to the Telegraph, the UK and U.S. will slash tariffs on beef imports and exports close to zero, although Britain will still not allow hormone-treated beef into the UK as part of the deal.
Really? Okay. Do we allow that, I guess?
Yeah, we don't care. We're good. But below that 10%. So we're getting there, going to zero. So you can get that maybe on a product-to-product basis. What else do they make? They make Range Rovers? What else? Do you know?
Jaguars?
Jaguars.
Well, I thought that was an Indian company that was
it's an
making
English
those
company.
brands now.
No,
Okay.
English company.
All right.
Yeah,
Shows
I mean,
you
that's
what
what the royal family drives around in the Jags. Jaguar, as I say.
And the Range Rovers.
Yeah.
You know.
Good stuff there.
All right, we're going to keep you updated. We're still waiting for President Trump to unveil this major trade agreement, and we'll talk more about the economy with Bloomberg Economics. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages, they are all higher right now on the trade optimism. There is hope that the U.S.-UK trade deal is going to be a template for other countries to make a deal. And we're still waiting for word from President Trump at this hour. The S&P 500 up 23 points. That's up 0.4%, 56.53 on the index. The Dow Jones Industrial Average up 177 points, and the NASDAQ 100 right now is up 117 points. You have 8 of the 11 major industry groups in the S&P 500 pushing higher. And right now, energy, the best performing group, as oil tops $59 a barrel. The Fed did keep interest rates unchanged at the policy meeting yesterday, and Yelena Shaletova at the conference board says at their next meeting in June, the Fed is going to have to confront stagflation.
When they meet in June and publish the next summary of economic projections, we will see risks to both of their mandates rising quite significantly and perhaps even higher than they had during the 2022 recession scare.
And some of the shares on the move. Here's one of the standouts, down 20%. Shares of Krispy Kreme, the donut maker, says it is no longer to pay a quarterly cash dividend. The company also said it doesn't plan to launch in any more of the McDonald's restaurants. Beer news, Molson Coors cutting its outlook, weak beer demand. Just coming to my neighborhood. Earnings for the first quarter also missing the average analyst estimate. And then the handbag maker Tapestry raising its annual outlook again. They're shrugging off broader concerns about worsening consumer sentiment, the trade war. Coach is Tapestry's biggest brand. Still seeing strong demand for items like the Brooklyn bag. I've never heard of this. It retails.
Birkin bag?
No,
Brooklyn bag. This is Coach.
No. We're in like this is affordable luxury, and then there's Birkin.
Okay.
So the Brooklyn bag from Coach retails for $4.95, which I guess is just like a mere pittance.
It's literally like a penny compared to the Birkin. Like you can go up to like hundreds of thousands of dollars for the Birkin. Yeah, if it's made of like lizard and stuff, absolutely.
Oh, dude, do they have to kill the lizard for that?
Yes,
or wait
of
for it to
course.
shed its? Okay.
You know what? Actually, I have no idea. So I either one. I don't want to give them a bad name. No. The Michael Kors. That's an affordable luxury kind of sitch.
All right. So this Coors beer, and I didn't know they made a bag too.
So it's
Coors
Molson
beer.
Coors. I guess Molson Coors.
Molson Coors.
And then Tapestry and then Coach.
Yeah.
That's how we did that whole
We
thing.
got it. Anyway,
All right,
we
got there.
Check the market's view all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg business. What is your bag anyway? You don't have one.
Oh no, I like these Italian-made bags. Don't say anything yet. That go on sale for super cheap at Yoox, YOOX. You can get like a $500 bag for like $80.
They sell those on 14th Street too, the corner of Broadway.
Yeah, but they'll fall apart in 4.3 hours.
Okay.
All right.
So it's quality there.
Yes, exactly. Quality. All right, JT, are we done here? Are we done with the
We're
bags?
done.
Okay. Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. We are also awaiting President Trump announcing a major trade deal. Obviously, there's been tons of leaks about what to expect. The latest is that the UK will cut tariffs on UK-made cars to 10%. So we're talking Range Rover, Jaguar. There will also be some tariffs that go below zero for some food items like beef. We're going to bring you all that as it crosses. Stuart Paul joins us here, U.S. economist with Bloomberg Economics, to join us on all things economics plus Fed. First off, to set the stage for us, what did you make of the Fed yesterday?
Well, we didn't get a ton of news. I think that the most material read that we could get from the Fed is that Powell and the committee itself, in its press statement, completely faded the negative Q1 GDP print that we got. Okay. And why I think that's material is because when talking about tariffs, in every previous public statement, in his congressional testimony, Chairman Powell is typically very quick to say that in the 2018 round of tariffs, the Fed actually found itself cutting rates because of growth concerns, not hiking rates because of inflation pressures. So you would think that maybe the Q1 negative GDP print would weigh on his mind, but instead they completely faded the print. They're anticipating upward revisions, and for that reason, we think that the Fed is going to remain on hold probably only cutting rates once in the fourth quarter as unemployment rate continues rising.
Really, only once?
That's right.
That's no fun. Oh, man, I need more rate cuts than that. I need to refinance the mortgage on the Jersey Shore compound. Labor market seems pretty good. I mean, we got the initial jobs claims today. They kind of came right in with a 2-handle like we kind of expected to see.
Yeah, the jobless claims are relatively steady. Continuing claims also relatively steady, declining just a touch. I think that's probably the most material thing. I'm not even looking very much at initial claims just because they have been so predictable. The spike that we saw last week was because of a peculiarity in New York where teachers can file for claims over Easter. So the spike that we saw last
week,
week,
regular Easter break and they can file.
That's right. That's right. New York has. So if you look at the data, it's all just a spike in New York from last week. So what we saw today, it's really just everything is totally steady around 225,000 initial claims.
So Doge, has Doge been in the numbers at all?
Not really materially
so the
at all.
Doge even happened?
If you're looking at the capital region,
Doge even happened?
If you're looking at the capital region, if you're looking at claims filed by former federal employees, it's not showing up really at all. We do know from, even just from what Doge is announcing, what they've actually been able to find and cut in terms of fraud, waste, and abuse has been far less than the trillions that was promised. So has it really been happening? Not in a way that's showing up in the aggregate economic data.
Going forward, it seems like the question for the Fed is, what blinks first, inflation or the unemployment rate? In your guys' models, what does blink first?
We think it's probably going to be the unemployment rate.
Oh, okay.
Yeah. So this is what's really going on in the interim, right, is this balancing act. You have this two-sided risk where you perhaps have recession risk as a consequence of bare shelves. You have stalled out investment plans. That's going to lead to slower hiring. That's going to lead to higher unemployment. On the other side of that is tariff risk boosting the potential for inflation. But the question is whether that can get passed along to consumers at all. Consumers are already stretched thin. You already see credit defaults rising. You already see the savings rate especially low, around 4.2%. So we don't think that tariffs are going to end up leading to materially higher prices, at least not in the immediate term, in the near term. And so inflation isn't going to be the concern. In the near term, it's just going to be the balancing of risks, and then ultimately it's going to be the cooling labor market that leads the Fed to cut rates.
You guys have a recession in your forecast here?
Well, so we see the unemployment rate rising to nearly 5% at the end of the year. That would typically correspond to a slowdown that folks would call a recession. But we don't have an outright recession. We don't see 2 consecutive quarters of negative GDP growth. Some of that is just because of the composition of growth. So, for example, you saw material drag from net exports in the first quarter. That's going to lead to a bit of a rebound in the second quarter as the effective tariffs take place. It's just difficult for the contour of growth to show that of a recession because of its composition.
As we are waiting for a big trade deal, quote unquote, to be announced, what are the folks at Bloomberg Economics looking for in terms of details?
So we're sharpening our pencils. We're looking at what the Telegraph has been reporting. It looks like it's going to be a carve-out for autos. I'm thinking about the average effective tariff rate on the UK, which right now is about 10%, 4 percentage points of which are on autos. If you cut the tariff on autos by about half, average effective tariff rate on the UK goes down to about 8%. And so that's helpful for folks in the UK who are charting out their growth course. But ultimately, the story in Europe is one of just how much stimulus they can get, how much space does Reeves have for a budget, how much growth can they actually chart. UK should be one of the easiest trade deals for the U.S. to negotiate, along with Australia. So anything, if it ends up just being an industry-level thing like autos and steel, frankly, it's a little bit disappointing, given just how easy it should be for the U.S.
Snow's melted. What do you do now?
A little bit of fly fishing. It's already getting a bit too warm and water levels are retreating, but stocking of the rivers in the Catskills happens around April, so there is still plenty of trout.
I had no idea where you were going with that, and I was like, wait, is this a trade deal? Is snow included? But I got you.
He's like this crazy skier dude, ski patrol up somewhere up in...
And then now you fish when there's no skiing.
That's right.
Yeah, I mean,
you gotta try saltwater fly fishing too.
I did. I used to go on the Long Island Sound a zillion years ago, but not so much anymore.
Yeah. He's up in the mountains somewhere.
Wow, the things you learn.
Stuart Paul, U.S. economist, crazy ski dude. He's a U.S. economist for Bloomberg Economics.
It's his second title.
Joining us live here in our Bloomberg Interactive Brokerage studio here. Not calling for a recession, but boy, if employment gets down 5%, 5%. That's a number we haven't seen in a long time. I don't think people would like that. So coming up, I got Elliot Stein, Stanford. He's a lawyer. I don't know what to talk about.
Go to a very, very quick form of approval, and there won't be any red tape. Things are going to move very quickly both ways. The final details are being written up in the coming weeks. We'll have it all very conclusive, but the actual deal is a very conclusive one. We think just about everything's been approved. So good for both countries, and we'll also receive new market access for American chemicals, machinery, and many other industrial products that weren't allowed, and they'll end up getting products that they'll be able to price, and if they like them better and we make great products, they'll be buying those products, but they were not available in the UK. Furthermore, in a historic step, the deal includes plans that will bring the United Kingdom into the economic security alignment with the United States. That's the first of its kind. So we have a big economic security blanket, and that's very important, and we feel very, very comfortable with that because it's been a great ally, truly one of our great allies. I mean, a lot of people say our greatest ally. I don't want to insult people by saying that, but I can say it's certainly one of our greatest, and right at the top, and they're the first one we're talking about. And by the way, we have many meetings planned today and tomorrow, and every country wants to be making deals. And we have a meeting, as you know, Scott will be going over to Switzerland on Saturday, and that'll be very, very interesting. Let's find out, but I think they want to make a deal very badly too. Both countries have agreed that the economic security is national security, and will be working together as allies to ensure that we have a strong industrial base, appropriate export controls, and protections for key technologies and industries like steel. Steel is a big factor. Both countries will become stronger with steel and things necessary for military. You know, we used to build ships and other things literally at a level that nobody's ever seen, and we haven't, we've eased up, and I would say that the UK certainly eased up, but now we're going to be uneasing both, and we work together. Once again, I want to thank Prime Minister Starmer. He's been terrific for his partnership in this matter. The special relationship and external bond, it's really an external and an internal bond between our two countries will soon be stronger than ever before, and we really do. We have a great relationship. I want to just say that the representatives of UK have been so professional. And it's been an honor doing business with all of them, and in particular the Prime Minister. And I'd like to introduce him now to say a few words. Mr. Prime Minister, please take it away.
Thank you, Mr. President, Donald. And this is a really fantastic, historic day in which we can announce this deal between our two great countries. And I think it's a real tribute to the history that we have of working so closely together. Can I pay tribute, Donald, to your negotiating team as well, particularly Howard and Jameson, who've done an incredible job, a very professional job, and my team as well. Two negotiating teams have worked at pace now for a number of weeks to bring in this deal today. Really important deal. This is going to boost trade between and across our countries. It's going to not only protect jobs but create jobs, opening market access. And as you say, Donald, the timing couldn't be more apt, because not only was it 80 years ago today that victory came for Europe after and at the end of the Second World War, but of course on that day the UK and the US stood together as the closest of allies. And Donald, I think even down to the hour, because you may or may not know that it was about this time of day, exactly 80 years ago, that Winston Churchill announced victory in Europe, and that led to great celebrations across Europe, across America, but particularly in the United Kingdom. Literally people going out into the street, putting bunting up, going up to the palace. And so to be able to announce this great deal on the same day, 80 years forward, almost at the same hour, and as we were 80 years ago, with the UK and the US standing side by side, I think is incredibly important and makes this truly historic. That close relationship has endured over those 80 years. As you know, Donald, when it comes to defence and security and intelligence sharing, of course, there are no two countries that are closer than our two countries. And now we take this into new and important territory by adding trade and the economy to the closeness of our relationship. It is built, as you say, on those notions of fairness and reciprocal arrangements. We've always had a fair and balanced arrangement between our countries. This builds on that, hugely important for sectors like car manufacturing and for steel and aluminium and so many others. And yes, we can finish hiring out some of the details, but there's a fantastic platform here, including, of course, on the tech side, where I think I'm right in saying we're the only two Western countries with trillion-dollar sectors when it comes to tech. And in the end, it comes down to, as you say, Donald, economic security is national security. On national security, we've been absolutely the closest of allies for so many years, keeping the peace through that close alliance, that friendship. And now we add to that this deal on trade and the economy. And I want to thank you for your leadership on that, Donald, and for the way in which your team have negotiated this. And I'm so pleased that we've got this deal, we've finalised it, and we've built an incredible platform for the future. So thank you so much. Donald, I'm now going to go and do a press conference. I think you have your press in with you. But on the details, I think if you've got Howard, we can deal with that through one of my team.
That's great. Well, Mr. Prime Minister, thank you very much. It's an honor. We're going to have a continued, maybe a better relationship than ever before. You know, I don't know if the media knows, but the U.S. and UK have been working for years to try and make a deal. And it never quite got there.
Yeah.
It did with this Prime Minister. So I want to just congratulate you.
Well, with this President, this Prime Minister, we've managed to achieve what many people have tried to achieve for many years.
Right.
And I'm really pleased. And it feels completely historic and on a special 80-year anniversary as well. So, Donald, thank you so much. It's really good to have got this deal over the line. Tribute to both teams, tribute to our countries, and tribute to your leadership.
Thank you. Well, it really is a great thing. And you go do your press conference, and I'll see you soon. Maybe speak to you later. But thank you very much. An incredible thing. I can't tell you that for so many years, even as I sat, everybody talked and talked and talked about a deal with, it just seemed like a natural deal, but it was not done, but now it was done with us. So I feel very proud to have been a part of it. Keir, thank you very much.
Thanks, Donald, and we'll speak again soon.
Very good. So long. Bye. Why don't I do this? Why don't I have our Secretary of Commerce, Howard Lutnick, give a little description of the deal pretty quick, and then the good side, the very nice side, we'll be speaking about it also, maybe, from so you get a pretty equal. I think it's a very, it's just been a deal that was, we thought, very complicated. It became very simple. It's opening up the country that we really didn't have the kind of access to that I would have thought. I was surprised. I think it's why the deal never got done before. It was, they've been working on this deal for 25 years. And we got it done, and we got it done. Really, it's going to be great for both countries. So, Howard, if you could go, and then somebody else, you may have, you'll pick whoever you want who'd like to do it. I have a feeling you're going to do it, right? So you guys go ahead, and then we'll take questions right after that. But I think you'll get a pretty good understanding of how big it is. It's a very large deal, very big deal. And Howard, go ahead.
So the UK is the 6th largest economy in the world and the 4th largest that we export to, right? So it's a huge market, a top 10 market. If you remember Liberation Day, they were at 10% because we have balanced trade with the UK, right? They say they have a surplus, but of course that counts gold bullion, which is, so let's just call it balanced trade. So how do you open up a market in balanced trade? People think it's impossible. They've always thought it was impossible until President Trump came on the scene and changed the way things work. So here's what we've got. We've opened up new market access, ethanol, beef, machinery, all the agricultural products. They've agreed to open their markets, and that will add $5 billion of opportunity to American exporters. So the question is, why would they do that now? Because they've never done it before, and we still have our 10% tariff on, which will produce $6 billion of revenue for the United States. So the idea was, how do they keep their jobs, protect their economy, and do the best for their people while opening the market for us? And the way is they studied it, their team was exceptional, and they tried to figure out the markets that they're importing from other people and try to send them over to America. So why were they always favoring others and not us? And what they've done is they've found the ways to do that so that we have new access, right? But the UK workers are protected, and that was the balance. So we did a deal with them in automobiles. And if you're not building here, we charge you a 25% tariff. But the president, and by the way, I want to make this clear, while Jameson and I worked hard, this was the president's deal. And people think, oh, that's not the way it works. If you got to sit next to him, I have the best deal maker to my left. And if you don't think that we take advantage of him calling the prime minister and getting that deal done, you don't understand who's the president of the United States. So he's the closer. He gets deals done that we could never get done because he understands business, he understands deals, and that's why we're here today. So he agreed they could send 100,000 cars into America and only pay a 10% tariff. And that protects their car industry. And remember, we do 16 million cars a year. So this is only like 0.6%. But for the UK auto people, this is tens of thousands of jobs that the president agreed that he would protect for them. So he made that deal, right? Then steel and aluminum, right? Their steel business has been destroyed like everybody else has been destroyed by people dumping steel into their markets. And British Steel had announced it was closing down. So the British government, as part of this deal, nationalized British Steel, and they're going to match the kinds of models we do. They'll put tariffs on, they'll put quotas on. They want to do it with America so they can be part of the resurgence of steel and aluminum in America, and that saves them, again, thousands and thousands of jobs. So if you go step by step, aero and commercial, planes. They sell Rolls-Royce engines to Boeing. We've agreed to let Rolls-Royce engines and those kind of plane parts to come over tariff-free. And what you're going to hear today is there's going to be an announcement in the UK that they are buying $10 billion worth of Boeing planes later today, but I'm going to let the name of the airline announce it because that's theirs to do. But part of this deal was always to do it together and to do it strong, and you can see the numbers on this board. Everything about this board works exceptionally well for the United States of America. It lays out the plan that you can work with us in autos, you can work with us with aero and commercial, you can work with us in pharmaceuticals if you have a supply chain that is secure and protected in national security. So we feel really good about the deal. You've heard the Prime Minister, he feels really good about the deal, right? And we started at 10% and we ended at 10%. And the market for America is better. And this is a perfect example of why Donald Trump produced Liberation Day. People don't understand he gets things done in a matter of time. This would have taken Jameson and I 3 years, maybe. And instead, we got it done in 45 days, certainly, because we work for Donald Trump. So, Jameson, my partner in all this, maybe Jameson, you'd like to talk a little, and then we'll turn it over to the UK.
Sure, happy to do that. Everyone has great remarks. I just have to echo the President and the Prime Minister when we talk about VE Day. This is something we've been waiting for decades, and there's no more appropriate day to do this. And when we step back and we look back a few weeks from now or months from now or years from now, we're going to look back at this day and better appreciate the significance, I think. And I'll just say as well, in terms of negotiating, I mean, the UK negotiators, you know, we've got one right here, did an incredible job, right? This is why you win wars, right? When you act like this, and the ambassador, he knows more about trade than a lot of us here, based on his background. And I would say on this deal, Mr. President, what we've shown is that it is time to change the way we do trade. People said we couldn't do a global tariff. We did a global tariff. They said no one would want to deal with us. People want to deal. They said no one would give offers. You saw that stack of offers I showed you yesterday, all those countries. Said we wouldn't get deals, and here we are with the deal with the 6th largest economy. We've agreed to have fair and reciprocal trade, and we've done it in record time.
Thank you very much, sir. Great job.
Thank you, sir.
Mr. Ambassador, please. Well, Mr. President, thank you very much indeed in hosting us this morning. And thank you very much indeed also for that very typical 11th hour intervention by you with your phone call to the President, demanding even more out of this deal than any of us expected. So thank you for that. The Prime Minister was delighted, obviously, to take that call later tonight. But you took it to another level. And I think the point I would make is twofold. One is that if we're going to rebalance and rebuild international trade in a way that serves all our interests, then we're better doing that together than separately and apart, and that's what we're on a mission to do. But secondly, you've done what you said you would do. You said to the Prime Minister when he came and we visited in the Oval that you would do a good trade deal with the United Kingdom, that you would do it at pace, and that we would be first. And you have delivered that. You know, you've been true to your word. So thank you very much indeed for that. For us, it's not the end. It's it's the end just of the beginning. I mean, there is yet more we can do in reducing tariffs and trade barriers so as to open up our markets to each other even more than we're agreeing to do today. But it also provides us with the platform, the springboard, to do what I think will be even more valuable for both our countries in the future, and that's creating a technology partnership between the United States and the United Kingdom so that we can harness science and technology in order to create future industries and future jobs, and to do that together in the way we work so closely already in the national security and defense area. We can just take that to yet further areas of science, enterprise and endeavor. So we're looking forward to doing that in the coming months.
You've launched us extremely well today. It just, in my view, as the Prime Minister has said, just shows what two countries who trust each other, who are confident in each other and are familiar with each other can do, not just for ourselves, but for those, the rest of the world, who need to benefit from a bigger and better international trading system.
Thank you very much. It was beautifully stated. What a beautiful accent. I'd like to have that accent. Thank you.
My mother would be proud.
Thank you very much. Any questions?
James Matthews from Sky News.
Yes.
Can I ask, why Britain and why now? And you've described this deal as a full and comprehensive deal, and yet we've just heard from Mr. Mandel said it's the end of the beginning. Clearly, there's much more work still to do. With respect, are you overstating the reach and significance of this deal because you're a president who needs a result at a difficult time?
I think that it's a great deal for both parties. It's for us. We're opened up. I didn't know how closed it was. Quite closed, the market, as you know, the UK, and it opens up a tremendous market for us, and it works out very well, and a lot of assets. You see the chart, and those are tremendous assets. But we've been trying, and when you say why us, meaning your country, we've been trying for years, and they've been trying for years to make a deal, including when I was in the, first term. It would always be people talking, but they weren't getting it done. But for 25 years before that, they were trying always to make a deal, a very significant deal. I actually, until I looked at the numbers, I didn't realize this is a very conclusive deal, but we think we can grow it even from that. But this is a maxed out deal, not like you said it. You said it really incorrectly. This is a maxed out deal that we're going to make bigger, and we make it bigger through growth. But we have tremendous assets involved. I was surprised to see how big your country is in trade, actually. One of the biggest in technology and so many other things. It's agriculture. I really didn't know. It's depending on your definition, it's from 4 to 5 to 6. That's pretty big in the world. So I was very impressed by that. But we're going to take it to new levels. It's a very big deal right now, but I think it is going to grow just of its own volition. It's going to grow, and over time there'll be changes made. There'll be adjustments made because we're flexible. We'll see things that we can do even better. But it's very conclusive, and we think everyone's going to be happy, and the people of your country are going to be very impressed with the result, and they'll be able to buy from more people. They'll be able to price things differently. They'll be able to get some products that aren't available to them now that we make better than anybody in the world. And it's just something that it's a great thing that it came together. It's so nice because we have many countries want to make a deal, and many countries are very unhappy that we happen to choose this one, to be honest with you. But it's a long time, our oldest ally, or just about. I guess a couple of people claim that too, but let's put it right at the top. I think it's going to be something very special for UK and special for the United States.
Mr. President. Thank you, Mr. President. Reagan Reese with the Daily Caller. How close are you to more deals, and when do you expect the next to be announced?
Well, very close. We have numerous deals. I know Howard's going back. As soon as this is finished, your press conference, he's got numerous. And Scott, who's right over here, who's fantastic, by the way. You were great on television this morning. I watched you. That was very good. You gave them a little lesson in the world and economics. But Scott's going to be going to Switzerland, meeting with China. And, they very much want to make a deal. We can all play games. Who made the first call? Who didn't make it doesn't matter. It only matters what happens in that room. But I will tell you that China very much wants to make a deal. We'll see how that works out. Every country throughout the last 40, 50 years has literally ripped off the United States on trade, on military, on protection, on all the different things. And we are now making fair deals. And in this case, it's great because we really weren't very much involved. You have the European Union, which is, I think you made the right decision years ago. I don't know if you remember, I was opening up Turnberry the day that you were voting. And they asked me, would it happen or would it not happen? I said, no, I think they're going to go their own separate way. I think it's better for them and they did. I think it's going to end up being a very smart decision. But a big part of that decision was always that you'd be able to make a deal with the United States, and they were unable to do that. But now they made it, and it's a tremendous, it's very important. That was always a big part of your decision on Brexit, and they were never able to make that deal. It was a tough one, and this one it's amazing with time. This one just went very smoothly, went quickly and smoothly, and a lot of common sense, as I like to say. There's tremendous common sense, but it's going to make your country much bigger in terms of trade, and it's going to make our country much bigger in terms of trade, too. Yes, sir.
Thank you. For
the behind you.
Oh, yeah, Tom Baker with the BBC. Thank you, Mr. President. You mentioned meat.
You're with who?
The BBC.
Oh, good. Very nice.
Thank you. You mentioned meat and beef exports. The UK currently doesn't accept American beef because of its own food standards. Are you calling on the UK to accept all American beef and chicken products?
Well, I think they'll take what they want. We have plenty of it. We have every type. We have every classification you could have. As you know, Bobby Kennedy is doing a tremendous job, and he's, I think, probably heading toward your system with no chemical, no this, no that. I think we're heading that way. It seems to be. And but we have that also. So we're a very big country. We have a lot of beef. We're a very big country, so it'll be great. Yes. Yes.
You want me to jump in?
Yes.
Let's talk about American beef really quickly, and it can't be understated. I'm Brooke Rollins, by the way, how important this deal is and what this means to American farmers and ranchers. Specific to the beef, this is going to exponentially increase our beef exports. And to be very clear, American beef is the safest, the best quality, and the crown jewel of American agriculture for the world. So I think a really important part of this deal isn't just the ethanol reducing of tariffs from 19 to 0, which for our row croppers is a huge deal, but also for beef. And as we move forward, I know our incredible trade team is looking at all of the meats, all of the produce, really all of our agriculture exports. And I don't know if there's an industry that has been treated more unfairly and has suffered more than our agriculture industry. So we look forward to, I'll be in the UK on Monday, talking to my counterpart over there for next week, and look forward to moving that out across the country. The president is
I think we can say that we have the best in the world, best tractors, the best everything in the world, and they say that our agriculture is second to none. You understand, and it'll be a great asset. People are going to be able to have options, choice, and they'll have more of it. And that usually means lower prices. How about we'll do you and then you? Go ahead.
Follow-up question for the Italian TV, Daniele Compatangelo, LA7, TV 2000, Primetime Media. So congratulations for the deal. We'll see a big revenues from the chart. But what's the rest of Europe? It's a victory day, but other European countries, it seems like they're losing the trade.
We intend to make a deal with Europe. We have found that the European Union treated us extremely unfairly, very difficult, and hurt themselves in doing so. And they very much want to make a deal. We'll be dealing with them. We are dealing with them currently. So that'll cover pretty much the rest of it. But this was separate because of Brexit in particular. This was a separate deal. It always seems so natural. I mean, all the media would say that this seemed to be like, why did this happen 25 years? Why didn't it happen a long time ago? And it was always amazing to me. Somebody would say, hey, we got to make a deal. We have to make a deal. But this deal just fell into place. The Prime Minister did a fantastic job. His representatives are total professionals, and they got along well, and it just seemed to work. And I think one of the reasons it did is because we blew up the whole system. If we would have just been dealing with you separately or, country by country, we blew up the whole system. It was very unfair to the United States. And I think because of that, this worked out so nicely. And I'm honored that it was the first deal. Please.
Sir, you mentioned...
Well, why don't you go in the back, yes.
Oh, thanks, sir. I'm with the London Times. I'd say this is a great day for James Bond because now Aston Martins will be available to American buyers. Will it be even better by extending it to film? You've talked about a big tariff on films, and we'd like to know if there'd be relief on British...
Well, we're going to have a discussion on that separately. And as you know, we're putting tariffs on that particular film, he said, the movie makers. And we're going to be doing some tariffs to get them because a lot of them have left this country They all live here. The money comes from here. Everything comes from here, but they make them in other countries. So we're going to do something to bring them back, maybe to a large extent. But James Bond has nothing to worry about that, I can tell you. James Bond. And, you know, Sean Connery was a friend of mine. Sean Connery was responsible for my getting zoning in Aberdeen. He said, let the bloody bloke build his golf courses. And I was like 4 years into the process, and it was impossible in Aberdeen. And he, I don't know, he just stood up one day and he said that. As soon as he said that, I got the approvals in about 2 minutes. So he was a great guy, Sean Connery, and
Sheriff,
great
you're going back
character.
there later in the year. Are you going to Scotland and to the
UK? Yeah, I will be, sure. It's great. And we have a lot of investment over there. We have Turnberry, Aberdeen. We have, as you know, in Doonbeg in Ireland, right on the ocean. They're all in the ocean. I only have interest if they're on the ocean. And we have good investments over there. It's been beautiful. Yes?
Mr. President, if the talks go well this weekend between Secretary Bessent and Ambassador Greer with their Chinese counterparts, not preemptively, but if the talks go well, would you then consider lowering the tariff rate on China?
Well, it could be. I mean, we're going to see. Right now, you can't get any higher. It's at 145, so we know it's coming down. I think we're going to have a very good relationship. You know, I always got along very well with President Xi. That relationship was greatly disturbed by COVID when COVID came in, but we get along very well now. I mean, the relationship was hurt with a lot of people, a lot of countries when COVID came in, but I think we're going to have a very good relationship. I expect to have a very good relationship with China, Scott. I think it's a very friendly meeting. They look forward to doing it in an elegant way. China, as you know, has a tremendous trade surplus with us, and we just can't have that. And but I think it's going to be very good for both countries. I would like to see China opened. You know, one of the big things here is, and nobody would know this, but the UK was largely closed. It was very much closed to trade, and now it's opened. And a lot of the financial reporters are very happy about that because so much. I listened to them. I hope they get countries opened up. And then you compete on a fair basis, but you can't compete when you're not allowed to go there. China would be the number one example of that. You know, it's very close. We almost had it last time before COVID, and that didn't work out. But we made a great deal with China. They had about $50 billion worth of our food products, and it was a great deal, doing very well for our farmers. And then when Biden came in, as usual, nothing happened. You know, he didn't enforce it. And it got less, and ultimately, you know, it destroyed a great deal. That was a great deal. But no, I think that we're going to have a good weekend with China. I think they have a lot to gain. I do think they have far more to gain than we do, in a sense. But we're going to have I think we're going to have a very good weekend.
Will you speak to Xi after the weekend talks?
I might, yeah, sure. Depending on what Scott says, we Scott is doing certain countries, and Howard's doing certain countries. I mean, I wish I had like 10 more of each. Then we could do them all at one time. But there will be a time that we'll do a number of them, and then there'll be a time. And I think I can say to Scott and Howard, where we're just going to say, because we understand the countries, we understand what they want, where we're just going to make the deal. In other words, we don't need the country involvement because we've already had it. And we'll say this particular country, which had big surpluses, let's say, we had therefore deficits, that this particular country is going to pay a 25% tariff or 30% or 50% or 10% or whatever it may be. I think we should explain it now, Howard. One of the things we did here that we'll rarely do is on cars, we took it from 25 to 10 on Rolls-Royce because Rolls-Royce is not going to be built here. I wouldn't even ask them to do that. You know, it's a very special car, and it's a very limited number too. It's not, you know, one of the monster car companies that makes millions of cars. They make a very small number of cars that are super luxury, and that includes Bentley and Jaguar. So we have some very special cars. So in order to help that industry, and that's really, you know, handmade stuff. And they've been doing it for a long time in the same location. And I said, yeah, that would be good. Let's help them out with that one. But that's different than a car company that comes out and makes millions of cars, which they'll be doing in our country. They're going to build, we have many factories, car plants being built or going to be built very soon. I think we can say that we'll be close to $10 trillion of investment. I think we're actually at that number now if you add up some of the ones we haven't heard about yet. I mean, we have some going up right now. They have plants going up, and they haven't even spoken to us. They're doing it because of the tariffs. And tariffs have always been used against us, and I never understood. I used to sit back. As you know, China paid hundreds of billions of dollars in tariffs when I was president, but until then, China never paid anything, and they really did a big number on us from the standpoint of trade. But we are using tariffs now for our benefit, and we have now close to $10 trillion. Think of that, $10 trillion. If you look at the past administration, and we're talking about over, essentially 2 months, because we could say 3, but it took a little while to get the office in perfect shape, right? It took a little while to get things done. But once we started, when you think of that, close to $10 trillion of investment, you've had years where the United States wouldn't do that wouldn't do $1 trillion in a year, wouldn't do anywhere near $1 trillion. We did $10 trillion in 2 months. So it's amazing what's happening. We're getting calls and that has to do with chips, has to do with cars. We used to make chips. We had Intel, and we used to make chips. We had a monopoly on chips. Everything was made here. And now, over a period of years, because of presidents that didn't know what they were doing, they allowed that business to be stolen from us. Most of it moved to Taiwan. And you probably were in the same position, right? Because you had a lot of the chip-making capacity, but they moved it in. And if we would have said, that's fine, if you want to move it to Taiwan, that's good, but if you want to sell back into the United States, we're going to put a 50% or 100% tariff on, they would have never left. But we had people sitting here that didn't understand that, and it's too bad. But now they're coming back, because I'm saying it about 40 years too late, but they're coming back. As you know, we have the biggest chip makers in the world spending, in one case, $300 billion, in one case, $500 billion. Same as Apple, and in another case, $200 billion, and we're going to have a large share, very, very substantial share of the chip-making market.
You said that this weekend is going to be a friendly visit, but do you expect that it will just be a formality to break the ice, or are they going to get into substantive negotiations?
I believe so, yes. I believe it's substantive, yes. I think people like to say, yes, we're having a meeting to meet. Well, we're meeting, so what are we going to do, talk about meeting again? I think it's going to be substantive. I think we can say that, right, Scott? Very substantive. Now, China wants to do something. And look, they have to at this point. Essentially, they made $1 trillion a year, and now they have absolutely, no business because of the tariffs. They have no business. And they want to have business, and we want them to have business. We want them to do well. We want them to do very well. So I think it's going to be very substantive.
Because business has slowed down, as you mentioned, we're seeing as a result the ports here in the U.S. The traffic has really slowed, and now thousands of dock workers and truck drivers are worried about their jobs.
That means we lose less money. When I see that means we lose less money. Look, China was making over $1 trillion, 1.1 trillion, in my opinion. Different numbers from 500 billion to $1 trillion or $1.1 trillion. I think it was 1.1 trillion. And frankly, if we didn't do business, we would have been better off. Okay, you understand that. So when you say it slowed down, that's a good thing, not a bad thing. But we're going to make it so they can. I'd like to say they can do better, actually, in terms of the bottom line. We'd like to see China opened up so we can compete in China and, give people something that they've never had, access to something. That'd be great for the world. It would be great for our businesses. And I think it would be great for friendship. I really expect a lot of people think I'm a militant guy. I'm really not. I think that trade can bring a greater friendship with China. It can be something good. But, one of the things that I know Scott's going to be talking about very high on the list is open up and let our businesses go into China, because when you talk about a closed country, that's a really closed country. And I think it would be great if it was opened up. It would give people a lot of choice and would create a lot of jobs, a lot of everything. So I think it would be a great thing for China. And that's going to be one of the things we'll be discussing, like we discussed with UK.
Thank you, Mr. President.
Please.
So what does Britain have to do for you to drop the baseline 10% tariff that you're maintaining?
Well, I think that's set because that has to do with a lot of different things, including past. There are a lot of past things that we talked. This is very inclusive. We included everything, and that's pretty well said. Yeah, please.
Yeah, Mr. President, the 10% baseline tariff remaining in place, is that a template for these future trade deals? You say you're going to keep it here.
No.
Is it going to stay in every case?
No, that's a low number. They made a good deal. Some will be much higher because they have massive trade surpluses, and in many cases they didn't treat us right. One thing with UK, they had somewhat closed, not like a China as an example, but they always treated us with great respect. So they treated us with great respect. The template of 10 is probably the lowest, and therefore they made that deal. But they we've had just a very special relationship with them. Like, I won't do that deal with cars. I mean, unless somebody shows me that there's another kind of a car that's comparable to a Rolls Royce, and there aren't too many. This is a good commercial for Rolls Royce. They're going to order a lot of cars.
Mr. President, I wonder whether you'd like to buy.
Well, the last time this happened,
I would be happy to suggest a discount, obviously a very modest discount. We have to protect our profit margins.
I've had many of them, actually. The last time that happened, I ended up buying a Tesla.
Mr. President. Mary Margaret Olahan with Daily Wire. I had a question about the UK deal today. I heard there was talk that part of the agreement would depend on whether the UK would respect free speech and freedom of religion. I know the BP is really interested in that, talked about that earlier this year. Was there any assurances that you guys got on that front?
You want to handle that?
Yeah, that was not part of the conversation. Our conversation was an economic conversation from start to finish, closed by the president yesterday. This was a business deal, open their markets, and also protect their workers, grow our markets, and help our workers.
This was about business religion. Business is sort of a semi-religion, but not nearly as important. I don't want to get myself into
Your new nominee, Surgeon General.
Mr. President, will you be asking China to help you close, the gap between Ukraine and Russia?
I think so, yeah. I think it's a natural thing to ask.
What do you expect?
Sure. I don't know. I think we're making good progress. The fighting is a little bit different than it was. I think if we weren't involved, Russia would be, going at it to maybe get the whole thing. And without our involvement, they'd be able to get it because we supplied a lot of different things foolishly, but we've been sort of paid back by doing the rare earth deal that I talked about before. I think that I think that we will be very much involved in trying to get that bloodbath. It's a bloodbath. It's a horrible situation. 5,000. It's really more than that. But it's 5,000 soldiers on average a week, mostly soldiers, are being killed. Young, beautiful people. I mean, they're being killed. I see the satellite pictures coming back, body parts lying all over fields, heads and arms. It's so terrible. I've never seen anything like it, actually. And if we can get that stopped, that will be a great accomplishment. And we're trying very hard. And I think we're close. And Mr. Witkoff is talking constantly back and forth. He's a real professional. He's got a great relationship with both countries. And I think we have a good chance. And likewise, we're trying to work on Iran to get that solved without having to get into any bombing, as we say, big bombing. I don't want to do that. I want them to work a deal. I want them to be very successful.
Mr. President, Edward Lawrence from Fox Business. On the non-market barriers, how did you get the UK to bend, and what was the 11th hour deal or ask?
Well, I think it was really just a part of the overall. I mean, they have so many things that are so good for them. It's going to be so good for the country. And that was sort of easy. It wasn't, we had non-market, I call it non-market or non-monetary trade barriers. And we had quite a few of them, not nearly as bad as some countries. Some countries have, they have virtually no tariff, but the rest of it is so brutal you can't do business with them, right? So it's a very important question, actually. No, I think the overall deal just worked out very well from their standpoint. They were willing to give that in order to get other things, and you might want to speak to that, Mr. Ambassador.
Look, the point about the deal is that we will continue reducing tariffs and non-tariff barriers. This is a continuing picture. It's a movie. It's not a still picture here. It's a movie. It continues. And we're both committed to freeing up trade between our countries. We're both committed to freeing up investment between our countries. And the point about this deal is that it provides a very good template and a very good launch pad for what we can continue to do and build on in the future. And that's what we're both determined to do.
You know, many of the, well, I better not say.
That's between us.
Many of the, we'll keep it confidential. Yeah, how about just one more little thing, right? It got the deal closed, and it was handled very well from the other side, too. But many of these things that we're talking about, we've been talking about this for 25 years. It's hard to explain when, if you weren't sitting behind this beautiful Resolute desk, you just wouldn't get it. I have been hearing about making a deal with UK for 25 years. And especially around the time of Brexit. They wanted to make a deal, so they came out of Brexit and they make a deal, and how natural. And it just couldn't be done. It couldn't be done. Good people. And this is a bigger deal. This is a much bigger, better, stronger deal for both of us than we ever even contemplated before. It's a big deal.
Virtually everyone said that it would end in failure, it would end in tears, and it's ended in exactly the opposite.
Yeah.
But, Mr. President, can I say that that is due to Secretary Lutnick and Ambassador Greer have been absolutely fantastic. But yesterday I received a call, a very diplomatic call that just edged things over the line, and that was from your new ambassador in the United Kingdom.
Who is terrific.
Warren Stevens, he's here.
Where is Warren?
Right here.
Hello, Warren.
He's flying to London tomorrow night. He's going to be very popular with the British people. He's going to be a very successful ambassador.
Under nominee.
Were you disappointed?
And he's got plenty of cash. Plenty of cash.
Are you planning to meet Ursula von der Leyen?
Yeah, the federal go ahead, fast.
Yes, are you planning to meet Ursula von der Leyen, the president of the European Council anytime soon?
Oh, she's so fantastic, right? She's so fantastic. I hope we're going to meet. Yeah, the answer is yes. I saw her a few days ago. And I think that we'll definitely meet. Yeah, the European Union is a big thing. They want to make a deal very badly. You know, everybody wants to make a deal. Look, everybody wants to make a deal with the United States, and we're doing that. And we're going to make fair deals. I'm just honored that this was the first one. Go ahead, please.
The Federal Reserve Chairman, Mr. President, says that you would have to call him for a meeting. Do you plan to meet with him? And what do you think about?
And it's like talking to a wall. He should be.
The Bank of England cut today.
Well, the Bank of England cut. China cut. Everybody's cutting but him. I don't know. We'll see what happens. It's a shame. I call him Too Late, Too Late Powell. That's his nickname, and it's a shame. It's ridiculous. So meeting, he's always too late. But in this case, it's not going to matter that much because our country is so strong. We're so powerful in terms of economic strength and what we've done. And I'll tell you what, if we didn't have our first term, you wouldn't be. We created things in the first term. We cut more regulations than any president in history. We cut the taxes more than anybody in history. And a very big factor is going to be the tax bill that we have right now, the one big beautiful bill, as we call it, which is all-encompassing, the biggest tax cuts ever in history, bigger than even the first time. And the incentives, even great for the UK, because it'll make us so strong that we're going to be doing more business with you. It's a very important element for taxes, for every aspect, regulation cuts. That bill is, I believe it's the biggest bill of its kind ever in the history of this country. And Speaker Johnson and Leader Thune have done an incredible job. I mean, I'll let you know we have to get a vote, but we have a lot of support for that bill. And if that happens on top of all of these trade deals that we're doing, this country will hit a point that you better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up. This is going to be numbers that nobody's ever seen before. That's a very important element of all of this. If we get that, If you don't, and the Democrats are fighting it only because they want to fight. They have Trump derangement syndrome. You know, if it was somebody else, they wouldn't fight. If you had a normal person, if you had some stiff sitting behind you, they'd be fine. But they have Trump derangement syndrome. You know, Senator Schumer's become a Palestinian. Welcome. I don't know when they're going to give him the ceremony, whatever the ceremony may be. It's terrible what's happened to the Democrats. So, very, very important element of everything, of what we're doing. Unrelated to today, but related in the sense that we'll do, if that passes, we'll do even more business with the UK. We'll have so much. It's the biggest tax cut in history. It's going to make our country zoom. It's going to be incentive, as you know, with the deduction for, basically for work. You work, you build, you plant, etc., your deduction. It's going to be the biggest, it's the biggest bill of its kind ever passed. Maybe the biggest bill ever passed. That's why we call it the one big, beautiful bill.
You just announced a new nominee for the U.S. Surgeon General who never finished her residency and is not a practicing physician. So can you explain why you picked her to be America's top doctor?
Because Bobby thought she was fantastic. She's she's a brilliant woman who went through Stanford, and as I understand it, she basically wanted to be an academic as opposed to a surgeon. I think she graduated first in her class at Stanford. And Bobby really thought she was great. I don't know her. I listened to the recommendation of Bobby. I met her yesterday and once before. She's a very outstanding person, a great academic, actually. So I think she'll be great.
Your nominee for U.S. Attorney of D.C., do you have a backup plan if this Senate?
Oh, I do, yeah, but he's a terrific person, and he wasn't getting the support from people that I thought. You know, he's done a very good job. Crime is down 25% in D.C. During his period of time. I'm very disappointed in that, but I have so many different things that I'm doing now with the trade. You know, I'm one person. I can only make, boom, I can only lift that little phone so many times in a day. But we have somebody else that will be great. I just want to say Ed is unbelievable, and hopefully we can bring him into, whether it's DOJ or whatever, in some capacity, because really outstanding. To me, it was disappointing, I'll be honest. I have to be straight. I was disappointed. A lot of people were disappointed. But that's the way it works sometimes, you know. That's the way it works. And he wasn't rejected, but we felt it would be hard. And we have somebody else that we'll be announcing over the next 2 days who's going to be great.
With companies like Ford and Mattel recently saying they're going to raise prices on certain products, how long do you think the American public is going to be patient and wait for you?
Well, I think they're saying that just to try and negotiate deals with me. They're not. Look, tariffs are the most misunderstood thing maybe in any form of business, anywhere in business. Oftentimes the country picks them up. Oftentimes the company picks it up. The people don't pick it up, okay? The people don't pick it up. And if Ford did that, they wouldn't sell any cars. And if Mattel, I don't know, I'm not so sure. They also said, they're the only country I've heard, they said, well, we're going to go counter. We're going to try going someplace else. That's okay. Let him go, and we'll put 100% tariff on his toys, and he won't sell one toy in the United States, and that's their biggest market. I heard that. I mean, I watched this guy talking about how I'm going to go counter. I said, well, I wouldn't want to have him as an executive too long. The Ford people I know very well. What they're doing is negotiating with us by saying that. But we don't think that's going to happen. Look, I put out a truth today, and it said that gas is down, gasoline is down, energy is down, groceries are down, eggs are down. I mean, eggs, thank you very much, but eggs are down. When I came in the first week, you guys hit me with eggs. I said, what the hell happened with eggs? Eggs were up like 170% and going up, and they said don't order any for Easter. And we were thinking about ordering plastic eggs like everybody was doing. And Brooke did a fantastic job, agriculture. Brooke did a fantastic job, and we had hundreds of thousands of eggs out here on the lawn just 2 weeks ago at Easter. But you take a look at the cost. Energy's down. Even interest rates are down. Now, if the chairman of the Fed, Jerome, if he would lower interest rates like China did, like I think UK did, but like numerous other countries have done, it's like jet fuel. It would be great. But he doesn't want to do it. I think he doesn't want to do it. Probably he's not He's not in love with me. I think that's right. It's sort of a crazy reason, but that's the way life is. Anybody in his position would be, it would be like jet fuel. But even without that, we're doing well. But remember this, you know, I've watched you people reporting over the last few months that if we do this, you know, prices are going to go through. Well, groceries are down. All of this stuff is down. Lumber is down. Oil is gone to, I mean, we have that thing broke 60, right? $60 a barrel. And $1.98, $1.99 in some cases. And heading in that direction. No, I think it's been amazing, actually. You know, and what that's good for, it gives the consumer more money, and it gives them a better life. Because we just came out of the worst inflation, in my opinion, in the history of our country. They say 48 years. But Biden really screwed it up. He screwed up energy. And he also he spent too much money. He was spending it on, you know, a Green New Scam. And that's like throwing the money. See that beautiful window behind? Take money, throw it right out that window, because it's the same thing. He just he spent $10 trillion. He wasted it. Not only was it bad, it was a negative. It wasn't even like it helped a little bit. It was a real negative. And then on top of it, they let 21 million people into our country without any identification, anything. Just let them in. It's very, very sad. Well, we'll do one or two more.
On $1.99 gas, $1.99 gas.
Violence in India and Pakistan.
Go ahead. Who are you with?
I'm with the Daily Telegraph. You know me from I do. How concerned are you about the UK's reliance on China? Chinese money in the money markets, Chinese exports.
We're not concerned.
Is that something that came up in discussions?
I'm not concerned about anything. If I was, I wouldn't even be here right now. If I was concerned about anything, and it wouldn't be that, but I wouldn't be here right now. No, we're not concerned. We're going to have, I believe, a very good relationship with China, and a fair relationship, and it'll get bigger and it'll grow. It'll grow. As an example, if they open up the country, that'll be the best thing China ever did for itself. They don't know that yet because, you know, it's been a different system. But that'll be the greatest thing that ever happened to China. The people will be happier. They'll buy for less. They'll see things that they never saw before, and they'll be buying them. And it'll really create great long-term peace.
And if I could ask one of the Agriculture Secretary, actually, there's a lot of concern about chlorinated chicken and the import of hormone-treated beef. Has that question been addressed, resolved in these talks, or is that something for the continuing negotiations?
Well,
James.
I would just say that it's very clear, and we have in the heads of terms that we are going to discuss all of these types of issues, and obviously the importing country, whether it's us or them, you got to follow the rules on those types of things. But our point is the rules need to make sure that they are based on science, and that's our expectation. We know the UK believes that too, so we want to come to an accommodation. We want the consumers in each country to be able to choose what they want and give them the information that they need.
Okay. We have an incredible EPA led by Administrator Zeldin that is on this. So the talks continue, but we are very, very confident in our products, and what the president has done to open up the markets is unprecedented for these farmers here in America.
Wall Street, as they watch this, I mean, you saw the stock market decline sharply after Liberation Day, and it's rallied back since then.
Well, now it's going to really rally, because, you know, don't forget they said this is all a pipe dream. And this is a tough one. This is, somebody would say, well, this is easy. This is much tougher, I think, than any other deal, because they've been at it for so many years, decades, trying to make this deal. And it's very conclusive, and it's a great deal, and it's a very big deal, actually. And no, this is just the beginning. We're going to be having conferences, or at some point we won't have. We'll just put out a statement that we just signed this country, that country. And after a number of these are done, nobody has enough people to do it. We're just going to put out X country is going to pay this, and if they open up, they're going to do this and that, and they're going to be open up. Everybody wants to be here. You know, I say this is where they want to be shopping. They want to shop in this country because we have the consumer. And we have the consumer like nobody else. And, you know, if this country went bad, the whole world would go bad. But we really saved it from going bad. Yeah, please.
Can I ask you about the air traffic control issue? Are you looking at getting new software, new equipment?
I'm glad you asked me about it, because I'm just going to be talking to now with the heads of the airlines and everything else. So I was all set before we had the rigged election to give out a brand new gorgeous system to one company that was going to do the whole thing, one of the best companies in the world that you know very well. You know, there are 3 or 4 of them that do it. And when they took over, Buttigieg, who has no clue, he drives to work on his bicycle with his, in all fairness, with his husband on the back, which is a nice, loving relationship. But he didn't have a clue. This guy didn't have a clue. And he's actually a contender for president. Between him and Crockett, you can have that party. But he didn't know what he was doing. And he took what they call dry systems where you have wires in the earth, buried in the earth or whatever. And then you have the open air systems where you have satellites. And you can't mesh them. Anybody would know that if you went through about 2 months of study in school, if you studied that kind of thing. And he did. They spent tens of billions of dollars trying to take old, broken equipment and merging it into existing new equipment with brand new equipment. It's one of the greatest. They spent like $40 billion. And what they did is they made it worse because it doesn't work together. You can't make it work together. If you have a satellite system, you need satellite. If you don't, they had all these different technologies, some of them 50 years old, and they're trying to mesh them in. And they end up spending twice the money they should have. You could have bought a whole new system. So we have a very good guy who you all know, Sean Duffy, is head of transportation, and I've given him a 10-minute lesson in buying, and he's become really good. And we are now in the market to buy a gorgeous, brand new system. The helicopter that crashed into the plane at 400 feet, it shouldn't have been. What would have happened is all sorts of bells and sirens would have been going off 3 minutes before that accident happened, if you had the right equipment, but they didn't. And the new equipment is unbelievable what it does. You can have, you don't even, well, I was going to say something, but you always, in my opinion, you always need pilots. I want pilots. But you wouldn't even have to have pilots. This system is so incredible what they can do. But we have a system that's obsolete. And what they did is the worst. They tried to combine the really old, broken stuff with the new stuff. And you can't combine it. And anybody should have known. So Biden, you think Biden figured this out? I don't think so, fellas. Do you think he has any clue? He doesn't know what the hell's happening. So here's the story. We're going to be buying a brand new, it's going out to bid very soon, brand new state-of-the-art system that will cover the entire world. I'll give you an example. When my pilot, now I have military pilots, but prior to that I have very good pilots, great pilots. They would land, and I won't tell you which country, but they would use the system of another country. They wouldn't even use the system of the United States. So if I'm landing in New York or Florida or Tennessee, they're using a system from another country. I said, why is that? And they were, they're not into business, but they're just saying, our system doesn't work, sir. And I said, boy, that's pretty sad. But we were all set to give it out to, look, you have a Raytheon and you have different companies like that, numerous companies. And you have companies that would do it, like an IBM, as an example. And you give out one deal, one contract. They gave out hundreds of contractors. They had diggers. They had non-diggers. They had people that focused on satellites. They had hundreds of different contracts. One contract where one guy is controlling everything. You need a trench, then they dig a trench. But if you don't dig the trench, they don't blame you. What happens is you don't dig it, then they say we want a cost overrun. Now, we have it all set, and we're going to be doing it. We would have done it, except that the election took a little strange turn. But the second one didn't. That was too big to rig. Thank you very much, everybody.
All right, that was President Donald Trump in the Oval Office talking about the trade agreement with the UK. It is a framework, and I guess more negotiations over the coming weeks to get an agreement, but wide-ranging discussion there on global trade, particularly with the United Kingdom. Enda Kern joins us. He's a global economy reporter for Bloomberg News. He's based down in Washington, D.C. Hey, Enda, you listen to the president here. It looks like there is a framework for an agreement between the United States and the UK. Put this into context. What did you take away?
Well, there are certainly some micro details in it. I mean, for example, on the US side, tariffs on steel from the UK going to zero. You have engines and plane parts from Boeing also coming in tariff-free. That's on one side. That's clearly a potential boost for those businesses on that side. And then on the UK side, Britain is committed to buying $10 billion worth of Boeing planes. And there's going to be a quota for allowing US beef, 13,000 metric tons of US beef into the UK. Now, there's a wrinkle on that one in terms of food standards is not going to change, so that's probably worth keeping an eye on. So, there's clearly some wins there for steel and for car autos on the UK side, wins for maybe farmers and a lift for Boeing on this side, the US side. But, writ large, it's a long way from a true in-depth trade agreement. There's no change to the 10% minimum baseline tariff that will go on UK goods coming to the US. And that's noteworthy because if the US isn't willing to drop that for both an economic and a security ally like the UK, then you question whether that would change for anybody. So it's interesting that they got it done. Parts of it's significant for the industries involved, but it's not as sweeping perhaps as some of the headlines might suggest.
Talk to us about the ag part. So the ethanol, the corn, that part of it. The headline number sounds really good, and trade wars hurt farmers. We saw that in the first administration for President Trump. What do you think the takeaway from that will be?
Well, we heard the Agriculture Secretary, Brooke Rowlands, hailing it as a big deal for US farmers in particular. And they were touting, for example, and the UK Ambassador Mandelson made the same point, they were touting this agreement on beef going in, tariff-free quota of 13,000 metric tons. Now, that would be interesting. That does open up potentially new market access for US farmers, no question. But within that, though, as I mentioned earlier, the food standard part of it isn't changing. So we'll have to see how that impacts in practice, in terms of how those imports or exports do work out to the UK in terms of what's allowed in and what the demand is. But, on paper, it's a concession on the UK side for US farmers.
Enda, thank you so much for your reporting there. Enda Curran, global economy reporter for Bloomberg News. He's based down there in Washington, D.C. Let's go across to London right now, get that point of view. Joe Mays joins us here. He covers the economy, the UK economy. Is based in our London studios over there. Hey, Joe, you listened to the president speak and the prime minister via phone. What's the takeaway over there in London, do you think?
Well, the UK government is trying to sell this as a major political win for them. They are saying that particularly the reduction in tariffs on cars, under that 100,000 quota down to 10%, they say that's a big win. And also steel tariffs going from 25% to 0%, and the same for aluminium, is also a good news story for steelmakers in the UK. But nevertheless, there is criticism of this deal already from opposition parties, pointing out that the UK is still in a worse position than before Donald Trump became president, still with that 10% tariff on goods, still indeed having that 10% tariff on cars, even under a quota. So yeah, it's a limited victory, I think, seen in the UK, but one that's nevertheless welcome.
How does Prime Minister Keir Starmer sell this to, say, Europe? Like, hey, I did this deal, but you should also do a deal with me, and this is why, when there's going to be some tension there between, say, the US and the EU?
Yeah, I think the UK has been quite careful with this agreement with the US not to commit to anything that would materially obstruct them from doing closer deals economically with the EU. So, for example, on food standards, yes, we do have provision in this agreement for more beef imports into the UK from the US, but the UK has said they are maintaining very strict standards on food, for example, which are a key red line for the European Union. So I think that what's happened here is the UK is still trying to walk this tightrope of economic ties between the US and the EU, and has managed to broadly maintain that here, but it has meant that the scope of ambition for this US deal has had to be limited.
All right, Joe, thanks so much for joining us. Really appreciate getting a couple minutes of your time. Joe Mays, he covers the UK economy for Bloomberg News. He's based in our Queen Victoria Street station over there. While we were talking about global trade with the UK, the markets are rallying here. Got the S&P up 70 points. That's a 1.25%. The NASDAQ up 290 points. That's 1.6%. So the market likes trade stability, I guess is the way to think about it.
Yeah, or at least now we know that the 10% base will stay. but at least we know that, right? Yep. So at least there is some certainty in relation to that. Also, that funds need to just keep buying no matter what the price really is at the moment. Eric, for our listeners in the U.S., guys, here's a reminder. You can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by ShipStation. Stay with us. Your top stories and global business headlines are coming up right now. As Paul was just talking about how you're seeing equities around the highs of the session, S&P up 1.2%, NASDAQ outperforming. This is Bloomberg. Viewers.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. President Trump's agreed to cut some tariffs on the UK, and Britain will allow more access for American industry.
With UK Prime Minister Keir Starmer on the phone,
We have reached a breakthrough trade deal with the United Kingdom.
the president announced the deal.
With this deal, the UK joins the United States in affirming that reciprocity and fairness is an essential and vital principle.
Starmer says when it comes to defense, security, and intelligence sharing, there are no two closer countries.
And now we take this into new and important territory by adding trade and the economy.
Stacey Lynn, CBS News, Washington.
I'm Vicki Barker at the Foreign Desk in London. While the UK is celebrating a new trade deal with the US, European policymakers are doubling down on their threat to retaliate against the Trump tariffs if negotiations fail to get them reduced or eliminated, listing more than $100 billion worth of US-made goods to be targeted.
Trump said today he's dropping Ed Martin, who defended January 6th rioters, as the pick for U.S. attorney in D.C. Catholic cardinals still behind closed doors deciding on the next pope. CBS News contributor John Allen says it could be boiling down to two favorites, the Vatican's Secretary of State and a cardinal from the Philippines.
They're shaping up as a yes or no to those top contenders. Now, if neither of those two men is able to cross that magic two-thirds threshold, 89 votes out of the 133 cardinals in the Sistine Chapel, the Cardinals are going to have to start turning to some of the B-list contenders, the guys who were considered possible but more long shots.
Well, CBS's Michael George has more on a key aviation plan to be announced today.
Transportation Secretary Sean Duffy is expected to unveil a multi-billion-dollar plan today to overhaul the nation's air traffic control system. It comes after mass flight delays and cancellations at Newark Liberty International Airport due to a shortage of air traffic controllers and equipment problems, as well as recent crashes across the country. Duffy said he hopes the situation at Newark will improve by the summer.
Bill Gates says he's going to donate 99% of his remaining tech fortune to the Gates Foundation, worth about $107 billion. And he tells CBS Mornings the foundation will now close in 2045, earlier than planned.
By deciding to spend all this money in the next 20 years, we can get a lot more done.
The House has passed a Republican bill that would rename the Gulf of Mexico the Gulf of America. It's not expected to pass the Senate. Wall Street, the Dow is up 550 points. This is CBS News. Experts now have a better idea of when a Soviet-era spacecraft will crash back to Earth.
Cosmos 482 should return tomorrow or early Saturday morning. Where it will land is still a mystery. It was launched in 1972 on a mission to Venus, but its rocket malfunctioned, leaving the 1,000-pound car-sized craft stuck in Earth's orbit. It has a heat shield, so it will not burn up in the atmosphere. Cosmos 482's orbit is between 52 degrees north latitude and 52 degrees south latitude, which covers Africa, Australia, most of the Americas, and much of Europe and Asia. Chances are it will land harmlessly in an ocean. Michael Wallace, CBS News.
Yahoo Sports reports President Trump is planning to create a commission on college athletics. It's expected to include college sports figures, business people, and former coaches. Trump has talked openly about an executive order on NIL reform. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
We have a deal. Welcome to Balance of Power. I'm Kaylee Lines in Washington alongside Bloomberg's Mike Shepard today. Joe Matthew is off on this day that we get the first post-Liberation Day trade agreement between the U.S. and a major trading partner. It's the U.K. first off the block here, though the details still have to be finalized. We'll get the latest with Bloomberg White House correspondent Josh Wingrove this hour, plus reaction from our political panel. Rick Davis and Adam Hodge are joining us today. And we have to get the latest from Capitol Hill as well, as the budget reconciliation process is still underway. But how much forward progress is really being made? Bloomberg's Mike Dorning will be here with the latest ahead of some key markups that have now been scheduled for next week. It's a lot ahead this hour, but we begin, as always, with the check on the markets, who seem to like what they're hearing in regard to trade. Amy Morris has a look from here in Washington.
Hey, Kaylee, boy, do they ever. Stocks rose, bonds fell amid hopes that a U.S.-UK tariff pact could ease tensions and serve as a blueprint for President Trump's negotiations with other countries. We do check markets for you all day long here at Bloomberg. The S&P 500 up 1.3%. NASDAQ is up 1 3/4%. The Dow up 1.4%. The 10-year Treasury yield at 4.33%, and the 2-year yield at 3.86%. Now, President Trump announced the framework for a trade agreement with the UK, marking the first of his promised deals with countries around the world.
The deal includes billions of dollars of increased market access for American exports, especially in agriculture, dramatically increasing access for American beef, ethanol, and virtually all of the products produced by our grape farmers.
The agreement includes a 10% baseline tariff and will focus on specific sectors. And Trump officials have discussed granting the UAE, Saudi Arabia, and Qatar a special fast-track status for deals that could smooth the way for billions in investments. Sources tell Bloomberg News that deliberations on reforming the Committee on Foreign Investment in the U.S. are in the early stages. Fast-track status would help eliminate a major hurdle for Gulf sovereign wealth funds. Funds drew scrutiny from the Biden administration for their perceived close ties to China. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Kaylee Lines.
All right, Amy Morris, thank you so much. It's Kaylee Lyons and Michael Shepard today here on Balance of Power, which turned out to be a pretty busy morning or day here in Washington thus far, as the first agreement between the U.S. and a major trading partner after Liberation Day obviously unleashed a flurry of negotiating. It is not an Asian country like India or Japan or South Korea, as we might have thought, Mike. It's the UK that comes out first.
And you're right, Kaylee. The direction of travel really had pointed to a different market, a different region of the global economy toward Asia. The administration has been touting progress with India, with Japan, with South Korea in their negotiations, which had really been far advanced, at least from the administration's telling and from signaling by those trading partners. Yeah. So it was interesting to see the UK go first. first. And the other signal that also emerged was this relationship between Keir Starmer on speakerphone with the president and also with the UK ambassador to the US, Peter Mandelson, who, it's important to note, is a seasoned trade negotiator. And he no doubt had something to bring to the table here.
Yeah, and we should point out that while there is an agreement that has been made, it isn't necessarily signed, sealed, and delivered yet. There's still details, according to UK officials, that need to be ironed out here.
Well, right, and even the president acknowledged that there would be details ironed out in coming weeks. And of course, we've heard from him before, 2 weeks. Who knows how long it will take to actually get those nailed down. There are a lot of constituencies at stake here. It's pharmaceuticals, it's autos in particular, and all of these industries have a lot of skin in the game, and they want to make sure that they don't come out on the short end in the fine print once it's actually put together.
Yeah, well, even if it's not fully put together yet, the president certainly was excited to announce this today, holding a big news conference inside the Oval Office. Here's part of how President Trump characterized this agreement.
In a historic step, the deal includes plans that will bring the United Kingdom into the economic security alignment with the United States. That's the first of its kind. So we have a big economic security blanket, and that's very important. And we feel very, very comfortable with that because it's been a great ally, truly one of our great allies. I mean, a lot of people say our greatest ally. I don't want to insult people by saying that, but I can say it's certainly one of our greatest.
And we do have some breaking news as well here on Bloomberg. The Cardinals, assembled in the Sistine Chapel at the Vatican in the aftermath of the death of Pope Francis, have elected a new pope. White smoke now rising from the Sistine Chapel. We'll bring you more details as we get them, remembering that the first vote last night resulted in black smoke emerging. A pope was not selected on that first day of the conclave, but once again, white smoke is now coming out of the Sistine Chapel. You can see a live view of Vatican City and Rome, and that smoke permeating the air here if you're with us on YouTube. And again, we'll bring you more details on that as soon as we get them, but we want to return to this U.S.-UK trade agreement first. Bloomberg's Josh Wingrove, who covers the White House for us, is here with us in Washington, D.C. So, Josh, obviously this is a big deal, not just for the Trump administration, but for Keir Starmer and the United Kingdom as well. What actual firm details, though, do we know are finalized, and what details have been left out at this point?
A lot have been left out. I think what to call this, I think, is an open question. The term trade deal kind of conjures an FTA. This is not even in the same planetary orbit as an FTA. This is the term sheet, essentially. The deal here is the UK is rolling back tariffs on some industries, including ethanol and beef and other food products, agreeing also to buy Boeing planes. The US is creating what you might call a Rolls-Royce carve-out, a 100,000 unit tariff quota, 10% tariffs on those autos. Above that, the regular 25% tariff. As well as some other measures, perhaps in steel and aluminum. That's very much still to be determined. The countries are singing sort of different tunes on that in the last hour or so. So it is quite targeted, I guess you might say, if you were trying to be generous on this. But this is a small bite of the apple, and I think we should be clear about it. I think there are also a couple other things you can take from this. Number one, that 10% global tariff. Looks like it's going to remain in effect. It remains in effect with the UK. They did not get that lowered. Trump in his press conference indicating that he considers that a floor. So some countries wanted to get below that, like Australia. Who's to say? There is potentially relief on the sectoral tariffs because of this quota on cars. Other countries, Japan and South Korea, no doubt will be seeking something similar. But look, Trump loves tariffs. This thing keeps in place tariffs. There are measures here, but it is not what he was seeking in his first term. It is not an FTA. It is more targeted, and I think it indicates his ongoing interest in just having some level of tariffs there, and his interest in wanting to strike a deal. But it's pretty narrow.
And Josh, there were some sectoral elements in this on autos, and then also on steel and aluminum. Talk about that a little bit, what we saw there, and whether that's a template for other negotiations with trading partners that also have key interests in those areas, thinking South Korea and Japan.
Yeah, and the Canadians perhaps watching that as well, other sort of like-minded countries that want basically in the fence when it comes to on steel and aluminum. What the UK is saying that those tariffs are going to zero. The Americans are not saying that. The Americans are saying that there will be negotiations on it, but certainly they seem like they'll come down in exchange for the UK taking steps to stop transshipment. That means Chinese steel sort of touching base on its way to home plate and kind of going through third-party countries. And so that is the model. Other countries will look at that and say, look, if I crack down on China the way the U.S. wants, maybe I'll get some relief from those steel and aluminum tariffs. So, we'll see. But that is one of the ones that's subject to negotiation still. Other fine print as well to come on things like, it seems like beef as well.
You mentioned China. We also got a little news from the president on that regard ahead of Secretary of Treasury Scott Bessent and the USTR Jamieson Greer heading to Geneva this weekend. When asked after yesterday saying no, he would not preemptively reduce the tariff rate on China to kind of ease these talks, he said if they go well, he might. But we've obviously heard a lot of back and forth.
Shout out to our colleague Anne-Marie Porter, I think,
yes,
who had that question.
That is correct.
Yes, right. I think right now they are sending sort of, let's call it strategic ambiguity over these talks. One thing Trump did say is these will be more than just introductory talks. He wants them to get into substance. Secretary Bessent was standing sort of 3 rows back behind the press and said the same thing from off camera. And so I would, who's to say? Remember, Trump backed off on April 9th when the markets were nosediving and really ratcheted things up on China. He did it pretty quickly and had done it quickly in the week before that since his April 2nd Liberation Day announcement. It is completely possible that that pattern will continue and that he will unilaterally announce reductions as a good faith measure. So we'll see. But as you know, he said the opposite in the past as well. So, whether it's 145, which is the current combined rate right now, 20 for fentanyl, 125 for China, or a slightly lower number, does that make all that much difference? I think a lot of importers would say that's trade embargo level numbers already, and it doesn't make a difference. You need to go well down. And so I think whether we're going to go well down from 145 is really an open question still.
Will the Chinese be expecting a significant lowering or pause in tariffs to even get conversations underway?
I think the indications are from our colleagues in the region that there would have to be a substantial change in that. What that number looks like remains unclear. Remember, the initial number on China was 34 plus the 20, so 54. Perhaps that, it's just unclear right now.
I'm keeping an eye on Vatican City, where white smoke has just emerged from the Sistine Chapel, signaling that the cardinals, more than 130 of them who had elected or gathered to elect a new pope, have indeed successfully done so. We're still awaiting more details, but that does put my eyes on Europe, Josh, which we heard from President Trump about as well, suggesting, actually having some pretty kind words for Ursula von der Leyen, suggesting he would like to talk to her after having talked about Brexit and how the UK made the right decision leaving the EU. Does this deal with the UK ease the EU negotiations, or are these just two entirely separate entities, and there's so many other countries you have to consider with Europe that this isn't really a blueprint?
I guess maybe ask me in a couple hours when we've had a chance to make more calls, but I think that this is a modest deal with a friendly country that had relatively few complications. And so extrapolating from that to much bigger blocks with much more complex politics and thornier disputes, the difficulty factor ratchets up a little bit. So I don't think we can necessarily extrapolate very much.
And are we getting a sense of who might be next? Japan, South Korea?
India certainly was among there in the betting odds. Japanese and South Koreans, the U.S. administration has spoken positively about it, but those are tricky ones, right? Cars are a big part of those economies, and Trump just simply does not want car imports at the level they've been. So I think we're waiting to see. There are also ongoing talks with other countries like Vietnam. And right now we're still trying to sort out what those lists are, Mike. They haven't said. Bessent has talked about 18. They just haven't published that 18 list. So it's sort of eye of the beholder. It is currently Thursday. Tomorrow's 18 could be different. We'll see. But I think certainly the betting odds are India, Japan, South Korea had been sort of near the top of the list on that.
Well, and how talks with China go ultimately factor into those conversations as well, right? Because our reporting has indicated it's not just about the bilateral trade between these countries and the United States, but also how those countries interact or maybe enact barriers on China.
Right, and the U.S. has shifted its strategy a few times, or at least shifted how it's talking about it. And at times they said, look, we want to rack up some quick wins to create pressure on China to come to the table. Well, China's at the table right now, so whether that's sort of backburners some of those other countries, particularly those regional partners, India, Japan, South Korea, I think is an open question right now. But right now, I think that Trump has sort of one ticking clock, that 90-day thing that comes off just after July 4th, when, of course, remember, House lawmakers want him to sign his bill there on a big Independence Day celebration. So whether those tariffs on everyone but China snap up just after July 4th, we don't know yet, but that's the current deadline. China, no deadline. So I think we'll be looking for progress, of course, on those. And, tiered approach, maybe.
And
I don't think everyone's just going to lay down their tariff weapons, overnight.
And there is only one Scott Bessent, and he is not only embroiled in the China negotiations, he is also helping lead the way with the discussions with leadership on Capitol Hill about that big, beautiful bill. How do we even get close to that timeline?
And in fact, Trump alluded to time crunches today because he said, look, I would have loved to work the phones for Ed Martin, but we're giving up on him as DC's top prosecutor after Tom Tillis, of course, indicated his opposition to it. So, yeah, there are bandwidth questions right now for sure. There are ongoing uncertainties in Congress about whether they can stick the landing on that big, beautiful bill.
On this kind of question of whether it's getting the tax package through or getting an announcement on a deal like this, Josh, how badly politically did the White House actually need for this to happen, knowing that there has been polling that suggests the public is not super confident in this tariff policy? Yes. Did he have to have something to show, hence the kind of all of a sudden, hey, we're making an announcement with the UK, press conference in the Oval Office, 10 a.m. tomorrow, that was announced yesterday? He
did want announcements. I think we're going to see continued investment announcements. Certainly everyone thinks that when he goes on his trip to Saudi Arabia and elsewhere that there'll be some kind of investment announcements around that. He wants to strike a positive story. He told people today to buy stocks. See, investors seem to be very reacting to that.
Had some words for Chairman Powell as well.
Right, that's right. He always has words for Chairman Powell. Those of us who covered Donald Trump, I think we were blue in the face repeating this. He likes tariffs. He was asked today about the ports on the West Coast being empty, no one wanting to bring in goods. He said, good, we're not losing money then. So I think we need to just continue to reiterate that. I feel like I'm sorry for being a broken record. He likes tariffs. They're here to stay. More are coming. Remember those sectoral tariffs on semiconductor chips, lumber, pharmaceutical drugs, copper. Those are still in the hopper right now. We don't know what the timing would be or whether he might slow walk them with market sensitivities. But I do think, I don't want to call anyone out if they are expecting a great end to the tariff fights of our time. Trump is a believer in tariffs. It's just one of the most consistent things about what is occasionally not always an entirely consistent administration.
That's a nice way to characterize it. Josh Wingrove, who covers the White House for us and the Trump administration here at Bloomberg, thank you so much for joining us on one piece of breaking news that we're dealing with in Washington on this Thursday. The other piece of breaking news we're getting, though, comes from Rome, Vatican City in particular, where the conclave has successfully selected a new pope, signaled by white smoke rising from the chimney of the Sistine Chapel. And we want to get more now as we keep an eye on Vatican City. You can see live shots if you're with us on YouTube with Zoe Schneeweiss. She is Bloomberg team leader for economics in Western Europe and is joining us now here on Balance of Power. Zoe, thank you so much for your time. Obviously, we are still awaiting the name of who the new pope actually will be that is succeeding the late Pope Francis. But this didn't take very long. The conclave only began yesterday.
Yes, this is incredibly quick. Overall, if we go back to the last time we had a situation like this, it takes about an hour between the white smoke rising and us and all of us actually getting a name. But obviously, it's one of those hours where then all of us are in overdrive. A reminder that there are 133 electors in this conclave, so there are a lot more bishops, but you only can be an elector until you're 80. You stop being an elector once you reach that age. So, and there's a huge array here of potential candidates, although it's being decided so quickly, looks like it might be one of those favorites.
Zoe, this is Mike Shepard. Question about the vote and the speed and whether that is a signal by cardinals that they want to demonstrate unity within the church. What have you been hearing as you've been reporting on this?
Yeah, that would be a good guess here. That a quick decision, obviously, means that the new pope can be in office as quickly as possible, and that this is more eyes are on this conclave than ever before. If you just consider how the last time we had one of these, we didn't yet have we weren't yet watching from mobile phones. So really, just what that stream of watching the smoke and the chimney had more followers than ever. So it is one of those where people generally get motivated and get inspired by something like this, and finding out Francis was much beloved, and finding a new pope as quickly as possible will will motivate people will motivate Christians around the world to again turn to the church in times of need.
Well, and as we consider the legacy of the late Pope Francis, Zoe, he obviously was seen as a more progressive pope and kind of taking the church in a bit of a different direction than it had been going under his predecessor. To what extent does this election, this decision of who the next pope will be, ultimately dictate the future of the Catholic Church and whether or not it will be in kind of keeping with Francis's legacy, continuing kind of a more liberal progressive view or going back more traditionalist, if you will?
Exactly. Those are those two big streams that we should be seeing here. Would it be a continuity candidate, again, someone progressive, or will we go back to someone more conservative? The other thing to keep in mind here is that there could be a massive demographic shift here, or just a massive shift. If for the first time here, we could have a pope from Africa or Asia. So those would be things there where potentially then, irrespective if are African or Asian candidates that are progressive or conservative, that might just bring this whole new impetus to the Vatican and to its policy.
And Zoe, how soon has the Vatican indicated that it might actually reveal the name? We're seeing the images of throngs of people in St. Peter's Square eagerly awaiting the news about who this person is, and you described the stakes so eloquently there. But what is the timing for the Vatican to actually tell the world?
Unfortunately, there is no fixed timing. If we go from past instances, it normally takes about an hour. There's this whole ritual between them deciding on the Pope. They have to change clothes, all these things. So there'll be a few steps there. We're hoping about an hour, but again, it's obviously this person's biggest I'm losing my way. Sorry. It's a big move for this person. So obviously you go out and you speak to the people then. So you want to kind of get to grips with this. So I think a few minutes, fewer, more or less, won't really make a difference.
All right, Zoe, we really appreciate you joining us on this breaking news. Again, the conclave has elected a new pope. White smoke has risen from the Sistine Chapel. We're just waiting whether it's an hour or longer to find out who it actually is. Zoe Schneeweiss, our colleague in Western Europe, joining us here on Balance of Power. Thank you so much. And we want to add another voice to this conversation now and turn to Megan Clark. She is professor of moral theology at St. John's University. Professor, thank you for your time. Obviously, we are working with a limited amount of detail here, but just knowing that the conclave only assembled yesterday and already a selection of the new pope has been made. It only took a few rounds of voting. What does that signal to you?
I think it signals that the cardinals have a kind of more of a sense together of where they want to see the church going. And we've seen that in the past couple. Pope Francis was elected on the second day, Pope Benedict XVI on the second day, John Paul I. And so it's not uncommon, but I think it is a sign that that maybe kind of the drama that we saw might be happening in beforehand maybe wasn't so great. The divisions, unifies them is stronger than disagreements.
And when it comes to that question of unity in terms of bringing together the more liberal wing of the church that Pope Francis really espoused and other more conservative elements of the church that his predecessor, Pope Benedict, embodied, what does this vote tell us about bringing them together, and then what the direction of travel will be for the church going forward?
At this point, all we know is that we have a pope. And I got to say, as a Catholic and as a theologian, I sat there and I saw the white smoke and started to cry. What we will learn in the next couple of hours is we'll be able to tell a lot from not just who it is, but when that announcement happens and he walks out, what name has he chosen? Is he wearing all white the way Pope Francis was, or is he in the kind of the traditional red overlay over the white? These will give us some signs as to how the new Pope is thinking of his role and the church for the future. But at this point, all we really know is that we have a Pope.
Yeah, and as you talk to us about your reaction, Megan, we've seen the reaction on the faces of those who are gathered in St. Peter's Square in Vatican City. We're seeing live views still on YouTube here. Obviously, this is a massive moment, not for all of those individuals, but for the more than billion Catholics around the world. And when we consider the kind of global reach of the church, knowing there is potential here for a demographic and a pope to be touched that we haven't seen before, how important is that, the representation here?
I think that what we've really seen over the last 2 weeks as everyone came together to mourn Pope Francis, as the cardinals all came to Rome and as the conclave began, is I think we really did see global Catholicism in a way that we never had before in this moment. And that's because of the way that Pope Francis prioritized that we are a global church and that the men who are in that role of leadership and that select the Pope should represent the global church. So whether our new Pope is Italian or European or from the global South, what is really remarkable is that there were 71 countries represented in that room, voices from every corner of Catholicism in who selected him and put their trust and the future of the church in his hands.
We've talked about the views globally of the incoming pontiff, but how have American Catholics looked toward this change in leadership at the Vatican specifically? Are they looking for something different in the new leader of the church?
I think that American Catholics, like Americans in general, are kind of a very wide-ranging group of people. I think there are some who are hoping for a change. I know that as someone who teaches young adults, I know that what I see and hear from my students and those I've taught is a real deep sense of they felt seen and cared about on a personal level by Pope Francis. And so I think that myself, like my students, are really hoping that that there can be that kind of sense of intimacy and communication and real listening and love that comes from the next Pope too.
Well, we don't know who that will be yet. We still have our eyes here live on a shot of Vatican City after the white smoke emerged from the Sistine Chapel. A marching band is playing. We are seeing a lot of flags and people celebrating an incredible moment in history, to be sure. Megan, we thank you so much for joining us. Really appreciate the time joining us from St. John's University, where she is a professor. Megan Clark, Professor of Moral Theology at St. John's University. Thank you so much. And we want to return to the other breaking news story we're following today, and that is a U.S.-UK trade agreement that was announced at the White House by President Trump earlier today. And one of the clear components of that agreement, while some details are still being ironed out, is when it comes to autos, a 100,000 vehicle quota of the tariff at 10% rather than over 27%. And on that note, we turn to our colleague Craig Trudell, who leads our global auto coverage from London. Craig, can you just walk us through how significant that development with autos in particular is in this agreement between the U.S. and the U.K.?
It's really important for UK car makers because the US market is really important for them. You mentioned the 100,000 vehicle quota. That's basically bang on what the volume was of vehicles imported from the UK by the US last year. It was just under 97,000 vehicles. But I would point out, too, that, it was only just a few years ago before the pandemic that the UK was shipping in more than twice that, so more than 200,000 cars. And so one of the things that was interesting just in the sort of, comments that Starmer and Trump were making this afternoon, my time here in London, is that that quota is not necessarily fixed, at least according to Prime Minister Starmer. And so to what extent that ends up moving a little bit to give UK manufacturers a higher ceiling is something that we'll be watching. And while we've seen the tariff rate come down from 27.5% to 10%, I will point out too that before all this, the duty was 2.5%, and so it's a victory if you're a company like Land Rover, but kind of a partial one.
Craig, we're also seeing the president try to negotiate deals with the rest of the world, not just the UK. And a number of those key trading partners, including Japan, South Korea, and the European Union, export a lot of vehicles to the U.S. What does this signal to those trading partners about what they might be able to get from the Trump administration as they try to bring those deals home?
Yeah, I think it's really important, just the to sort of put all of this into some perspective. I mean, in terms of the amount of trade that the UK does, with the US from a car's perspective, it is important for UK companies, but it is also sort of number 6 on the pecking order. So you have Mexico and Canada, Japan, Korea, Germany. These countries are far ahead of the UK, and it is important for those countries too that these 25% tariffs on cars come back down in the direction of where they were before.
All right, Craig Trudeau, Bloomberg Autos editor, joining us from London. Thank you so much for your time as we keep an eye here on Vatican City. As the Cardinals have elected a new pope, we'll continue to follow that story and much more from here in Washington on Balance of Power. Alongside Michael Shepard today, I'm Kaylee Lyons, and we'll have more just ahead here on Bloomberg Radio.
It's 12:40 on Wall Street. I'm Amy Morris. President Trump announcing a trade framework with the UK, bringing down barriers and expanding market access for American imports.
This morning, I'm thrilled to announce that we have reached a breakthrough trade deal with the United Kingdom. Incredible country. Today is a victory day for World War II. We won the war together exactly 80 years ago, so there could be no more perfect morning to reach this historic agreement.
The pact is limited in scope. It keeps a 10% baseline tariff and allows UK manufacturers to send 100,000 cars into the U.S. under a 10% tariff. It also fast-tracks U.S. goods through UK customs and reduces barriers on some exports. And the markets love this. We check markets for you all day long at Bloomberg. S&P 500 up 1.4%, NASDAQ up 1.8%, the Dow up 1.4%, the 10-year Treasury yield at 4.34%, the 2-year yield at 3.88%. Francis Donald at RBC is not expecting any clarity, though, on the economy as a whole until later this year.
The data right now is still reasonably okay. The problem is, where is it going next? And the balance of risks is towards higher inflation and higher unemployment.
Francis Donald at RBC. And yes, white smoke billowing out of the Sistine Chapel, indicating cardinals have elected a new leader of the Roman Catholic Church. We do await an announcement on the Pope from the Vatican. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now we go back to Balance of Power with Kaylee Lyons and Michael Shepard.
All right, Amy Morris, thank you very much indeed. Yes, Michael Shepard is in for Joe Matthew on this day, which is turning out to be pretty historic for a number of reasons. As Amy mentioned, we do have a new pope. We don't know who it is yet or what name they will choose, but we have seen white smoke emerge from the Sistine Chapel and are keeping a live eye on Vatican City and St. Peter's Square in Rome. You can see that on YouTube if that's where you are joining us today. But of course, the other story we're following came from the White House, the U.S. and the UK, announcing a trade framework, shall we say, not completely an ironed and inked agreement, but the president's still touting that as the first major trade deal since his Liberation Day announcement earlier this month. Also taking the opportunity to talk about a deal he hopes will be stricken in the coming weeks, not just with trading partners, but also in Congress to advance his budget reconciliation package, which of course will include what he's describing as the biggest tax cuts in history, even bigger than 2017. But Mike, we know that there's a lot of work that in the House specifically they still have to do to figure out just what spending cuts they're going to make to pay for those tax cuts and what that tax package ultimately looks like, including what happens to the SALT cap.
Well, there are so many needs to satisfy. The needs of fiscal hawks in particular, who yesterday made their concerns clear, who said that, look, if we don't get as much as $2 trillion in savings, we are going to have to dial back, Haley, the amount of tax cuts in the final package. So there is a lot at stake, but also a lot of moving parts. It's not just SALT, it's also Medicaid.
Very good point. So let's get into all of that with Mike Dorning, who helps lead our coverage of Capitol Hill on our Capital Influence team here at Bloomberg in Washington. So, Mike, we know they've scheduled markups that were initially supposed to happen this week for next Tuesday. Does that signal progress, or are they just trying to set themselves a deadline to meet the Speaker's Memorial Day ambitions here?
I think they're just trying to keep the pressure on, keep trying to get that done. I mean, basically, the real deadline is December 31st. If they come anywhere close to the Speaker's deadline, they're doing it way early. And these are tough decisions, tough compromises, and they're just keeping people's feet to the fire, trying to force them to compromise, get to their bottom lines as soon as possible.
Mike, when it comes to SALT, which is, of course, of keen interest to our audience and to the higher tax regions like New York, New Jersey, in the inner counties of Washington, D.C., what are we seeing there? There was a proposal, at least being floated, to raise the cap to up to $30,000 from the current level, but that comes with some cost and perhaps some objections from lawmakers in other regions.
Yeah, and also Speaker Johnson just kind of floated that today. Well, how about a $30,000 cap? And Nick Lota said, hey, that's not good enough. That's not going to pass. So right there, you've got an example of something where the fiscal hawks are saying $30,000. No way are we going to raise the cap to $30,000. And the New York, New Jersey, California lawmakers saying that's not enough. You need to raise them more. And the big difference is in 2017, they could just tell those New York, New Jersey, California Republicans, we don't need you. You can just go do whatever. We're going to just cap it at 10K.
Yeah.
You can vote against it. We don't care. This time, they need those votes. This time, they only have a few votes to spend.